Yes, good morning, everyone. Please check is the audio video clear. Let me check also. Yes. Neeraj, good morning. Anand, good morning. Thank you for confirmation. Just one more minute and then we'll start. Yes, Ritika, good morning. Okay, let's start. So, good morning, everyone. And we'll be starting with the SCM marathon. But before starting, I would like to tell you that one marathon of SCM is already uploaded. I uploaded last year and I've covered a variety of questions in that also, mainly of marginal. Okay. Today also, I'll be starting with marginal, but it won't be restricted to marginal only. In this revision come marathon series, I'll be covering the marginal, obviously the transfer price and relevant costing also. Also, I'll be covering with standard, ABC, throughput, asset based, target costing, AB, JIT, and everything, right? So, in short, I'll be covering a maximum variety of questions. It will not be restricted up to standard and marginal only. Okay. Yes, marginal is important, so I'll be starting with marginal. Talking about these things, previously I have already, uh, yes, first of all, I'll tell you about notes. Notes will be shared after the marathon or during the marathon itself. My team will get back to you. Okay, so just avoid messaging about the notes. And moving ahead, talking about this marathon. So it won't be restricted as I told you, it won't be restricted up to only marginal and standard. I'll be covering the lot of questions. Okay. In the previous marathon also, I've covered a variety of questions. So in today's marathon, I'll be taking the concept also and the most important thing, I'll be taking the questions of December 23, June 24, and June 23 also. So I have compiled all the questions uh, and I'll be covering those questions. Not the previous ones, but yes, the recent paper ones I'll be covering because already I have covered in the previous marathon the previous questions. So that marathon will also be helpful for you. Okay. So let's not waste any time and start with the marathon. Okay. So many of you might be aware of the basics of marginal. Okay. So in the group one also, in group two also, intermediate, we have covered a lot of variety. But I'll be covering with the basic formulas also. I'll be taking a few questions which will be discussing, and you'll be answering through the comment section. So let's start with marginal costing. When I say marginal, when I say marginal, obviously it is nothing but variable, right? When I say it is marginal, I'm only talking about the variable, right? The variable cost. So when I talk about the variable cost, when I talk about the variable cost, the main thing, just 1 minute, just give me 1 minute. Yeah. So uh, the standard format for marginal is nothing but selling price minus the variable cost will give me contribution, right? Will give me the contribution. First, revising through all the basic formulas. The formulas which we have is nothing but the break even, or before that, we have the PV ratio. What is PV? It is nothing but contribution divided by sales. Yes, contribution divided by sales. It is nothing but the PV ratio, right? Okay, what is contribution is nothing but sales price minus the variable cost, right? Okay, how to find the break even? The break even is nothing but fixed cost divided by contribution or PV. Now, why did I use the contribution or PV? If I say contribution, we get the answer in units. If I get PV, I get the answer in rupees. Yes. What is MOS? What is MOS? MOS is totally dependent upon profits. So when I say it is profits, it is profit divided by contri or PV. Obviously, contribution will give me in units and PV will give me in rupees, right? These are the basic formulas which you have already learned in the previous. Next, what is desired sales? Desired sales is a combination of both. It is fixed cost plus profit divided by, again, it is contribution per unit or the PV. When I say profit, I'm talking about PBT. I'm talking about the profit before tax, not the profit after tax. If at all profit after tax is given, what we'll do is, this is PBT, take PBT as 100 minus the tax rate, we get the PAT. We get PAT, right? And let's say the tax rate is 30, we get the PAT as 70. So if I say I want the profit after tax, if I say I want the profit after tax to be 6,30,000, so first of all, I need to take PBT and then over here I'll include the PBT, right? This is the point. Moving ahead. When I say cash break even, when I say cash break even, at that time we say cash fixed cost divided by country or PV. Now, what is cash break even? Cash fixed cost, just separate the depreciation because depreciation is a non-cash expense, right? So in that case, we will not include depreciation, right? These are the basic formulas. So to sum up, if I say break even, you will directly say it is fixed cost. If I say MOS, you will directly say it is connected to profit. And when I say desired sales, it is a combination of both. It is fixed cost plus desired profit. If you want the answer in units, divide by number of units. If you want, divide by quantity per unit. If you want the answer in rupees, divide by PV ratio. Now, these are the very basics, right? These are the very basics. And I hope everyone knows this formula. I'm just taking a revision of the basic formulas. Okay. Okay. What is total sales? Total sales always comprise of two parts. The first is the break even, and the second is MOS. When I say break even, you are in no profit, no loss condition. No profit, no loss condition. And when it is MOS, obviously you are into profits. So if I say the break even is at 60%, it clearly indicates that MOS is 40%. If I say break even is 70%, that means MOS is 30%, and vice versa also. If I say MOS is 20%, it clearly indicates break even is 80%, right? So these are some of the hints which you'll be getting in the questions itself. Now, these type of questions, obviously, they won't give you in the major questions, but these will be covered in the MCQ pattern, right? MCQ pattern. So when I say break even, it is connected to fixed cost. When I say MOS, it is connected to profit, and when I say desired sale, it is a combination of both. As I told you, desired profit, it will be profit before tax, right? So these are the basic formulas. Now, before proceeding ahead, I would just like to test you whether you are able to solve these questions or not. The basic ones, okay? The basic ones, okay? So over here, I've given the basic formulas also. So you'll be getting the handwritten notes also. Even if you follow these handwritten notes during the exam time, it will be more than sufficient. Okay, yeah. So this is the first question. Where is the basic? Okay. So A Limited maintains margin of safety as 37.5% with an overall contribution to sales ratio as 40%. The fixed cost is 5 lakhs. The fixed cost is 5 lakhs. Try to calculate the break even sales. Yes. Start commenting now. Yes, I want the answers, everyone. Can we view this marathon later? Yes, Yoganand, you can view this marathon later also. but it will be helpful for you if you watch it right now. Because if you have any questions, you can ask me directly. Okay, Neeraj, 1250. Okay. So the very basic formula. Okay, Aditya, yes, correct answers. So it is very clear. Contribution to sales is nothing but PV, right? Contribution to sales is nothing but PV, right? And what is the formula for break even? Break even always connect to fixed cost, right? So fixed cost divided by PV will give me the answer, which comes to 5 lakh divided by 40%, which is 12 lakh. Okay. What is total sales? Now, since they have given MOS as 37.5%, MOS as 37.5%, it clearly indicates the balance is break even. The balance is break even. So how much is break even? It is 62.5, right? It is 62.5. So if 62.5 is 12 lakh 50,000, how much is 100% then? Just cross multiply. Yes, just cross multiply. So we get the answer as 12 lakh 50,000 divided by 62.5%. You get the answer as 20 lakh rupees. Please check your answers. Are you getting the answer as total 20 lakhs? Next. Third point. It is simple one, so I'll currently discuss now. Contribution is 40%. It clearly indicates the variable cost is 60%, right? So if sales is 100%, variable cost is 60%. So obviously the contribution comes to 40. The contribution comes to 40, right? So they have asked the variable cost. So if the sales is 20 lakhs, if the sales is 20 lakh, the variable cost will be 60%, which is 12 lakh. So the contribution comes to 8 lakh, right? The contribution comes to 8 lakh. That is the total variable cost. If I say the current profit, just make the statement less profit. Fixed cost is 5 lakhs. So the current profit comes to 3 lakh. The current profit comes to 3 lakh rupees. Okay. And yes, correct answers, everyone. Okay, give me this answer now. Let's see how many of you can answer the last one. New margin of safety if the sales volume is increased by 7. Okay, by the time everyone answers, I would just like to tell you that this has a basic questions also, right? This file which I have compiled is, I want to cover all the basic questions also. So obviously, I'll be starting with the basic questions and then we'll go to the advanced questions also. Okay, one answer is 806250. Okay, others, I want the answers. Point number E. Okay, it is 806250. Okay, everyone is getting 806250. Okay, 40.5. Okay, fine. If you are calculating percentage also, I want the answer in rupees actually. Okay, so how will you calculate that? First of all, the total sales has been increased by 7.5%, right? So what is the total sales? It is 20 lakh plus 7.5%. So it comes to 21 lakh 50,000. 21 lakh 50,000. Now, first of all, tell me, will your break even change at any cost? The fixed costs haven't changed. The contribution has never changed, right? So can I say it comprises of two parts? First is the break even and the second is MOS. If you are increasing your sales, can I say only and only your profit will increase, the break even won't change, because the fixed costs have not changed, the contribution have not changed, so the break even will not change. The break even still will be 12 lakh 50,000. The break even still will be 12 lakh 50,000, and the balance amount will be MOS. So many of you have given 806250. Okay, first of all, the answer you are giving is incorrect. Uh, Tell me whether you are getting this concept or not. and then I'll proceed further. First of all, tell me whether you are getting this concept. Yes, Sakshi is the correct answer, 9 lakh now. Yes, the students who have answered at 8 lakh 6,250, whether you are getting this concept. If at all you have any query, you can ask, then we'll proceed further. These are the basic questions, and these basics should be very clear to solve the advanced questions. Yes. Now everyone has started answering 9 lakhs. Okay. I'm waiting for the students who have answered as 8 lakh 6,000. Yes, Neeraj, now correct. Okay, fine, fine. So I hope everyone is getting the answer now. See, when I increase the sales, the profit margin will increase, right? The break even won't change because break even completely depends upon fixed cost and the PV. Since both of them are constant, it will not change. Okay. Yes. Moving ahead. So for your understanding, what I have done is from my side, as a contribution for your exams, I have given my handwritten solutions also. So even if you follow these questions with the solutions, it will be very easy for you to get. And I have written in very easy format so that you'll be able to understand also. Okay. Now the second question. The second question I'm reading out. Please pay attention. A single product company sells its product at 60 per unit. So I got the selling price. In 2019-20, the company operated at a margin of safety of 40%. It clearly indicates that MOS is 40%. That clearly indicates break even is 60%. Right? This clearly indicates. Moving ahead. The fixed cost is 3,60,000 and the variable cost to sales ratio. The variable cost is 80%. That means if the selling price is 100, the variable cost comes to 80%, therefore giving me a contribution of 20%. Therefore giving me a contribution of 20%. That means I got the PV as 20%. So what all detail I have right now? I have the MOS is 40%, the break even is 60%, the fixed cost is 3,60,000, right? And also the PV ratio is 20%. Okay, so this is given to you right now. Moving ahead. In 2020-21, that is the next year, it is estimated that the variable cost will go up by 10%. They are estimating that the variable cost will go up by 10%. Okay, and the fixed cost will increase by 5%. The fixed cost will increase by 5%. Now, these they are talking about the next year. What I want right now from you is I want the present details, everything. I want present details. That means I want the current statement. When I say current statement, what I want is the sales less variable cost will give me contribution minus fixed cost will give me profit. I also want the break even and I also want the MOS. So I'm giving you a few minutes to solve all this, right? I want the perfect statement. Just try to analyze. Don't read this question. Okay, don't read this question. Just ignore this question. Just focus on the about two lines. I have the fixed cost. I have the MOS. I have the break even. I have the PV. I want everything. I want basically my statement. If you are able to get the statement, everything will be very easy for you. Okay. Just try solving in the year 2019, the present state. Wait, everything. Okay, Tushar. Yes, I want everyone to answer. Make it quick. Okay, I'll help you out on this. I hope everyone is following. Okay, now start answering. Yes, units also and rupees also. Okay, see, it was very simple. First of all, the selling price was given, right? The selling price is 60, right? The selling price is 60. The variable cost is 80%. So 60 minus into 80% will give me 48. So the contribution gave me 12 per unit and the PV ratio is 20%, right? The PV ratio is 20%. Now moving ahead, fixed cost is 3 lakh 60. So 3 lakh 60 divided by PV ratio 20% will give me 18 lakhs as my break even. If break even is 60%, for 60%, if it is 18 lakhs, for 100% how much? For 100% how much? So it comes to 30 lakhs. So total sales comes out to 30 lakhs. Yes, perfect answer. Perfect. Yes. So when I get the total sales, it is very easy for you now to make the number line, that is the statement. Sales is 30 lakhs. The variable cost is 80%, which comes to 24 lakhs. The contribution is 6 lakhs less the fixed cost. Fixed cost is clearly given as 3.6 lakhs. And the present profit, yes, correct answers everyone. The present profit is 2.4. This is the very easy. Now, the main thing is this was not asked. Yes, but this information will be required. This information will be required. Okay. Now, first of all, tell me how many number of units were there. Obviously, you were having 60 units into 60, 30 lakhs divided by 60. So the total sales was 50,000 units. The total sales was 50,000 units. Okay, moving ahead. Now, what they have given? What they have given in the year 2021. In the year 2021, it is estimated that the variable cost will go up by 10% and the fixed cost will increase by 5%. That means the fixed cost will be increasing. So fixed cost I already have. The fixed cost is 3,60,000, right? The fixed cost increases in totality and the variable cost increases per unit, right? So variable cost, obviously it will go up by 10% and the fixed cost will increase by 5%. So 3,60,000 plus 5% will give me 3,78,000. Yes, correct answers. Okay, moving ahead. Find the selling price required to be fixed in 2021 to earn the same PV ratio as in 19. Now, try to answer this first point. Find the selling price. Now, they're asking the selling price. They want the same PV ratio. The PV ratio is still 20%. The PV ratio is still 20%. Now, since the variable cost has increased, they are asking, they want the same PV. I want the selling price. A basic cross multiplication will give you this answer. A basic cross multiplication. Yes, Tushar, correct answers. 30,000 units आएंगी बराबर है. Yes, yes, correct answer 66. See, it was very simple. Selling price less variable cost will give me contribution, right? 100, 80, 20. This was in percentage. Now the variable cost is increased by 10%. Right? In order to maintain the same ratio, the selling price has to be increased by 10%. It is very easy. Or else what else you can do is you can just make a cross multiplication. Initially, what was your variable cost? Initially, can I say it was 48? Variable cost always increases per unit, right? So 48 plus 10% will give you 52.8. So if the variable cost is 52.8, what is the selling price? It comes to 66. It comes to 66. See, now if you say cross check also, 66 is the selling price. If the variable cost is increased to 52.8, what will be your contribution? The contribution comes to 13.2. Is it 20%? Yes. So previously also you were earning 20%. Now also you are earning 20%. So it is straightforward answer 66, right? Okay. Second, now you will be able to understand why I asked you to calculate the profit. See, assuming the same selling price of 60 per unit in 2021. Now they are telling don't increase the price, keep it 60 only. Find the number of units required to be produced and sold on the same profit. Now that means you need to calculate the profit in the previous year. What was the previous year profit? What was the previous year profit? It was 2.4. Now what they are telling, keep the same selling price. Keep the same selling price. I don't know how many units will be sold, but keep the same selling price, 60. What will the variable cost? Keep the same units. Obviously, the variable cost will be increased now, 52.8. So what will be your contribution? The contribution will come to 7.2, right? 52.8 minus 60, 7.2 minus the fixed cost, minus the fixed cost. But the fixed cost obviously will increase by 5% now, right? So 3 lakh 60 plus 5% will give me 3 lakh 78,000 as my fixed cost. I want the profit of 2 lakh 40. Just go reverse and get the answer. First of all, you will get this figure. So 378 plus 240 will give me 6 lakh 18,000. And 618 divided by 7.2 divided by 7.2 will give me 85,833.33. This number of units I need to sell, right? This many number of units I need to sell to make the same profit. That means if the variable cost has increased, the fixed cost has increased, but you are keeping the selling price the same. That means you have to sell additional units to earn the same profit, right? So initially you were selling only 50,000 units, and now you are selling 85,833 units, right? This is the answer. I hope everyone got this point. Again, this was one of the basic question. This was basic question number 2. Okay. Moving ahead. See, I have given the entire solution over here. So you can just go through it once. Okay. Moving ahead. A company sells its product at 15 per unit. In a period, if it produces and sells 8,000 units, it incurs a loss of 5 per unit. If the volume is raised to 20,000, it earns a profit of 4 per unit. Calculate the break-even point in both value as well as units. Yes, Roshni, correct answer. Okay. The next question is in front of you. I will just give 2 minutes for this. Okay. Only 2 minutes. Start solving. And I want everyone to comment. Just stay active and try to solve it with me only. Yes, quick. Okay, Neeraj. Okay, Bhagyashri. फिक्स और जीरो आ रहा है, नहीं फिक्स और जीरो नहीं आएगा तो शायद. Okay, so I'll start the question. So first of all, a company sells its product at 15 per unit. In a period, if it sells and sells 8,000 units, it incurs a loss of 5. So first of all, this is the case where there are two conditions given to you. Whenever there are two conditions given to you, the PV becomes change in profit upon change in sales, right? Change in units. So in that scenario, what we have to do is first of all calculate the sales and the profit. So can I say in the first scenario, sales is 8,000 units into 8,000 units into what? Into 15. Into 15, right? And there is a loss. 8,000 units into what price? At 5 rupees. 5 rupees, you are incurring loss. That means, can I say there is a loss of 40,000? There is a loss of 40,000, and 15 into 8,000 will give me 1,20,000 as my sales. Now, this is the first scenario, right? The second scenario. The second scenario. If the volume is raised to 20,000, that means the sales will now be 20,000 units into 15. That means the sale will be 3 lakh rupees. The sales will be 3 lakh rupees, and it will be 20,000 units into the profit is 4 rupees into 4 rupees. That means you're earning 80,000. You are earning 80,000. Now, what is the formula for PV? Whenever you get two sales and two profit, what you have to do is first of all calculate the PV. That is change in profit upon change in sales. So we have two formulas for PV. That is, first is the very basic one, contribution divided sales, and the second is whenever there are two scenarios, take PV, change in profit on change in sales. So what is the change in profit? Never say the change is 40,000. It is minus 40 to plus 80. So when you plot on a number line, it is 0 and this is 80,000. You are starting with minus 40, and therefore the total difference comes to 1,20,000 and not 40,000. Okay, so the difference is 120, and the difference in sales is 180. This comes to 66.67%. Once you get the PV, the second step you have to do is make a statement. Make the statement, that is, make a statement in margin. So when I go with the marginal statement, take the profit one situation, not the loss one. Obviously, you can get the answer with profit also, but loss also, but this will be very easy because you will get a mistake or you will do a mistake in plus or minus. Okay. So I'll just make it sales 3 lakh. Less variable cost will give me contribution. The contribution is 66.67%, right, which gives me 2 lakh. 3 lakh into 66 minus the fixed cost. I don't know what is the fixed cost, but I know the profit in this scenario. The profit in this scenario was 80,000. When the sales was 3 lakh, the profit was 80,000, and this will give me the balancing figure as 1 lakh. And now you can directly get the answer. How to calculate break even in rupees? It is fixed cost divided by PV. Fixed cost divided by PV. You can also make it in units also. Fixed cost is 1,20,000 and the PV was 66.6666%. So it is 120 divided by 66.66%. The answer you will get is rupees 1,80,000. The answer you'll get in rupees 1,80,000. If you divide by selling price, you'll get the answer in units, which is 180 divided by 15, 12,000 units. Yes, Bhagyashri, correct answer. Neeraj, correct answers. And others, you're not able to answer. थोड़ी सी स्पीड बढ़ानी पड़ेगी आप लोगों को. You just have to increase your speed a bit because these were very, very basic questions of marginal covered in your intermediate, not for final level. But they ask in MCQs and therefore I'm covering these also. Okay. Yes, moving ahead. Okay. First of all, I'll teach you this concept. The concept. So basically, I'll be taking three concepts now. So please pay attention and then we'll solve the questions. First concept is the concept of indifference. The concept of indifference point. What is basically indifference point? Where your total cost is equal in either scenarios. You are not able to differentiate which is better for you. But you will be able to differentiate if your quantity increases or decreases. It is that point at which you will not be able to differentiate which is better for you. So how to calculate that? It is change in fixed cost upon change in variable cost per unit. So whatever the changes are, if if you are getting that situation, any situation below this, which will be better for you, in which the fixed cost is lower. Above this situation, above this situation, I'll choose a situation, I'll choose that point where the variable cost is. Okay, so if at all, I give you one example. Let's say I have two scenarios, A and B. Over here, over here, or else I'll say there are two machines, M1 and M2. 5 lakh, 8 lakh. The fixed cost, the depreciation or something else, right? The fixed cost is 5 lakh and 8 lakh. And the variable cost per unit over here is 40. And over here it is 20. Over here it is 20. So I need to calculate the indifference point. The indifference point. It is nothing but change in fixed cost. So what is the change in fixed cost? It is 3 lakh. And what is the change in variable cost? 40 minus 20 is 20. So it comes to 15,000 units. It comes to 15,000 units. 3 lakh divided by 15,000. 3 lakh divided by 20. 15,000. Now, the decision making is below this situation. I'll choose that machine which has the lower fixed cost. That means in the beginning, you should always choose the scenario which has the lowest fixed cost. Okay, so anything below 15,000, I will go with that. That means if I say you are able to sell only 12,000 or only 13,000, which is better for you, M1 or M2? I will say M1, which has the lower, fixed cost. Okay. In next scenario, above 15,000, it will be, I'll choose a situation where the variable cost is lower. So if I say you are able to sell 16,000, which is better for you, M1 or M2? I'll say the one which has the lower variable cost. You can obviously prove this by solving the statements. I'm not proving this right now because this is a revision for marathon, so I won't be investing much time in this formula, right? So this is the scenario. That means if at all there is an indifference point, in the beginning you will choose a situation where the fixed cost is low. After that, after achieving that level, you will say I'll choose a situation where the variable cost is low, right? So this is indifference point. Now the second point is the shutdown point. What is basically shutdown point? It will be beneficial for you to shut down. Now what do you exactly mean? It is similar to indifference point, but it is fixed cost, total fixed cost, or I'll say avoidable fixed cost divided by country or PV, as the scenario is country per unit or PV. Now what do you mean by the avoidable fixed cost? See, I'll give you an example. If at all I say this is your factory premises and you are paying a rent of 50,000 over here, and you're also paying a salary of 30,000, let's say per annum only. Okay, 50,000 per annum, 30,000, and the contribution is 10 per unit. The contribution is 10 per unit. Can I say the rent is 50,000? Yes. Can I say the salary is 30,000? Yes. So what is the total fixed cost? The total fixed cost comes out to 80,000. The total fixed cost comes out to 80,000. Now, at what point will it be beneficial to shut down? See, even if you shut down, obviously, if it is a seasonal business, you will try to work for some months and you will try to shut down for the other months. But will it be beneficial for you? First of all, try to understand that even if you shut down, you will not change your premises, right? You will not change the premises. That means rent will still continue. Rent will still continue because even if you shut down, you won't change the premises. The customer base I have been already set, right? What maximum you can do is you can remove the labels. That means you can avoid this. You can avoid this. This will continue to incur. That means if this will continue to incur, this becomes an irrelevant cost. That is not a relevant cost for decision making, because in any ways you will continue that cost, right? In any ways you will continue that cost, and obviously this will not be the relevant cost, and therefore we only check the avoidable fixed cost. So what do you mean by the shutdown point? See, I want to calculate, I have to pay 30,000 to the laborers, right? So how many units must they sell? So it will be avoidable fixed cost, which is 30,000 divided by contribution. That means 3,000 units is the shutdown point. If they are able to sell 3,000, I won't shut down. Anything below, anything below this, I will shut down. See, if they are obviously selling 3,000 units, that means they will earn 10 rupees per unit on that, right? That means they are able to earn 30,000. So are they covering their salary? Yes, and the answer is yes. So anything above 3,000, I won't shut down. I will continue the business. Above 3,000, continue the business. This is the point. Above 3,000, you should continue, right? So whatever is the avoidable fixed cost, you should take that. Okay. Moving ahead to the third point is the sales mix. Is the sales mix. Now, what is sales mix or product mix? So whenever there are more than two products, or else I'll say two products, not more than two, but more than one, I'll say. Whenever there are two products and we have to find break even, we have to find break even. So basically, there are two formulas for this, right? I'll teach you one by one. So whenever there is sales mix, whenever there is sales mix, let's say uh, there are two products A and B. The selling price. The selling price is 40 and 30. The variable cost is 30 and let's say 25. So the contribution per unit, it's 10 and the contribution is 5. Okay. And now I also have sales mix. When I say sales mix, that means you are selling A and B both and you have to sell them in the ratio of 3 is to 2. You have to sell them in the ratio of 3 is to 2. So just let me calculate first. Yeah. And your total fixed cost comes out to 4 lakh rupees. And now I want the break even. Now I want the break even. The formula for break even is very easy, right? It's fixed cost divided by contribution. Now the problem in this scenario is I don't have one contribution. I have two contributions. See, I have one fixed cost, but the problem is I have two contributions. This will not, right? Because there is a sales mix. I want to calculate the break even. The break even is that situation where we will earn zero, right? We want the zero profit loss. At that time, we want to cover this 44 lakh, right? How will I cover? So there are two methods. Make the contribution as one or either split the fixed cost. Both will give you the same answer. I'll explain. See, option one. Option one. Make the contribution as one. Make the contribution as one. What you do is you make the contribution as one. That means you are having two contributions right now. Just make it one and you'll use the formula fixed cost divided by one. Now, how will I make it one? Using this sales mix. Using this sales mix. So we calculate the composite contribution per unit. How will I calculate? I'm earning 10, but in the ratio of 3 is to 2. That means 3 by 5 into 3 by 5. Plus, I'm earning 5 rupees from B in the ratio of 2 by 5. That means 3 is to 2, right? So this will give me 6. This will give me 2. That means the composite contribution comes to 8. And now use the formula. What is the formula for break even? The formula is fixed cost divided by contribution per unit. Fixed cost is 4 lakh divided by 8. So 4 lakh divided by 8 will give me 5,000. Sorry, 50,000. 4 lakh divided by 8 will give me 50,000. And now I need to distribute in the ratio of 3 to 2, which is AB 30,000 and 20,000. 30,000 and 20,000. That means you have to sell A and B in the ratio of 3 to 2. That means total 50,000 units you have to sell, of which A consists of 30,000, B consists of 20,000. When you sell 30,000 and 20,000, you will be able to achieve the break, right? This is first scenario. Now, option 2. There is also option 2 for this. What is option 2? Split the fixed cost. You are having two contributions, right? So you should have two fixed costs then. Separate fixed cost. How will I split the fixed cost? It is very easy. See, A and B. What is the contribution per unit? 10 and 5. Again, use that sales mix. Here also we use the sales mix. See, here also we use the sales mix. In this scenario also we'll use the sales mix. Sales mix was 3 to 2. Just take the product. Just take the product of that 30 and now If you take the products, what you have to do is just divide the total fixed cost in the product ratio. The total fixed cost was 4 lakh. What you have to do is divide the total in product ratio. Product ratio is 30 is to 10. That means 3 is to 1. So for A and for B, the fixed cost gets split. It is 3 lakh and 1 lakh. And now individually divide by country per year. So what was the contribution? It was 10. And what was the contribution? It was 5. So even if you calculate like this, fixed cost divided by country, you will get the answer as 30,000. And over here, you will get the answer as 20,000, which is still in the ratio of 3 is to 2. This is how you calculate the sales mix or the product mix, right? I gave you two options. Whatever you find easy, you can follow that. Either make the contribution as 1 using the sales mix ratio, or split the fixed cost into 2 again using the sales mix ratio, right? So these are the 2 points. Now, I've explained you 3 points right now. First is the indifference point. The second is the shutdown point. And the third is the product mix ratio. We'll be solving questions on these. Let's see how many of you can answer. Yes, this is the fourth question. So I'll just give you a hint just to save some time. M is of no use now. M is of no use. You are producing in this question N. Sorry. Yeah. You have to discontinue M. So M is of no use. You are introducing O. That is a new product. So you have N and O with you. So M, data of M is irrelevant for you. You just have to calculate N and O. This is the sales mix question. Try to analyze. Yes, try to analyze. Yes, everyone. Okay. One answer. Yes, others please check. Okay, Neeraj. So I find only two people, only two students, right? Neeraj and Bhagyashree are answering. Okay, so let's calculate. So there is N and there is O. What's the selling price? 15 and the variable cost is 15 and 4.5. So this give me the contribution as 10.5. For O, it is clearly given the variable selling price is 18 and the variable cost is 9. 18 and 9. That means answer is 9. Right? Okay, Tushar, but you just have to split it, okay, into A and B, into N and O, sorry. So what I'll do is I'll find the composite contribution, but you don't have the sales mix. They have not given, but you can easily find the units. 18,000 is N, and for O they have given 9,000. That means for N and O you have 18,000 and 9,000. For 18,000 and 9,000, that means the ratio is 2 is to 1. So what you have to do is 10.5 into 2 by 3 plus 9 into 1 by 3. So what is the composite contribution? It is 10.5 into 2 divided by 3 and 9 divided by 3. So the composite contribution comes to 10. That's it. The total fixed cost is 15,000, right? So what you have to do is 15,000 divided by 10. will give you 1500. Just split this in the ratio of 2 is to 1 and 1000 and 500. Rakshita, please check your answers. Yes, others, yes, others, correct answer. So you get the answer as 1500 and you just have to split it in 2 is to 1, which is 1005. Again, very easy point. Moving ahead. Yes, the shutdown point. So in this scenario, point number A and B are very easy, and point number C is of shutdown point, right? Just read out the question. Tushar, you just have to show it in separate only, not the code. Okay. For A, read the question, give me the answer. Try to give me the answer for A point. Okay. Ensure they have asked you break even. Yes, everyone be active in the comment section, please. If I'm giving you time to analyze, just try and analyze the question because see, consider this. This is your exam hall, and you have to answer. Okay? So you cannot be, you cannot keep mum and just watch it. What's solving? I can go with a quick speed then. Yes, so sure. Thank you. Okay. The break-even point is 2 lakh Neeraj. Okay. Others, please check. Okay. So everyone is getting the answer. So it is very easy, a very basic question. Okay. Basically, I want to explain the shutdown point. That's it. That's why I'm actually taking this question. Okay. So Mr. X has 2 lakh investments in the business firm. He wants 15% return on his investment. That means he's checking for the profit of 30,000, right? 2 lakh into 15%. From an analysis of cost figure, that he finds that the variable cost is 60%. That clearly indicates that the fixed cost is, sorry, the contribution is 40%. Contribution is 40. So 80,000 is the fixed cost. 80,000 divided by 40% will give you 2 lakh. So break even comes to 2 lakh. Okay, what sales volume must be obtained to get 15% on investment? You can use the desired sales formula also, desired sales, or you can make the statement also. Just make the statement: sales less variable cost will give me country minus the fixed cost will give me profit. So what is the desired profit? 30,000. What is the fixed cost? 80,000. Just go reverse. So that means this is 1,10,000 and this is just 40%. So if this is 40%, how much is 100%? Just cross. So 1,10,000 divided by 40% will give you 2,75,000. 2,75,000. Okay. Now the very important point is the point number, not the first 2 points. Okay. Mr. X estimates that even if he closed the doors of his business, he would incur 25,000 as expenses per year. That means the fixed cost is 80, and he's telling that even if he shut down, even if he close the doors, even if he shut down, he will still incur 25,000. That means how much he can avoid? He can avoid only 55,000. He can avoid only 55,000. That means 80,000 is the total cost, total fixed cost, and 25,000 will still be incurred even if he shut down. Let's say this is rent cost. This is rent, and this will still be incurred because you won't change the premise, right? 25,000 will still incur, and 55,000 you'll be able to avoid. 55,000 divided by country. What was the contribution? The contribution was, you can calculate the contribution. What the units given? Okay, not given, so you can use the PV ratio. PV ratio is 40%. So 55 divided by 40%, which comes to 137,500. Yes, Bhagyashree, correct answers. Yes, Tushar, correct. Okay, so I hope everyone is getting this point. Very easy. Okay, so again, these are very basics. I still haven't started actually the final level. These are all inter-based questions, right, in your MCQs. Moving ahead. Okay, the limiting factor. Okay, before starting with the limiting factor, yes, before going with this, yes, this is the indifference point. This is the indifference point. Try and calculate the indifference point between A, B, B, C. Between these two and these two. The information is in front of you. The information is in front of you. I gave you the indifference point formula. I'll just write it up again. Uh, Above means which question? Are you talking about N and O? Okay. Others, you can start solving with 8. Yes, Rakshita, I'll get back to you. Just give me the question number. Is it N and O? I'll write the formula for indifference point. Indifference point is change in fixed cost divided by change in variable cost per unit. This was the basic formula. Okay, Rakshita. Just let me complete this question. I'll get back to you. See, this is the fixed cost. This is the variable cost. Clearly given, fixed and variable. Okay, A to B 300. Okay, I'll help you on the calculation part. See, the fixed cost, the fixed cost over here is 15,000, and the variable cost over here is 240. The fixed cost over here, 15 plus 5 is 20, 45,000, and the variable cost is 140. The fixed cost over here is 1,25,000, and the variable cost is just 40 rupees. You just have to use the formula change in fixed cost upon change in variable cost. See, A and B, A and B. See, change in fixed cost. Change in fixed cost is 15 and 45. So I get the answer as 30,000. Divided by change in variable cost. 200, 240 and 140 difference is 100. So I get the answer as 3,000. 3,000 units, right? Below this, sorry, 300, sorry. Below this, what product should I choose? Which scenario? Obviously, where the fixed cost is lower. Where the fixed cost is lower. So if the fixed cost is lower in A, I should choose A. But above this, I should go with the product or the scenario which has the lower fixed variable cost. So the variable cost should be lower. I'll go with B. But should I shift to C again? Should I shift to C? At what scenario should I shift from A to B and then B to C? So I'll again check the B to C situation. What is the change? 45 and 125. So the change is 80,000. Yes, the change is 80,000. And what is the variable cost change? 100. 140 and 40 difference, right? So it comes to 800. Again, below this, fixed cost should be lower. In which scenario fixed cost is lower, B or C? The answer is B. I'll go with B. But above this, I'll go with variable cost lower. Variable cost is lower in A. Sorry, in C. I'll go with C. In short, if I draw a number line, the range, showing the range. If I'm anywhere between 0 to 300, 0 to 300, this scenario belongs to A. I should go with A only. That means if you are able to sell only 200, 220 or 240 units, you will go with A only. The moment you touch 300, from 300 to 500, this is B range. That means the range of B. Anywhere between 300 and 500, B will be beneficial for you. Not A, not C. But sorry, 800. So above 800, C will be beneficial. This is the proper units per annum. They have given it monthly, right? So you don't have to go with per annum basis because then again you will have to divide it by 12 to get the per month answer, right? So this was a straightforward question. Okay, so this will be your final answer. Okay, so till 300 it will be A. 300 to 800 go with B, and above 800 go with C. So this is the indifference point. Okay, I'll just come to MNO question once. Okay. So in this scenario, I have already explained you the first approach. I've already explained you the first approach. The first approach was composite contribution. Okay. The second approach, split the fixed cost. Split the fixed cost. The second approach. How to split? I'll take N O contribution. What is the contribution? 10.5 and 9. What is the sales mix? 2 and 1. So what is the product? What is the multiplier? It comes to 21 and 9. That means you have to split the fixed cost in the ratio of 21 is to 9. What is the fixed cost given? 15,000. Just divide 15,000 in 21 is to 9. So 15,000 divided by 30 into 21. It comes to 10,500 and 4,500. These are the individual fixed costs. Now, what is the formula for break-even? Fixed cost divided by contribution. Just divide by contribution per unit. So, what was the contribution per unit? For A, it was 10.5, that is for N, and for this, it was 9 divided by 9. You'll get the answer as 1,000 and 500. This is your break-even, which itself is in the ratio of 2:1. Yes, Rakshata, is the point clear now? So, this is by both the approaches. Okay. And before proceeding ahead, I would just like to tell you that my target for today is marginal completely. Transfer pricing, I'll be completing. I will also be completing relevant. Relevant, we have a variety of questions and a very important, a very new question which was asked in the recent paper. I've also covered that. Okay. So I'll be covering that. Also, there are 2 to 3 questions on quality management also. This is the left out point. Quality cost. This is the left out point actually. Uh, Everyone talks about marginal standard. Basically, quality cost is also one of the important questions because in June 23, 2 questions of 7 marks each were asked on quality cost. So I'll be also covering that question. So my target for today is minimum. Obviously, if time permits, I'll also be covering the extra questions. Okay, moving ahead. So we got the shutdown point also. We are done with the indifference point also. Okay. Now, the important decision making concept, that is the limiting factor concept. Limiting factor concept, very important one. Again, one of the easy part also covered in your intermediate level, but I'll try my best to explain you once again. Okay. So limiting factor is nothing but when there are scarce resources, you have a scarcity of resources. In that scenario, which product you should make first? See, uh, you are not having all the resources to make all the answers. Hmm, I'll be taking till 5 or 6 p.m. Okay, moving ahead. Limiting factor. Now, when there is a scarcity of resources, see, I have a demand for ABC of 5,000 units, of 3,000 units, and for 2,000 units. Obviously, you need to make these products. You need to make these products, right? But the problem is to make these products, I require labor, but labor is in short supply. Labor is in short supply. That means you are not able to fulfill all the demand. You'll not be able to complete a 5, 3, and 2 all the demands. So using the labor in the best optimum way so that the profit will be maximum. We have to use that, right? This is known as the decision making. That is the limiting factor concept. Now, limiting factor is very simple. What you have to do is see, there's a selling price, there's a variable cost. Divide by this comes to contribution. You just have to divide by the limiting factor. This is also known as the key factor. Limiting factor. Whatever the scarcity is, it can be raw material, it can be variable cost, sorry, it can be labor hour, it can be machine hour, anything. Whichever is scarce, you should divide by that, right? So contribution divided by limiting factor will give you the contribution per limiting factor, that is per machine hour or per labor hour or per cost of raw material, per limiting factor. So as soon as you get this contribution per limiting factor, start ranking them. Start ranking them. The one which will give you the highest contribution per R or per limiting factor, you should choose that one, right? So this is what is limiting factor. I'll explain you this concept with the example, with one of the example. Okay, the best example which we have for limiting factor, this one. Please pay attention. Question number 6. Moon Limited produces products XYZ and has decided to analyze its production mix in respect of these three products XYZ. You have the following information. You have the direct material, obviously, that is the variable cost. And you also have the variable overheads. This is the variable cost again. 160, 120, 80, 8, 20, and 10. So these are all the variable cost. Next is the labor. Again, the labor is variable, right? Labor is again variable. Please pay attention on the boxes, on the columns. Okay, so there are two departments. That means there are two types of labor. There is department A and there is department B. The rate per hour, that means per hour you are paying them 4 and 8. Okay, for product X, how many hours are required? 6 hours. That means you will be paying 6 into 4, 24 rupees. Okay, 6 into 4, 10 hours. So you'll be paying 10 into 4, that is 40 rupees. And for Z, 5 hours. That means 5 into 4, you'll be paying 20 rupees. That means in department A, you will be paying this much, right? Okay, for department B, 6 hours you are using, and the rate per hour in department B is 8 rupees. That means 6 into 8 will give me 48. You will be paying 48 to complete 1 unit of X. Okay, 15 hours are required to complete Y. 15 into 8 will give me 1, and 11 into 8 will give me 80. So these are the department, the labor cost, right? So we have the material cost, we have the labor cost, and we also have the variable overhead. So there are three variable things with us. Moving on. Annual production at present, that means this is the present level. I am able to sell these many units, 10, 12, and 20. I am able to sell these units. Okay. Estimate selling price. The moment they gave me the selling price, I'll be able to use the contribution, right? Before proceeding with the question, I would just try to analyze the contribution. So we have three products, X, Y, and Z. Selling price is given 312, 400, and 240. These are the three selling prices given. Okay. And what are the variable costs given to you? The variable cost. The variable cost has material, variable overheads, and labor. Labor is given in two departments, department A and department B. So just copy paste these answers. 160 is the material, 120 and 80 is the material. Right? Variable overhead is 8, 20, and 12. You have the variable overheads. And for the labor, I have already calculated 24 and 48. 40 and 120 and 20 and 88. Okay, so I got the contribution. Tushar, thank you for the answers. 7,240. Others, please check once. 7,240. These are the contributions. Okay, moving ahead. Now, the limiting factor concept. Annual production at present, as of now, you are able to sell 10, 12, and 20. And the sales department estimate possible sales, that is the maximum sales will be able to achieve from 10,000 to 12,000, 12,000 to 16,000, and 20 to 24,000. That means you will be able to sell more. Obviously, you'll try to achieve more and more demand, right? More and more units. There is a constraint of labor supply in department A. That means department A is in short supply. Please pay attention. This is in short supply. Department A, right? And its manpower cannot be increased beyond the present level. So first of all, what you have to do is you have to divide by the limiting factor. What is the limiting factor? Can I say department A is the limiting factor? So 6, 10, 5. You just need to divide by 6, 10, 5. Divided by the limiting factor, that is hours per unit in department A. 6, 10, and 5. So this will give you 72 by 6 is 12, 10, and 8. So ranking, obviously 12 rupees is the highest. I'll go with A, then with B, and then with C. This is the ranking. 12, 10, 8, and therefore I'll be ranking. That means first of all, try to achieve maximum of A, then go with B, and then whatever the balance is left out, go with C. This is what your answer should be, right? Now, the main thing is you don't have the present hours right now. Can I say I have that many hours which will be able to help me with the present sales? Yes. So how many hours are there with you? How many hours are there? So you have 10,000 present saves into 6 hours. So it will be 10,000 into 6, 12,000 into 10, 12,000 into 10, and 20,000 into 5. These many hours are there with you. These many hours are there with you. So 10,000 into 6. Next is 12,000 into 10 and 1 lakh. That means you have total of 2,80,000 hours. 2,80,000 hours. Now, how will you utilize this 2,80,000? Very simple. First of all, give all the units to A. That means, first of all, since the rank, sorry, X, the rank of X is 1, give the maximum production to 1. That means utilize this for 1. Total available hours with you is 2,80,000. Go with A first. Utilize this for A. Utilize this for A. How will you utilize for A? Obviously, you will go with the maximum hours. Will you sell all the 2,80,000 hours to A? The answer is only give maximum of 12,000 units, right? So how many hours will be utilized? 12,000 into 6. That means for A, 72,000 hours will be utilized. 12,000 into 6 hours. 72,000 hours will be utilized. How many are left? 2,08,000. Now, can I say I go with B because the second rank is B? B, how many units can you sell the maximum? 16,000. Obviously, you'll try to make the maximum sales 16,000 into 10. 16,000 into 10 hours. That means you'll utilize 1,60,000 hours. What is the balance? The balance is 48,000 hours. The balance is 48,000 hours. Now, what will you do of these 48,000? Obviously, you'll give to C. That is product C. Or else you can say XYZ. Right? So 48,000. How many units of Z can we produce? So obviously 48,000 divided by 5 hours. Divided by 5. 48,000 divided by 5. This will give you 9,600. Since there is scarcity, obviously you will not be able to complete the demand of Z product Z because the labor was in short supply. You were not able to increase the labor. So what you decided to change the product mix, right? Instead of making 10,000, go with 12,000 because this will give you the highest contribution. Instead of making 12,000, go with 16,000. And Z was giving me the lowest contribution, so I did not sell 20,000. I reduced the production to 9,600. Still, it will give me the highest contribution, right? Still, it will give me the highest contribution. This is the limiting factor concept, right? So, whenever there is limiting factor, what you have to do is you just have to divide by the limiting factor, contribution per unit divided by limiting factor. This is the answer, right? So, you can just take a cross check on XYZ. First, I have to calculate the contribution, then divide by will give me the answer as ranking. Ranking is 1, 2, 3. You gave me the wrong answer. Just 1 minute. Okay, there was a misprint in the previous question, and that's why I mistakenly copied the wrong solution over here. So our solution is correct. Moving ahead. Yeah, opportunity cost. Now, what do you mean by the opportunity cost? See, whatever I forego becomes my opportunity. For example, I'm obviously giving you services over here, right? That means I'm into teaching field, and in teaching field, obviously, I'll be able to earn something. Let's say I'm earning 10 lakh rupees. Okay, I'm earning 10 lakh rupees. This clearly indicates that from teaching, if I'm earning only 10 lakh rupees, I'm foregoing something because if I'm giving full time to teaching, I'll not be able to give to the job. I won't be working in a corporate section, right? Over there, I was getting 8 lakhs. Example, okay, 8 lakhs. Obviously, these are per month, okay. Okay, so 10 lakh and 8 lakh. So can I say by choosing the teaching field, I will not be able to go with the job. So that means this is the opportunity I'm foregoing. This is the opportunity cost for me. But I also can do a business. There I can earn 5 lakh. So can I say now the opportunity will be 8 plus 5 times? The best, the next best thing can be foregone. You cannot say you're also foregone, you're also, not doing the business. By teaching, I'm not able to go with the job. I am not able to go with the business. Obviously, there are a lot of options with me, which I'm not able to do that because full time into teaching, right? But the problem is I cannot consider everything because, thank you, Neeraj. Yeah, moving ahead. uh, yes, I was telling teaching, job, and business. If I'm going with teaching, obviously I'll not be able to do with the job and the business. The next best option was job, right? 8 lakh. And that becomes my opportunity. Now, if I ask you, if I quit teaching and go with job, what is the best other option available? Obviously, that is teaching. So the opportunity cost becomes 10 and not 5, right? Okay. If I go with business, not to choose with teaching, not to go with job, if I go with business, I'm earning only 5 lakh. What is the opportunity cost? Can I say the next best option available becomes the opportunity cost, that is 10 lakh? The teaching I'm following. This is what is known as the opportunity cost, right? So over here, I'll explain the question directly. Okay. A company can make any of the three products XYZ in a year. It can exercise its option only at the beginning of each year. Relevant information about the products for the next year is as follows. That means you can choose any of the product X, Y, or moving here. Selling price is given, variable cost is given. Can I get the contribution? 10 minus 6 is 4, 12 minus 9 is 3, and 12 minus 7 is 5. Right? I got the contribution. Now, market demand and production. See, fixed cost is irrelevant, so fixed cost is never a relevant cost. So just ignore that. Now, market demand is 3,000, but you have a capacity of only 2,000. You have only a capacity of 2,000. How many units will you be able to sell? The market is asking for 3,000, but will you be able to make that 3,000? The answer is no. You have a capacity of only 2,000, right? So what you will take, obviously 2,000 units. And how much will you earn? 2,000 into 4, 8,000. That means product X is giving me a total contribution of 8,000. Moving ahead. The market demand is 2,000, but you have the production of 3,000. So I'm asking you, will you make 3,000? The answer is no. Why? Because the market is only taking 2,000, right? So the demand is 2,000. I know you have the capacity of 3,000, but will you make 3,000 answers? Can I say anything which is lower of market demand or production capacity, right? So I'll take 2,000, 2,000 to 3 will give me again 6,000. And with Z, 1,000 or 900, I'll go with 900. 900 into 5 is 4,500. Is 4,500. That's the answer. Now, if you go with X, if I choose X, what is the opportunity cost? Can I say the next best option? That is Y. That means 6,000 is the opportunity cost. But if I go with Y, if I choose Y, what will I forego? X or Z? Obviously, the best option, the X one. That means the opportunity cost is 8,000. If I go with Z, if I go with Z, obviously the best option was X, right? So the opportunity cost again becomes 8,000. This is a simple answer. Okay. So I hope everyone is getting the basic questions. And now we'll start with the actual questions. Yes, now we'll start with the actual questions. Okay, these were the basic questions which I have covered: the indifference point, the shutdown point, the basics, which will be covered in MCQ, right? Okay, now it's the time to solve a few questions. That is, make or buy. Okay, when will you make and when will you buy? First of all, make this thing clear. If you're into decision making, making or buying decision, you just have to ignore the fixed cost because fixed cost is irrelevant cost. Make or buy me. What we have to do is, if see, I'm getting a product, if I'm getting a product at 10 and if I'm making a product at 12, is it beneficial for me to make? The answer is obviously I'll go with that. But if I'm able to make the product at rupees 9, obviously I'll go with making. This is the only solution for make and buy. That means if at all you are able to make, that is the variable cost is lower of making, obviously I'll go with that cost. Simple. See, if I'm making a pen, obviously I need to buy a refill for this, right? If the refill I'm getting at rupees 10, if the refill cost is rupees 10, obviously I need to purchase from outside and then make a pen. If I'm making a pen, not the refill. So I'm getting the refill at 10, I have to pay 10. So the buying cost becomes 10. So I thought of it, why to buy from outside when I can make the refill by my own cost? I have the resources, I'll make it. I make the refill. And if the making cost of refill is 12, will you make? The answer is no, because you're getting the product at 10. Why will you make at 12? But if the making cost is 9, obviously making cost is nothing but the variable cost. If the making cost is 9, will you make? The answer is yes, you will make it. So it is very easy. If the making cost is less, go with making. If the buying cost is less, go with buying the product, right? So this is this simple. So I'm just reading out the question. Please pay attention. SH Limited, a cycle manufacturing company, has drawn up a program for the manufacture of a newly product for the purpose of fuller utilization of the capacity. The scheme envisages the manufacture of baby tricycle fitted with a bell. The company estimates the sale of tricycles at 10,000 units during the first year and expects that from the second year onwards, the sale estimates will stabilize to 20,000 tricycles. That means initially what they're telling, in the first year, you will be able to sell only 10,000, but from the coming years, you will be able to sell 20,000 tricycles. Okay. Since the company has no provision for the manufacture of small bells specially required for tricycles, that means for the making a tricycle, you want a bell. You want a bell. Okay. The requirement of the bell is initially proposed to be met by way of purchase from the market at 8 rupees. That means the buying cost is 8. The buying cost is 8. That means you will be able to buy the bell at rupees 8. Okay. However, if the company desires to manufacture the bell in its factory by installation of new equipment, it has two alternatives. So what I'm trying to tell is I have the option to buy the bell from outside market. I'm manufacturer of tricycle, okay, not the bell. What I'm thinking of, instead of purchasing the bell from the outside, I'll try to make the bell in my factory itself. So will that be beneficial? And for that also, I have two options: Super X machine and Janata machine, right? So they have given two proposals. Initial cost of machine is 3 lakh and 2 lakh. The life is 10 years and 10 years. So the depreciation is the relevant cost, right? 30,000 and 20,000. Next. Fixed overhead other than depreciation is 54 and 28, and the variable expenses are 4 and 5. That means I have the variable cost also 4 and 5. I have the initial cost also and the fixed cost other than depreciation also. Okay, let's read the question. First point. For each of the two levels of output, namely 10,000 and 20,000, state with suitable workings whether the company should purchase the bell from market or install new equipment of machine. That means they are asking you whether you should make the products or whether you should buy. And if you are making the product, which machine you should install? The first, the Super X machine or the Janata machine at each of the levels, at 10,000 also, at 20,000 levels also. If your decision is in favor of installation, which of the machines should be installed? This is the first point. Second, what would be your decision in case of the forecast of requirement for the second year onwards is estimated 40,000 instead of 20,000? That clearly indicates that over here I'm going with buying option. For 20,000 also buying option is better. This is clearly indicating. Okay. Now, if your demand raises to 40,000, what will be beneficial for you? Will it be beneficial for you to make the product or buy the product? Next, at what volume of installation of the two machines break even? The break even point. Okay, the break even point, you know the answer. It is fixed cost, right? Divided by divided by the contribution. Now, see, if at all the making cost is lower, I'll go with buy option. If the sorry, I'll go with the make option. If at all the buying cost is lower, I'll go with the buy option. So I have already calculated the answer. I'll just explain you with the solution itself, okay? Just to save some time. So because this is not that tough question, okay? See, I've given everything in this. So if I'm getting 10,000 units, only 10,000, since they have given for 10 and 20 and 40 also. So I've made three lines: 10, 20, and 40. Okay, so I'm just reading out the 10,000 liter. The buying one, the Super X and the Janata. That means either I'll buy it or else I'll install Super X or Janata, whichever is lower to me. Okay, the depreciation cost is 30 and 20. The other fixed cost is 54 and 28. It is given. The variable cost to make, is 4 rupees, right? The variable cost is 4 rupees. So what will be the total cost of making 10,000? It will be 10,000 to 4 is 40,000. So it will give me 40,000, right? Okay. And the variable cost over here is 5. That means the total variable cost will be 50,000. So this is the answer, right? Can I say for making 10,000 units, the total cost incurred will be 30, 54, and 40, and 20, 20, and 50. But if I buy, obviously I need to buy at 80,000. How come 80,000? You are purchasing 10,000 units into 8, right? You are purchasing 10,000 units in 8. Just make the totals. Which is the lowest? 80,000, 124 or 98? Obviously, I'll go with the 81. Can I say the buying is obviously cheaper for you? The buying is obviously cheaper for you. So preferred course of action, it will be buy from the lower of 3. Okay. Moving to 20,000. Again, the same scenario. This won't change. This won't change. The making cost will change. Variable cost 4 rupees and 5 rupees, right? 4 into 20,000 because you are making 20,000 now. 20,000 into 4 will give you 80,000 and 20,000 into 5 will give you 1 lakh. What is the total cost? 164, 148 and 160 because you are purchasing 20,000 into 8. 20,000 into 8, 160, right? So in this scenario, the lowest cost is over here, 148. 148 is which machine? Janata machine. That means in 148, that means if the demand is 20,000, you should go with the second machine, right? Okay. Moving ahead, if the demand increases to 40,000, can I say depreciation and other fixed costs won't change? But what will change is only the variable. So 40,000 into 4 and 40,000 into 5. 40,000 into 4 and 40,000 into 5. And the buying cost will be obviously 8 rupees per unit. That means 40,000 into 8 will give me 3,20,000. Just make the totals 320, 244, and 248. Which is the lowest one? 240. That means I'll go with this machine now, Super X. So, in nutshell, if I ask you what is the actual make or buy concept? See, if making gives me the lower cost, I'll make it. But if buying gives me the lower cost, buying given the lowest cost, I'll buy it. Right? In the first scenario, when the demand was 10,000, only 10,000, I'll say not to make it. Just buy it from the outside because that is the cheaper option. Just buy. But if the demand raises to 20,000, just go with second machine, that is Janata machine. But if the demand raises to 40,000, just go with another machine, which is Super X. These are your scenarios, right? I hope everyone got this one. This was the question. And if you have any question regarding this, you can ask in the comment section and then I'll proceed. Yes, Tushar, you'll be getting a solution also. I guess the notes have been received by the students who have filled up the form. If not, you'll get in a short time. That is basically the questions PDF and solutions PDF you'll also be getting, but after the end of the session. I'm providing the solution because it will be very helpful for you to revise at the exam point. First point, and second is I just cannot, okay, I just cannot solve it right now because this is the marathon. I need to cover a variety of questions in a very less time, so I cannot, solve it right now in front of you. So I've made the solution itself and I explain. See, the comparison part is very easy. How to make the comparison? Which is whichever gives me the lowest answer. Whichever gives me the lowest answer. See, I'll just explain it the first part. When I'm making 10,000 units, 10,000. See, this won't change, right? Depreciation and other fixed costs will be the same for entire scenarios. If I make the product, 4 rupees was the variable cost. 4 into 10 will give me 40,000 and 50,000. So this is the variable cost, right? But if I do not make it, I'll buy it from the outside. Obviously, if I buy from the outside, any expense of machinery won't be incurred because I will not buy it itself, right? Okay. If I buy from outside, I'll pay just 8 rupees, 80,000. So what is giving the lowest cost? 80, 124 and 90. Obviously, these are all the costs, right? So what is better for you, the highest cost or the lowest cost? Obviously, the lowest. So what will you take? Obviously, the lowest cost. The lowest cost, right? So the lowest cost in this scenario is 80,000. So I will go with the buying option, right? But if I go with the second scenario, when there are 20,000, I'm just explaining the totals, okay? 160, 164 or 148. Which is the lowest one? Obviously 148. So I'll go with that one. That is the Janata machine. Moving ahead, the third part. 320, 244 or 248. Which is the lowest? 244. So I'll go with 244. That is the super expression, right? So whatever gives me the lowest answer, I will go with that, right? This is the solution. So this part is of make or buy decision, right? I'll just give you a summary first. I'll just give you a summary. See what I'm covering in this scenario, in this marathon basically. I've covered the basics. I've covered the indifference point. I've covered the shutdown point. I've covered the sales mix, opportunity cost, limit pack. I've covered make or buy, right? And I'll be covering multiple variety of questions where whether to accept the order or not, what should be the selling price. This is one important question. What should be the profit planning? If there are minimum requirements also, what should be the profit planning? And which product to buy from the market? That means if I'm getting an option to buy from the market, which should be the product which I should buy from the market? And if there are more than one limiting factor, more than one limiting factor, how to solve those kind of questions. So I'm just taking the variety of questions in this. Okay. So we are done with make or buy, and now we have to cover the rest of the questions in marginal, and then we'll go with transfer pricing and relevant. So I'll just try to cover all these questions before the lunch break. Okay, moving ahead. Yeah, processing of special order. This is one simple question basically. It's not very tough. It's very simple. See, PQR Limited manufactures medals for winners of athletic events and other contests. Its manufacturing plant has the capacity to produce 10,000 medals. So basically, you have the capacity to sell 10,000, to make 10,000. Okay. The company has current production and sales level of 7,500 medals. That means presently you are selling only 7,500. You have the capacity to sell 10,000, but you are selling only 7,500 right now. Why? Because obviously there might not be a demand, so much of demand. Okay. The current domestic price of the medal is 150. That means you got the selling price as one. The cost data for the month is as follows. The variable cost. Obviously, you are selling 7,500. You are selling 7,500. So what I want is the per unit answer. The per unit answer. Okay. So 262,500 divided by 7,500. This will give you 35 as the direct material cost. Other labor cost. Again, variable 3 lakh divided by 7,500 will give you 40. Overheads 75,000 divided by 7,500 will give me 10. Right. So over here, I can say 40 plus 10 plus 35. 85 is my variable cost. 85 is my variable cost. And the fixed cost, 275 plus 175. 275 plus 175 is 4 lakh 50. Now, what students do over here, the mistake, they also take the fixed cost and point. Say, if you take the point in fixed cost, this 4 lakh 50 divided by 7,500. So it comes to 60, right? It comes to 60. And the total cost comes to 140. The total cost per unit comes to 145. Actually, if you do like this, the solution will be incorrect. Why? I'll explain it in some time. The selling price is 150, right? The selling price is 150 and the cost is 145. Can I say you're earning 5 rupees? The answer is yes, you're earning 5 rupees, right? And how many units you are selling? 7,500. So what is your current profit right now? Current profit. Can I say it is 7,505, which comes to 37,500, which comes to 37,500. Now, PQR Limited has received a special one-time only order of 2,500 at a price of 120. That means the balance capacity of 2,500, there is one order you are getting, but he is asking for 120. So if a normal layman, he will say, obviously I'll reject. Why will I do it? Because it is 145 the cost and 120 is asking. The answer is no. You should not do like this because fixed cost is not relevant. Fixed cost will not be incurred. It is only the variable cost which will be incurred, right? So if he is asking with 120, should I accept? The answer is yes, because you are into profits. That means you have already achieved the break even. The break even has been achieved, right? If you're running in profits, the break even is achieved. That means there will be no fixed cost involved. There will be only the variable cost which will be incurred, right? So if you are selling at 120, the cost to make will be only 85, not the fixed cost, because fixed costs have already been incurred, right? So 120 minus 85, can I say you will be earning a contribution of 35? Yes, extra 35 rupees you will be earning. The present you are selling, the present 7,500, you are earning 37,500. But if you sell that 2,500 also at a price of 120, you will be earning 35 rupees. 35 into what? Into 2,500. So 35 into 2,500 will give me 87,500. That means I'll be able to sell to earn 87,500 extra profit. So should I accept the order? Should I accept the order? The answer is yes. You should accept the order because any single penny received above the variable cost will obviously increase the profit. So over here, any price above 85 should be accepted. Any price above rupees 85 should be accepted. Any price above rupees 85 should be accepted because that is the variable cost. If at all you're not making any units above 7,500, obviously you will not be incurring any variable cost above that. If you're making additional unit, only 85 rupees will be incurred, not the fixed cost, because the fixed costs have already been incurred. The additional one will be only variable cost, and that should be your decision making. So anything above that. Now the question has a second point also. Second point is what? Suppose the plant capacity is only 9,000 meters. That means you were not having the capacity of 10,000. Now you are having a capacity of 9,000, of which you are selling 7,500 in the open market. That means you are having only capacity of 1,500. You are having only capacity of 1,500. Now, the special order must be taken in full or rejected. That means he's telling, I don't want 1,500, I want full 2,500. Will you be able to supply? In that scenario, obviously, this 7,500 I'm selling at 150, but this he's asking for 120, and also he's telling not to sell 7,500 over there, sell only 6,500 over there, and give me 2,500. So again, we will say, I will be able to sell that at 150. Should I give it at 120? Obviously, you will not say right now, you will have to calculate. See, if you sell 6,500 only, obviously you'll lose out on something. What will you lose? You will be losing 1,000 into 30. Sorry, 1,000. Yeah, 1,000 into some price. 120 and 150, right? 1,000 into 30. You'll be losing out some. Because those extra 1,000 units, you will be able to sell at 150. Now he is asking not to sell in the market, give it to me at 120. That means at 30 rupees short. That means you'll be losing out on 30,000. So whether it will be beneficial for you, just take a deep breath and think of it. If you give it to him, if you give to him, you will obviously lose 30,000. But can I say you will be also earning extra on 1,500? So the answer is, just check the total profit. If the total profit is increased, that means you can go ahead. The current profit was 37,500, right? The current profit was 37,500. If the profit is getting increased by single paisa also, obviously you should go with the order. So I've just made a calculation over here. Just pay attention over here. See, what I have given is just sell 6,500 in the open market at 150 and accept the order. Okay, just checking whether I should accept or not. If I accept 2,500, I'll be able to sell at 150. So the total sales comes out to 12,75,000. 9,000 into 85, 85 was the variable cost, and 4,50,000 was the fixed cost. So the total profit comes out to 60. Is it greater than 37,500? The answer is yes. So can I say you should still accept the order? So even if your capacity was 9,000, you will still go with the option, because if you're losing on something, you are also earning on something. So it gets sets off, and also you're earning 22,500 extra, because initially you were earning 37,500 and now you are earning 60,000. You are earning something extra, and therefore you should accept the order. This is the answer. Okay, moving ahead. So this was question number 10. That is processing of a special order, whether you should accept the order or you should reject the order. Moving ahead. Okay, this is one new and very important question. Fixation of selling price. This can come directly about 14 marks. Okay, so this is a new question. Just pay attention. This is from your study mat only. Look Ahead Limited wants to fix proper selling prices for their products A and B, which they are newly introducing in the market. Both these products will be manufactured in Department D, which is considered as a profit center. The estimated data are as under. Yes, thank you, Tushar. Moving ahead. So we have two products, A and B, that will be manufactured. Okay, moving ahead. So they have given me the answers. A will be 1 lakh and 2 lakh. Direct material per unit is 15 and 14 is the variable cost. Direct labor is rupees 3 per hour. Just pay attention on this, 3 per hour. And over here it is 9 rupees. That means, can I say total of 3 hours? 3 hours into 3 rupees will give me 9, right? And over here it is rupees 6. That means 2 hours. So if I ask you how many labor hours are there, I don't know whether it will be required or not, but whenever this kind of questions are there, first of all calculate the labor hours. So when I say labor hours, total labor hours, how many labor hours will be there? I'm able to sell 1 lakh, 1 lakh into 3. 1 lakh into 3, that is 3 lakh, and 2 lakh units into 2 hours. That means 4 lakh. Total of 7 lakh hours. That means a total of 7 lakh hours are available, right? So I'll just go through with the solution also. See, first working note done. Labor hours. I've calculated the labor hours. So even if not required, now just try calculating everything. It will be very easy for you to analyze the question. Okay. So they gave us 3 per hour. So I calculate the hours and I calculate the total hours. This was the first point I have taken. Okay, moving ahead. The proportion of overheads other than interest chargeable to two products are as under. So in this question, they have also made a cost sheet. Okay. So I'll just read the question. Factory overheads are 50% fixed, okay. But how much are factory overheads? That are 100% of wages. Can I say factory overheads are 9 rupees? Factory overheads are 9, of which 50% is fixed and 50% is variable. That means 4.5 is fixed and 4.5 is variable. Admin overheads is 100% fixed and it is 10% of the factory cost. Now they are taking towards the cost sheet. So we need to make the cost sheet now. How to make the cost sheet? Obviously, material plus labor will give me prime cost. Add factory overheads will give me factory cost. Add admin overheads will give me cost of goods sold, and then add selling and distribution will give me cost of sales. So I just need to make that cost sheet. Okay. So the second step will be the cost sheet. Okay. Moving ahead. Selling and distribution 50% variable is 3 and 4 per unit of the products. So they have given us material, they have given us labor, and they have given three overheads: factory overheads, admin overheads, and selling distribution. What we have to do is we'll just make the cost sheet. I'll not read the question ahead. First, we'll make the cost sheet, right? So I've made over here the cost sheet. Just pay attention. Direct material was given 15 and 4. Direct wages was 9 and 6. This I've copy pasted from above, right? Okay. So this will give me the prime cost. Moving ahead, factory overheads. They have clearly given 100% of what? 100% of wages. So can I say 100% of wages is 9 and 6? So it is 9 and 6. Adding up will give me factory cost 33 and 26. Now, admin overheads, they have given 10% of factory cost. So factory cost is 33 and 26. 10% of this will give me 3.3 and 2. So I get the COP, that is cost of production. And selling and distribution is clearly given 3 and 4. It is clearly given 3 rupees and 4 rupees as the selling and distribution. So I just added 3 and 4. This will give me the cost of sales as 39.3 and 32.6. So I hope this thing is clear. That is the cost of sales. That is the cost sheet. I got the point, right? The cost sheet is very clear. Now, what I'll do is the variable cost, because this chapter is all about marginal. What we'll do is we'll try to calculate the variable cost. Can I say this is the variable cost? See, material and wages are always variable, right? Unless and until mentioned. So these are always variable. What about factory overheads is given? In factory overheads, what they have given is 50% fixed. That means, can I say the rest 50% is variable? Yes. So there is material variable cost, there is labor variable cost, factory overheads 50% is variable, right? And admin 100% fixed, so it is not relevant cost for us. And selling and distribution 50% is fixed. So next calculation will be the variable cost calculation. That means I need to calculate the variable cost. So I've given the calculation over here. Just pay attention. Is material variable? Yes, material is variable. So 15 and 14 I have done. Is labor variable? Yes, it is variable. So I will done over here. Factory overheads 9 was given. So into 50%, because 50% was fixed and 50% was variable. So I've taken the variable cost. Moving ahead, selling and distribution. It is 1.5 and 1.5 and 2. So I got the answer as variable cost. So total variable cost comes out to 30 and 25. Right? This is the third point. So reading the question step by step and taking out the answers. So first of all, I calculate the R's. The second step, I calculate cost sheet, and the third step, I calculate the variable cost. Okay, moving ahead with the question. The fixed capital investment in the department is 50 lakhs. Fixed investment, that is the capital required, is 50 lakhs. The working capital requirement is equivalent to 6 months stock of cost of sales of both the products. That means 6 months cost, right? 6 months cost. First of all, it was 1 lakh units, 1 lakh, and I want only 6 months. That means, can I say 50,000 units? Yes. And do I have the cost of sales? The answer is yes. I have already found out the cost of sales. Cost of sales is 39.3. So apart from the fixed capital, there is also working capital requirement. So how much is the working capital requirement? See, they have given there, it is equal to 6 months stock of cost of sales. Cost of sales, whatever the cost of sales is there, take 6 months of that. Take 6 months of that, just multiply with the cost of sales. I've already calculated. For this project, a term loan amounting to 40 lakhs has been obtained from financial institution at an interest of 14%. That means you have to take a loan of 40 lakh rupees and 14% is the interest rate. 50% of the working capital needs are met by borrowing carrying interest at the rate 18%. That means whatever the working capital requirement is there, 50% you will borrow at what rate? At 18% per annum. So there is interest cost also. I need to calculate the interest cost. I'll be showing you working cost. The department is given to give a return of 20% on capital employed. So whatever the capital employed is there, I want a 20% profit on that. So there are a lot of things now. See, I don't have the selling price right now. See, I don't have the selling price. I need to fix that, right? But I have the variable cost. I have the profit calculation with me. I want 20%, right? They have given the interest calculation in this part. So first of all, we'll try to calculate the working capital. What is the total working capital requirement? See, I have given you the analyzation. 1 lakh units are required. but I don't want 1 lakh because it will be in rotation. I want the 6 months answer, right? So 6 months, it will be 50,000. The cost of sales is given, that will be working capital. And over here, two interest rates are given. 50% will be 15% of the working capital. So first of all, I need to calculate the working capital and then 50%, right? So I've given the calculation over here. Yeah, calculation of total capital and the expected return. So what is the fixed capital? 50 lakh rupees. It is clearly given. What is the working capital? 1 lakh units were there, but I don't want of 1 lakh units. I want 6 by 12. 6 months, right? 6 months stock. So it is 50,000 units. And what was the cost of sales? Cost of sales, I've already calculated 39.3 and 32.6. So over here, I just multiplied by 39.3 and 32.6. So I got the working capital for A and B also, right? So this is the answer. Next, this will give me the total capital. This is the working capital and this is the fixed capital. So total capital comes out to 1 crore 2,25,000. And what is my expected return? It is 20%, obviously before interest, because I have not considered the interest factor right now. 20,45,000 is my expected return. Now, can I say I have the fixed cost, I have the variable cost, I have the profit? Just reverse calculation, I'll get the sales. So next part is the proper answer. Interest I'll calculate later. See, cost calculation of total sales. Total sales, how will I calculate? What was the cost of sales? It was 39.3 and 32.6, right? Total cost and profit. Can I say it will give me the total sales? Total cost of sales plus profit. See, if you make the cost sheet, can I say it will give me cost of sales? And the last thing which you add is the profit. This will give me the sales, right? This will give me the sales. So whatever the cost of sales is, just add the profit to it and you'll get the sales value. So over here, you have the cost of sales, which I've already calculated, 1 lakh into 39.3 and 32.6. 39.3 and 32.6 was calculated already in step, right? That is the cost sheet. Expected return, that is the profit, add up, and this will give me the total sales. And now the variable cost, just subtract the variable cost. Just subtract the variable cost. What was the variable cost? Did I calculate in step number 3? Yes, working on 3. I calculate the variable cost as 30 and 20. Just subtract that. So it will be 80 lakhs. Can I say the contribution comes out to 44.95? The contribution comes out to 44.95. This was one important step. I calculated the contribution. How did I calculate the contribution? Please pay attention. See, I was not having the individual sale value. So what I did is I took the total cost. The total cost plus the profit will give me total sales. I had the total sales minus the variable cost. Variable cost I was already having, right? So variable cost minus करके मुझे मिलेगा contribution. I got the contribution, right? I got the contribution. So once I get the contribution, will I be able to calculate the answer per labor hour? Contribution per labor hour. What was the contribution? 44.95. I just now calculated. How many hours were there? It was 7. And 6.4214 is the contribution per labor hour. Moving ahead. What should be the selling price? Okay, I'll just read the last line first of the question. Fix the selling price of product A and B such that the contribution per direct labor hour is the same for both of them. What they was, the contribution per hour should be same. That means for first product it is 3 hours and for the second product it is 2 hours. That means can I say per hour it should be same. So therefore I calculated the contribution per hour, and over here if you check the contribution per hour should be 6.42. Now I'm getting selling price minus variable cost will give me contribution. Variable cost I'm already having. Contribution per hour I'm having. Just multiply with the number of hours, will get the contribution, and reverse calculation will get the selling price. Finally, I will get the selling price. Just pay attention. So calculation of selling price. It is variable cost given to you. I've already calculated. Contribution, it is 6.42 for 3 hours and 6.42 for 2 hours. So I'll get the per hour easily. Just reverse calculation, I get the selling price. Finally, I got the selling price. Now what I have to do? I just have to make the profit statement. Did you calculate the total sales in step number 6? Yes. Where cost of sales is expected profit. Less cost of sales will give profit before interest, and you just need to make minus the interest cost. What was interest cost? Over here, interest cost. First of all, you took a 40 lakhs loan. And 40 lakhs loan, 14% was the interest rate. It was clearly given. And bank borrowing, how much was the bank borrowing? 50% of the working capital requirement. The working capital was 52 lakh 50,000, 52 lakh 25,000. 50% of that. and you will borrow at 18%. This will give me the interest cost. Total profit minus the interest will give me the profit after interest, and this will give me the profit after interest. So, going through the steps. First of all, what we have done. First step is I calculated the labor hours. I calculated the labor hours, which was very easy. Second step, I made the cost sheet and found the cost of sales. Right. For the third part, I calculated the variable cost per unit with material plus labor plus overheads. I calculated the variable cost. For the fourth point, what I've done is I've calculated the total capital. Total capital will be fixed plus working capital, and I've also calculated the expected return, which is 20%. Right. And then fifth point, I calculated the total sales value. Subtracted the variable cost, that gave me the contribution. Since I want the contribution per hour to be same, the sixth step I calculated contribution divided by the labor hours. Now contribution was here, labor hours was in the first step. I calculated the contribution, so I got the contribution per hour. And in the seventh step, finally, in the seventh step, I calculated the selling price. Variable cost was ready-madely given, contribution I found out from here, and just reverse calculation will give me the selling price. This was the answer. Moving ahead toward the profit statement. Profit statement was very easy. Sales was given, cost of sales was given, will give me profit, just the interest cost. And now the last working was for interest. What was the interest? 40 lakhs you were taking at the rate 18%, sorry, 14%. This was fixed. 40 lakhs you are taking. But for working capital, you are not taking full, you're taking only 50%. So 50% of 52 lakh 25,000 at 18% you are taking. This is the interest cost. So just subtract the interest cost, you will get the profit after interest. This is what is. This was one new question, not asked in the examination. So there are high chances they will copy paste the questions from your study mat itself, right? So this was one important question, can be asked for 14 marks. So I would highly recommend you to go through the solution once and try to write it once, right? Writing practice is very necessary to score in this. Okay, so this was question number 11. I hope everyone got this point. And if you have any query, please feel free to ask. Then I'll proceed. Okay. Others, you can comment also. Yes, this was question number 11. Moving ahead to question number 12. Moving ahead to question number 12. What is this? There's optimum crop mix and the profit planning with minimum requirement. There is a minimum requirement of this and two separate rankings. This was also a similar question asked in December 29th. Yes, Tushar, I'll be giving a lunch break after two questions. Okay. I will just complete the marginal part so that after lunch we can start with the transfer pricing and the relevant cost, which is very, very, very important. Okay. Question number 12. I'm reading. Please read. Please pay attention. Approximate. I'll give the lunch break at around 2. An agro-based farm is planning its production for the next year. The following is the relevant for to the current year. Area occupied in acres: 125, 100, 150, and 125. So these are the four crops M and OP, and the area is given. Yield per acre is given. That means it is 125 into 50. That means 125 acres are there, and in per acre you are getting 50 tons, right? Selling price per ton is 100. So you can get the selling price by multiplying, right? No, you are getting this per ton. Variable cost, it is clearly given: 150, 75, 62.5, 62.5, and 2000. So all the variable costs are given. I'll just add up and I'll get the total answer. So we have M and OP. What is given? They have given the area, the yield, the selling price per ton, and the variable cost per acre is given, not per ton, per acre is given, right? So moving ahead, the fixed cost per annum is 13,44,000. The total fixed cost is 13,44. The land that is being used for the production of O and P can be used for either crop. That means for O and P, you are utilizing total of 275, right? 150 plus 125. So O and P can be simultaneously interchanged. But for M and N, the land that is being used for the production of M and N can be used for either or, but not for ON. That means for M and N, that is this 225. This can only be utilized for MNN. That means ONP is separate, MNN are separate. So that means there are two different rankings, right? ONP are separate products for us and MNP, because on the land in which M is cultivated, you can cultivate N but not ONP in that, right? Okay, moving ahead. In order to provide adequate market service, the company must produce at least 1000 tons of each MNN and 900 tons of each ONP. That means there is also a minimum requirement. There is also a minimum requirement. That means they are given at least you should make this. That means, see, if there is a limiting factor, what we do is selling price minus the variable cost. What we get is the contribution, right? Contribution divided by the limiting factor, whatever the limiting factor is, and we get the contribution and then give the ranking. Okay, what product will you make first? Obviously with the highest ranking product. But in this scenario, whenever there is minimum, you have to keep aside for that minimum first. That means you have to take the minimum out of it and then you can utilize the balance out, right? One such question in throughput also was asked in non-similar basis. Okay, I'll be taking that question also. Moving ahead. Determine the profit for the production mix fulfilling market commitment. That means you also have to check it. That is 1990. You have to make means you have to make, and the balance you can utilize the way you want. The way you want to, you can manage, right? Okay. Second, assuming the land. Okay, second point we'll read later because second point is not at all relevant with the first point. Now, how to proceed with the question? First of all, they have given the area in acres and the yield per acre ton wise, right? So I'll calculate the answers for how many tons are required. So I've calculated over here. See, selling price is given 100, 125, 150 and 1. It is per ton, right? And number of tons I'll multiply. That is first 2 points, 100 into 50. That means I'll get the selling price per acre then, right? In 1 acre, if suppose this is 1 acre, there are 50 tons, right? There are 50 tons, and each ton can be sold for 100 rupees. That means total will give me 5,000 per acre, right? So this is the selling price per acre. Why I'm calculating per acre? Because the variable cost is given per acre. So I've taken over here selling price into number of tons will give me the sales per acre minus the total variable cost. How did I take the total variable cost? I just make the totals. Okay. So just skipping that part because I just need to make you understand the concept. So I've just made the totals. Okay. So total comes to 2350. Contribution per acre comes to 2650. Similarly, I have also calculated for NOP. This was the very easy point. First of all, I've calculated the sales per acre and not per ton, right? Per ton was given. I just made it per acre because all the expenses were given in acre basis, right? So this was the sales, this was the variable cost, and ranking I have given separate 2650 and 2450. Which is better for you? Obviously, you'll say 2650. So I gave the first rank to M and then to N. Why only M and N? Because O and P there is separate land, M and N there is separate, right? Okay. So I've given the ranking only for M and N. And if I check for O and P, obviously which is better for you, 3775 or 4800? You will say 4800 is better. So I give first rank to P and then to O. This is the point, right? So this I hope everyone is getting. Moving ahead, because I know the second question also. If there was no restriction, if all the land can be utilized for any of the product, which should be your best answer using this code? Obviously, you will say this is first, this is second, this is third, and this is fourth, right? If there was no restriction on the land, that means the crop can be cultivated on each land. M, N, O, or P, any product you can use that, right? So if there was no restriction, obviously the ranking would have been in the black shown below, right? So I've taken that also. I've given that also. So first of all, I've given ranking to M and N, and then the ranking to O and P. And if at all there was no restriction, which is given a second point, I've also given the ranking. If there are no restrictions, the ranking would be in this one, right? Moving ahead. How to utilize? So how many acres were there for M and N? How many acres were there for M and N? For M and N, there were 125 and 1000. There were 125 and 1000. That means, sorry, 100. That means 225 acres, right? There was 225 acres. First of all, keep aside minimum utilization, right? Minimum utilization. First of all, you have to give for the minimum requirement, right? So what will you do? Can I say? I'll give the minimum one. The minimum is n, right? The second product is n. So I have to make 1,000 tons. How many acres will be required? So I've just given a cross multiplication. See, over here, in one ton, sorry, in 1 acre, how many tons were there? 40. So I've given over here. For 40 tons, 1 acre is required. For 1,000 tons, because the minimum requirement is 1,000, I have to keep aside 1,000 tons, right? So for 1,000, how many acres will be required? Just cross multiply. 25 acres will be required. That means of the 225, 25 acres should be given to that. So the balance is 200. The balance is 200. Now, for 200, how will you utilize that 200? Obviously, I will go with M because it is giving the highest answer, right? Moving ahead. For O and P, you are having 275 of total. Which product you will give? Obviously, you will give to the last one. That is the first rank P, but you have to keep aside for the minimum requirement of O. The minimum requirement for O, because you are getting highest profit in P. Obviously, I'll try to make P only, but the problem is I want the minimum requirement. I have to keep aside for the minimum requirement. So O, how many units in 1 acre? 45. So 45 tons in 1 acre. For 900, how many tons? So it will give me 20 tons. That means for 255, I'll utilize for. These are the two separate answers, right? Now, statement of profit. So I've given you the answers. See, for 25, you will make N. For balance, it is M. For 20, it is O. For 255, it is the balance P. And then I just multiplied with the contribution. How many acres were there into contribution? Minus the total fixed cost, which was clearly given in the first line, 13,44. And I got the total profit. And I got the total profit of 546.7. Right? Moving ahead. When there was no restriction, the second point of the question, when there was no restriction, we will sell the crop with the highest contribution per acre. We will sell the crop with the highest contribution, right? So contribution was 500 acres into 4,800 for P, minus the fixed cost 1344. Obviously, the profit will be this. The profit will be directly this. See, over here, just 1 minute. I'll read the question. Assuming the land could be cultivated to produce any of the four products and there was no market commitment, they're telling no market commitment is there, what product will you make? Obviously, you will do the highest contribution. So what product is giving the highest contribution? Last P. You will go with that product, right? Next, calculate the profit amount of most profitable crop and break even of most profitable crop in terms of acres and sales. And how will you calculate break even? How will you calculate break even? Is fixed cost divided by contrib per unit or PV ratio. So you can easily find out over here. What will be the crop? Obviously, we will select crop P. Why P? Simple reason, it is giving the highest contribution. So what was the contribution? 4,800 per acre. 5 acres will give me 24 lakhs. Fixed cost was given 1056 is the profit. How will you calculate the break even? Fixed cost divided by contribution. You will get the answer is 280. Just multiply the selling price, you will get the answer is 2268, and that is break even in rupees. This is the final answer. See, so this was again not very tough, but yet important question, since it has been asked in the examination, and there are high chances that examination questions get repeated, right? So this was one easy and yet important question, where there are two rankings and two separate rankings with minimum requirement. So whenever there is minimum requirement, keep aside for the minimum requirement first. Keep aside for minimum requirement first. Okay. Yes. Moving ahead. So this was question number 12. Okay. Next one. Yes. Again, this is again very important question. Which product to buy from the market in case of shortage? See, I'm having, let's say, three products. I want to make three products. Okay. And there is a shortage. There is a shortage of raw material. So should I buy the raw material from the outside market instead of making, or should I make that product? Example. I'm making a pen. Okay, I'm making a calculator. Let's say. So calculator needs plastic, a screen, some chips. Okay, something. But one product I'm not able to make it because that utilization will be there for the another. So what is that product? Whether I should buy the body, whether I should buy the screen from there, because I'm making a calculator, right? I want to buy a product, one product from the outside market. What should be that product? Obviously, I should go with that product which will give me the lowest cost, right? Which will give me the lowest cost. See, when I say which product you will make, obviously with the highest contribution. highest contribution, right? But in this scenario, whenever there is shortage and you are trying to purchase from the outside, you will go with the product which will give you the lowest excess cost. Lowest excess cost, obviously, will go with that product. If your demand gets satisfied, that's good. If your demand does not get satisfied, you will go with the second product, right? The question is very important. Just pay attention. Household equipments is producing kitchen equipment for five components, three of which are made using general purpose machines and two by manual labor. That means three are used by machines and two by manual. The data for the manufacture of equipment is as follows. That means you are making an equipment, a kitchen equipment, and to make that kitchen equipment, there are five components. The five components are A, B, C, D, and E. Okay, just analyze the table nicely. Machine hours per unit. Machine hours per unit are given. 10 hours, 14 hours, 12 hours. For D and E are not given because three products are there on machines, three components, right? For the labor hours, it is 2 and 1. That means total 36 hours and 3 hours. Machine hours will be 36 and labor hours will be 3. Moving ahead. The variable cost is given to you 32, 54, 58, 12, and 4. The fixed cost per unit apportion, they have already given you the apportion. The fixed cost is also given 48, 102, and so on. Next, the total component cost. They have just added the cost. So everything, every working they have given. So they have given the variable cost, they have given the fixed cost, and they have given the total cost also, right? Everything is given. Moving ahead. Assembly cost, all variable. They have given variable, but they have not given for individual. They have given in total. That means to make a component, one assembly cost will be there for 40 rupees. So that will be the overall cost. And the selling price per unit is also given 600. So I have got 600 as the selling price. I have got this variable cost and I have got this variable cost, right? There are two variable costs associated and there is one fixed cost associated. Moving ahead. The marketing department of the company anticipates 50% increase in the demand during next period. First of all, get this thing clear. We are not selling A, B, C, D, E. These are the components, right? Using these components, we are making equipment. We are making this equipment. Let's say this equipment is X. So for 1 unit of X, A, B, C, D, and E are required, right? All the components gets mixed and then one product is made and that product we are selling. And now in the next year, what they are anticipating, it will increase by 50%. That means the demand of the final product will increase by 50%. General purpose machine used to manufacture ABC is already working the maximum capacity of 4752 hours. That means you are having total of 4752 hours. That's it. Not more than that. That means the total hours required per unit was 36. That means let's say I have to make this pen. This is the final product, right? For this final product, I get five raw materials A, B, C, D, E. The problem is with ABC because ABC are made from the machine and machine there is a scarcity. I'm having only 4752 hours, not more than that. Total 36 hours are required, 36 hours to make ABC, and then those are used in this pen to make the final product, right? Okay, moving on. There is no possibility of increasing this capacity during the next year. But labor is available for making components D and D and also for assembly. That means for this 3 hours and this 40, there is no restriction. That means there is restriction only for machine hours. Moving ahead. The management is considering the purchasing of one of the components A, B, or C from the market to meet the increase in demand. The components are available in the market at the following prices. Now they are thinking of purchasing any one of the component either with A or B or C. See, if I purchase A, can I say this 10 hours will be saved? Obviously, this will be utilized for B and C. If I purchase A, if I purchase B, 14 hours will be saved. And if I purchase C, these 12 hours will be saved, and that can be utilized for the other ones, right? Moving ahead. They have given me the purchase prices. See, they have also given me the buying variable cost, and they have also given me the buying cost. So it is the make and buy, okay? 80, 160, and 125. These are the purchase cost. There is a buying cost. I can buy from the market. I can make the product. See, I can buy at 80 and I can make at 32, right? Next, profit made from the company. So they have given us the required question how to go with the solution. See, which product to buy from the market? I've given the answer over here, which gives me the lowest excess cost per hour, which will give me the lowest cost. If it is contribution, you will go with the highest. Ranking should be highest. But if it is the cost, you should select which is the lowest, right? Okay, moving ahead. Present number of units. How many units are you able to make right now? can I say I'm having 4752 hours of machine hours, and one unit requires total of 36. So how many units can you make? 4752 divided by 36. 132 units can be made. 132 units can be made. Can I say the demand is increased by 50%? The demand is increased by 50%. So that means if the kitchen equipment which you are making right now, you are making 132 as of now. But next year, 132 plus 50%. That means the next year demand will be 198. The next year demand will be 198. So what product should you purchase? If you purchase A, 10 hours will be saved. That means you will get more hours to produce B and C. But if you purchase B, 14 hours will be saved. That means you will get more time to produce A and C and so on, right? So you have to decide which product to purchase. Will you purchase A? Will you purchase B? And will you, or should you purchase C? This is the point. But your demand should also be fulfilled. The demand is 50%. So you have both the conditions. You have to purchase from outside and the demand should also be fulfilled, right? This is why you are purchasing from outside, right? If the demand is not getting fulfilled, what is the need to buy it from the outside market? So in this scenario, what product will you purchase from the market? The answer is very simple. You should purchase from the market which gives the lowest excess cost per hour. I want everyone to note this point, and this is very important. Which product you should purchase from the market? You should purchase the lowest excess cost per hour, whichever gives me the lowest excess cost per hour. First of all, you need to check the what is the excess cost. See, either you will make it or buy it. Obviously, making will be the lowest cost. Buying, the cost will be incurred because I'm taking from outside. Outside, the supplier will also take the margin, right? So I just need to compare what is the extra cost and extra cost per hour. But whichever is lower, I will go with that part, right? So I'll just go with A part, right? A is variable cost is 32. That means making cost is 32 and the purchase cost is 80. Can I say the extra cost is 48? The extra cost is 48. You are able to make it 32. See, let's say this is A. This is A. This is not a final product. This is only a component, right? This component will be used in the final product. This is A. I can make it at 32, or else I can buy from the outside market at 80. What is the extra I'm paying? 48. And can I say 48 I'm paying for this 10 hours? So how much is the extra cost per hour? Is 4.8. See, over here I have given you the calculation. 4.8. There is the buying cost, the variable cost to make. The extra cost is 48 divided by the machine hour is 4.8. Right? Similarly for B and C. For B also I'll calculate. For B. For B, what is the purchase cost from the market? 160. And what is the making cost? 54. 54. So 160 minus 54. Whatever the difference is, divided by how many hours? 14 hours. Divided by 14 hours. Divided by 14 hours will give me the excess buying cost per hour, 7.57 and 5.58. Now look at the question. Look at the question. Give me which product to buy from the market, whether it should be A or B or C. I've given the calculation in front of you. Just tell me which product should I buy from the market. Should it be A, should it be B, or should it be C? Please tell me. I've explained you the concept. Tushar, yes, A. Yes, it is clearly mentioned. A. Why A? Because it is clearly mentioned. It is cost, right? It is cost, not the contribution. So whichever gives me the lowest cost. Okay. Obviously, I should go with A. But what if I purchase A, the demand does not get fulfilled because A obviously I'll say for 10 hours. So it should be B. I will make only B and C, right? A I will purchase from the market. B and C I will make by myself. But it should be sufficient enough to make 50% increase, right? If I'm not able to make 50%, then the second product I should go with is C. If I'm not able to meet the 50% demand, obviously I'll show the calculation how to calculate that 50%. But what I'm trying to tell you is, see, I'm purchasing A from the market because I will utilize those hours saved from A to make B and C. To make B and C, right? But those many hours, if they are sufficient to make that 198 units, right? 132 plus 50%, 198. If I'm able to make 198, then it's okay. If not 198, then obviously buying if from the market is useless. Why are you making A? Then buy C, so that you should make A and B, right? And if at all the demand is not getting fulfilled again, then you should go with the highest third product, which is B, right? So how to calculate those things? I gave you the base concept, right? Okay. So I'll give you the ranking. We will select component A to buy from the outside market since it has the lowest excess buying cost per hour, right? Okay. But if it does not fulfill our demand requirement, then we will switch to the next component, which is C. And if at all not fulfilled, then we'll switch to the third one, right? Obviously, I need to make the demand. Why I am purchasing from outside? Because those hours will be released and those will be utilized for other products, right? Okay, moving ahead. Moving ahead. The current profit statement. They have asked the current profit statement, so I've just made the current profit statement. 132 into selling price is clearly given, right? The variable cost is 200, the totality is clearly given. Also, the assembly cost and contribution is there. Fixed cost, it is 316 per unit, clearly given into 132 units. And this is the profit statement, which is very easy. Only thing is, you wanted to calculate this 132. So I've given you the 132 calculation, right? The main part is the point number. See, I've given the calculation. If A is bought from the market, if I purchase A, what will you do? Can I say means now the machine will be used only to produce B and C? Obviously, 4,752 hours will be able to make only B and C. So how many B and C can be made? B requires 14 hours and C requires 12 hours. That means total of 26 hours will be there. So I'll just divide it and I'll be able to make only 182 units. I want to make 198. Can I say the demand is not getting fulfilled, right? Because I want 198, you are able to make only 182 units. Even if you buy A, right? Even if you buy A, 10 hours will be saved, right? So what will you do from the other hours? You will obviously make B and C. So B and C requires 12 hours, 26 hours. So you will be able to make only 182 units. But you want 198 because initially you were selling 132, 50% demand will be increased 198. That means buying A from the market is not fulfilling your demand, right? What the requirement was. The increase is only 38.46. How did I calculate? Compare on 132, just divide by 132, you get the percentage as 38.46. 38.46% has been increased. Initially, you were selling 132. Add 38.46% will give me 182. 182, right? So this is just a percentage increase. I want the 50% increase. The one which will give me the 50% increase, I will go with that. Okay. If A is not bought, I rejected A. I will not buy A from the outside market. Let's go with another product. If B is bought, so can I say B will be saving 14 hours? B will be saving 14 hours. So can I say A and C can now be made at 22 hours, 10 plus 12, 22 hours. That means if I divide by 22 hours, 216 units can be made. Can I say this is not a requirement? I just want 198. I don't want to make 216 units. So buying B is of no use because the capacity is released by what a lot of percentage. I don't want that, right? Don't buy B because the capacity has been increased. I will just want 198. Obviously, the third answer will give you the best answer. Next, if C is brought from the market, that means A and B can be made now. If you purchase C from the market, that means can I say 12 hours will be saved? That means you'll be able to make 10 plus 14, 24 hours will be required for you. So I'll just divide by 24. And exactly you are getting 198. That means 50% demand is getting fulfilled if you buy C from the market. There were 2 points very important in this question. First is the product which you should buy, that is the lowest cost per hour. That is the first point, right? The lowest cost per hour, first point. Next, if you go with C, C, you can purchase B also, right? But if you go with C, the exact increase you are getting is 50%, and that is my requirement. That is my requirement. The answer should be A, obviously, because it is giving the lowest cost, but it is not getting fulfilled. The demand is not getting fulfilled. So I shifted to next product. B is high. Yeah, B is high, I know, but I don't want that units, right? I want only 198 units. If I make 198, if you make 216, will you be able to sell? The answer is no. You'll not be able to sell 216, right? See, this is the number of units which you are able to make. I want to make only 198 because the demand will be 198. Why should I release the capacity to make 216? Even if you can make 216, are you able to sell those units? The answer. Therefore, you should not go with B point. You should go with the third point. Obviously, you have decided over here only which product you will buy from the market. You told I will buy A, but buying A is not fulfilling your requirement of 50%. The capacity released, but B and C are only 182. I want 198. So obviously the second best option is shift to point number C, because the second ranking is 5.58. The lowest cost is 5.5 rather than 7.5. I should go with C. With C, is my demand getting fulfilled of 50%? The answer is yes. So I should go with C only. This product I should buy. This is the answer. So I've just given the calculation over here. Buying component A is cheaper, but it is not fulfilling the increased demand. I'm not able to make the demand, right? And therefore, we should buy the component C from the outside markets. It is fulfilling the increased demand. I hope the point is clear. And if you have any queries regarding this, please feel free to ask. This was a very important question. Again, one of the neglected question which students neglect because they only focus on contribution. For our contribution is highest. This is lowest answer. The cost should be lowest. Yes, everyone. Okay. So since it's lunchtime, actually, I have one question with me right now, and after that, it is transfer pricing. Actually, there are two more questions on marginal. So because I have taken the recent paper exams also, so what we'll do is we'll just take a break right now. After the break, I'll just give lunchtime for half an hour. So lunchtime, we'll resume at 2:30. Okay, be there at 2:30, and there will be some very important questions on marginal. The recent exam paper questions plus transfer pricing plus relevant, which is very important. This is the second point which I'll be covering, right? So we'll resume at 2:30. Okay. Yes, everyone, please confirm once. Is the audio and the video able to clearly? Yes, Rakshita, thank you. It's on. Sure. I hope. Hmm. Okay. So before starting, first of all, tell me from which part of the country are you watching? I should know from where are you all. Yes, the students have started receiving the notes. If not, then be patient. You will get the notes. Okay, Jaipur. Ratnagiri, Kerala, Tamil Nadu. Okay. Nasik. Solapur, Chennai. Okay. Jharkhand. Okay. Okay. Fine. So good to see that पूरा diversified एकदम. Okay, Kerala. So South students are also there. Okay. So thank you for attending live with me, and let's start with the video. Uh, in the previous, that is before the lunch break, we covered a variety of questions of marginal. I'll be taking two more questions of marginal now, which are the obviously exam questions, and then I'll be starting with the important important part, that is transfer and relevant. Relevant has something new and something very important questions asked directly for 14 marks. So we'll be covering that also. Okay, okay, sure. Yes, Anand, I'll be taking a complete concept of standard, that is standard costing, in tomorrow's session. I'll be live tomorrow also. So I'll be covering that also. My target for today was importantly marginal, relevant, costing, and transfer pricing, because that are very important, covered almost for 25 to 30 marks, right? And in the next session, I'll be taking standard, then I'll be taking ABC games also, throughput also, then we have target costing also. These are all small topics which can be asked for 7 marks. I'll be covering that also. हल्का सा साउंड इशू आ रहा है. Others, please check, is that am I audible clearly? Okay, so here question number 13 we are done, right? Moving ahead, question number 14, where there will be multiple constraints. Okay, let's start. Point number 14. As a part of its rural upliftment program, the government has put under cultivation a farm of 96 hectares. 96 hectares to grow tomatoes to four varieties: Royal Red, Golden Yellow, Juicy Crimson, and Sunny Scarlet. So there are basically four types of tomatoes over here, and we have 96 acres, 96 hectares of 96 hectares of farm. Okay, moving ahead. Of the total 96 hectares, 68 hectares are suitable for all four varieties. That means 68 can be used for all of them. Okay, but the remaining 28 are suitable for growing only golden yellow and juicy crimson. That is the first, sorry, the second and the third one, golden yellow and juicy crimson. So basically there are four parts, right? Of which nine out of 96, 68 suitable for all four, but 28 suitable for only two, that is golden yellow and juicy crimson. right? Okay, moving ahead. The market requirement is that all four varieties of tomatoes must be produced with a minimum of 100 boxes. So again, the minimum criteria, can I say it should be kept first? We should keep aside for the minimum first. This is the basic criteria. That means 1,000 boxes of everything should be manufactured, minimum, right? Again, on the top it is given hectares, and over here it is given boxes. So we have to take the base as common, either hectares or boxes. Moving ahead, the farmers engaged have decided the area devoted to any crop should be in terms of complete hectares and not in fractions. So if it is in points, you have to make it round figure. Okay. The only limitation is not more than 22,750 boxes of any variety should be produced. That means not more than 22,750. This is the maximum variety. I cannot go beyond that. This is the maximum demand, right? So the following data is given. What is given? Annual yield, again, the boxes per hectare is given. Again, per hectare, right? Direct material cost per hectare. I want the per hectare only. Labor cost, growing per hectare, harvesting per box is given, transportation per box is given, and market price again per box is given. See, over here, three things are hectare. I want it hectares only, I'll copy this directly. But over here, per box is given. Can I say I'll just multiply with the number of boxes? On the top line, we have number of boxes. I just need to multiply with the boxes. So I'll get that per hectare, okay, basis. Okay, next. Obviously, these are all variable cost, right? These labor is variable cost, material is variable cost. This is nothing but the variable cost. Moving ahead. Fixed overhead per annum. We have growing, harvesting, transportation, and general admin. So I'll just make the totals 112 plus 74 plus 72 plus 102. That means total of 3,60,000. Total of 360. Obviously, I can also calculate the variable cost, right? I can also calculate the variable cost. These four are the variable cost. Moving ahead. Required product preference with the given constraints. Obviously, I need to check the rankings first, which is better for me, and I have to make the minimum also and the maximum also. Moving ahead, product optimum mix and the maximum profit. And next, third part we'll read at a later stage. They are telling to revise the analysis, right? So first of all, can I say I need to calculate first of all the hectares. 350 boxes per hectare, right? So how many boxes minimum you have to make? 1,000. Right? Minimum 1,000 boxes you have to make, and you can make on 1 hectare 350 units. So how many hectares are required? Can I say 350 boxes, 1 hectare? So for 1,000 boxes, how many hectares will be required? So this will give me the cross multiplication 1,000 into 1 divided by 350. This will give me 2.8. That means, can I say rounding up to 3? Minimum 3 hectares should be allotted to royal red. Similarly, I can go with golden yellow also. 100 units or 100 boxes are there per hectare. Again, 100 for 1 hectare. For 1,000, how many hectares? This will give me the answer as 10. And similarly, I can make the cross multiplication for everything. This is the minimum requirement, right? Similarly, you can go with the maximum also. How many maximum you can allot? Obviously, 350 for one. For 22,750, how much? This is the minimum requirement, and this is the maximum, not beyond that, right? You cannot go beyond that, right? So this is minimum, this is maximum. Okay, moving ahead. I've calculated over here. I've just explained you the cross multiplication also. So over here, 3 minimum hectares and maximum area also I've given. That means minimum 3, 10, 15, and 6. Minimum area required is this one, because there are 1,000 boxes required. And I cannot give a lot more than 65, 227, 325, and 126 to any of the tomatoes, right? So there are 4 conditions with us, minimum also and the maximum also, right? Moving. So I got the minimum area and the maximum area. Let's go with the contribution now, right? Let's go with the contribution. So what is the sale value per hectare? Do I have the sale value? Yes, market price is given. I'll just multiply with the number of boxes because it is per box. I get the sale value minus all the variable costs will give me the contribution, and that will give me the ranking. So I'll just calculate the ranking. I've already calculated over here the ranking part. Just pay attention over here. See, you just have the students get confused with per hectare and per box. You are taking the base as per hectare. Everything should be in per hectare. If it is in boxes, just multiply with the number of boxes given in the top line, right? So I've taken the sales per hectare again. How did I calculate? I'll just show you the calculation once. 350 was the boxes, and there was selling price. There was selling price. So 350 into 153.8, 100 into 158.7, 70 into 183.8 and 180 into 222.7, right? So these four are the sales, right? The variable cost, two variable cost was given, material and labor. So material, it was given per hectare, I have copy pasted. Labor, growing was given per hectare, but again harvesting was given per box, so I've just multiplied by 350 boxes. Transportation, again it was given per box, it again multiplied with the number of boxes, right? So this will give me the contribution, again the word is per hectare. So if I closely watch Royal, Golden, Juicy, and Sunny. So we have four, and of which 9310 is the first, 770 negative, 1316 is third, and 50464 fourth. And now I will give the ranking. And now I will give the ranking is 1, 2 is to the last product, third is this one, and obviously fourth is the loss. Obviously, you should say, sir, we should not make the product which is loss, but I have to give minimum area to that. I have to give minimum area because a minimum area should be allotted because it is given in the constraint section, right? So it is minimum and maximum also. So how many minimum area is required? 3, 10, 15, and 6. That means 21, 31, 34. Out of the 96 hectares we are having right now, 96 hectares, the minimum area should be allotted to 3, 10, 15, and 6. This should be the minimum. And of the maximum, you can utilize anywhere you want. But of that also, 28 is suitable only for these two products. Only for these two products. So how will I use the ranking? How will I use the ranking? See over here, I've given the distribution of all. Please pay attention. Of the total 96 sectors, I've separated 68 and 28. 68 is available for all, and 28 is available only for the two products, which is Golden and Juice. Of the 68, what will you do? How will you rank? Can I say? I should go with the first product itself, but obviously you should have to go with the minimum also, the minimum part also. So minimum area for first was 3, 10, 15, and 6, right? Minimum area was 3, 10, 15, and 6. I will get allot 10 from here. Why 10 from here? See, this is the total, right? See, if this is 68, it is available for all. You can cultivate any product, but this remaining 96 minus 68 was 28. This 28 is only available for Golden, Yellow, and Juicy. Can I say I will give the minimum area from here? I'll give the minimum area from here, and for all the minimum, I'll give the minimum area from here, because if I give the minimum area from here or from the first part, this cannot be used for the other products, right? So I'll utilize from the minimum area to cultivate from 28 hectares, right? So I'll give the minimum area from there. Next, so minimum for Golden, Yellow is 10, and minimum from Juicy is 15. I have already calculated, right? So of the 28, I will give to 10 and 15, right? Now, can you please tell me extra 3 hectares you would utilize for which product? Will it be Golden or will it be Juicy? Obviously, the ranking is better, right? I'll just check the ranking. Which ranking is better? The ranking is 3 for Juicy and 4 for Golden, Yellow. So obviously, I'll go with 3. So the next utilization should be 3. The next utilization should be 3, and we should be allotted only to the Juicy one, right? The Juicy. Next, available for all. Obviously, I'll give the minimum first. The minimum was 3 and 6. The first and the fourth product, the 3 and 6. And now the remaining. Remaining part can be replaced from what? Obviously, can I say the maximum area? The maximum profit is 9310. Maximum contribution. I should give it to that, right? I've separated the minimum and how many extra I can give to this. Obviously, I should not go beyond maximum. The maximum is 65. Of the 65, I have already allotted 3 to it. That means 62 is remaining. 62 I can give. How many balance I am left with? 59. So I can give 59 because maximum was 65. So I've written over here balance to royal rate subject to max. See, I'll explain you again in the table. If this is the drawing, and this 28 hectares can be used with Golden, Yellow, and Juicy Crimson. Only to these two, right? And the 68 hectares can be utilized for 4. What are the name for 4? All of them. I'll just take Royal, Golden, Juicy, and Sunny. Okay. Royal, golden, juicy, and sunny. Right now, of the 28 hectares, obviously I have to give minimum area to everything, right? Minimum area to everything. So minimum utilized from this, give the minimum area from this golden and juicy, and to royal and sunny from here, the minimum area. First of all, give the allotment of minimum because I have to make these things, right? And now, whatever the balance is left after giving the minimum, can I say I will go with the maximum profit? Maximum profit. What is giving me the maximum profit? The royal. The royal is giving the maximum profit, right? Can I utilize royal from here? The answer is no. I cannot go royal from there because over here 25 hectares were utilized. 25, the minimum area. 3 was balance. 3 was balance. Can I go with royal? The answer is no. Why? Because that 28 cannot be used for royal. So I have to give to a product which will give me the highest profit among golden and juicy, and that is juicy. So I'm allotting this 3 to juicy, right? This is 28. Coming back to 68. I have allotted the minimum area first. Minimum area because I have to make those minimum units. After that, I will give that the remaining area to royal because that is giving me the maximum profit. But can I make it unlimited? The answer is no. There is a maximum cap. The maximum cap is total of 65. So minimum area allotted to royal was 3. That means balance I can use 62 maximum. 62 can be utilized more because total 65 I cannot go beyond 65. Right? I cannot go beyond 65. So maximum is 62. How much area is balance left? It is only 59. So can I use 59 with royal? No, I have given the royal. So now you can check. Now you can check the diagram of the 96. How I have allotted. I have allotted 96, 68 over here, 28 over here. Minimum portions of golden and minimum portion of juicy I have given from the second part because those are only restricted to those two, right? And minimum portion of the other two I have given from this part, from 68. Now, the balance left, obviously, I'll go with the product which will give me the highest amongst the golden and juicy, and that is juicy. And over here, I will go only to royal because the highest contribution is given by royal, right? This is the answer. Now, can I go beyond 59? Yes, up to 62 only I can go, but I have only 59 hectares left. So this will be my answer, right? So I can now choose how much is total royal rate. Total royal, you can say 3 plus 59, 62 hectares I am giving to royal. Minimum of scarlet, you are giving 6. Golden yellow, although loss making, but you have to allot 10 because there is a minimum constraint, right? And 3 hectares and 15 hectares to juicy. That means juicy is 18 hectares. This is how you will give the allotment, right? This is the allotment, and now what you have to do, you just have to multiply with the contribution and you get the answer. Now, the second portion. See, I'm reading the third part now. I've already calculated the product reference, obviously the ranking and the optimum product mix. I've already given to you with the diagram, with the help of the diagram. And now point number C. Please pay attention on point number C. A nationalized bank has come forward to help in an improvement program for the piece of 28 hectares in which golden yellow and juicy crimson used to grow with a loan of 50,000 at a very nominal rate of 6%. Now what they are telling, I will give you a loan of 50,000 at the rate 6%. This will help you to utilize that 28 to everyone. That means after this improvement is carried out, there will be a saving of 12.5 per box. Again, they have given per box in the harvesting of golden yellow, that means which was a loss-making product. And 28 hectares will be suitable for growing royal red in addition to existing golden yellow and juicy. That means what they are telling, now it will also be available for royal red. That means, can I say, of the minimum, I was having 3 hectares extra. Was that 3 used by royal? Can it be used by royal? The answer is yes, because maximum cap was 65. I was utilized only 62. Can I utilize that 3 for royal? The answer is yes. That means there are 2 things given over here. I can utilize the balance of 3 in the royal, and also there will be profit in golden yellow of 12.5 per box again, right? I just need to calculate the extra saving. So just pay attention on the second part over here. I've given the first part. Okay. So royal red, can I say I'll now make 65? Why 65? Because 3 hectares can be utilized from the second part also. 28 hectares, right? Okay. And this I have changed. Why did I change this? Why did I change this? See, of the previous one, I have just transferred 3 hectares over here. Why did I transfer 3 hectares from juicy to royal? For the simple reason, Juicy was given as the third preference. Why was I allotting to Juicy? Because 28 hectares, of the 28 hectares, 3 hectares was left, and I should have to give to the maximum profit making. The maximum out of these two was Juicy, right? And therefore I was giving to Juicy. But what I've done in the next scenario, I've just given 3 from Juicy to Royal Red. That is the only change I have done, right? And also there will be saving in, there will be a certain saving 12.5 per box. So that means there will be a profit. How to calculate that 480 I have given over here. Previous contribution was 770 negative, which I have already calculated, right? And what was saving? It was 12.5 and 100 boxes was per there. That means 1250 was the saving. That means it will now be profit making with 480, right? So is it beneficial? Is it beneficial? Please. Previously you were earning a profit of 263. Now you are earning a profit of 296. That means, can I say the profit has been increased even if I have calculated the interest cost over here? 50,000 to 6, the fixed interest cost has been increased, and therefore I can clearly see that we have increased the profit. Should I go with the loan? The answer is yes. You should take the loan at a nominal interest, and you should increase the capacity by giving that 3 actors to the Royal. So this was the answer. I hope everyone got this point. How to utilize the minimum also, the maximum also, and how to make the decision making concept using the minimum and the maximum criteria. If you have any queries in this, please let me know, or else I can proceed with the next question. Yes, thank you everyone. Okay, let's proceed. I hope the point is clear, everyone. Moving ahead. Yes, the important question. Actually, this was a question asked in June 21st for 14 marks. That is the recent paper, and is one very easy question. One very easy question. Okay, I'll just start reading the question. Please pay attention. Zoyan Limited is currently manufacturing 5,000 units of product ZN100 annually, making full use of its machine capacity. That means they are making a product which is named as ZN100, and they are utilizing the full capacity. Okay. The selling price and the total cost per unit is as follows. So every data is given to you ready, right? The selling price per unit is given. Okay. Direct material 200 rupees. The variable machine operating cost 100 per hour is 150. So you tell me how many hours are there now. Can I say this is rupees 100 per hour and the total cost is 150. So by multiplying by how many hours you will get the answer. Obviously the answer is 1. That means to make one product, 1.5 hours are required. 1.5 hours are required. And how many units are you making right now? It is given in the top line, 5,000. That means, can I say the total machine hours available with me? Total machine hours available is 5,000 into 1.5, which will give me 7,500 hours. 7,500 hours, right? This is the total answer. That is the total machine hours. I don't know whether it will be required or not, but you have to calculate that. I have already explained you. If at all there is per hour basis given, you just try to calculate every answer. Okay, moving ahead. Manufacturing overhead cost is given, marketing and admin cost is given, and operating income, that is profit, is given. The only point over here is, over here they have clearly mentioned it is variable. Direct material is obviously variable, but from these two, it is not mentioned whether it is fixed or variable. So we just need to calculate that part. Okay, moving ahead. Zoyan Limited can sell 3,000 units of ZN100 if it can outsource those additional units. That means what they're telling, you have the capacity to manufacture 5,000, and obviously you cannot increase your capacity. So make 5,000, sell it, and also you can sell more 3,000. That means the total demand is 8,000 for ZN100. The total demand is 8,000, right? 5,000 you make it, and 3,000 you can purchase from another supplier and sell in the market. Obviously, if that is beneficial to you. Okay, moving ahead. AOB Limited, a supplier of quality products, has agreed to supply 6,000 of ZN100. That means he can provide you up to 6,000, not more than that. That means you can manufacture 5,000. If you want 1,000, 2,000, 3,000, he can maximum supply 6,000. He cannot provide you with 8,000. That means if you are the company, you are Zoyan. If you are Zoyan, you can sell 8,000, but you just have the capacity to produce 5,000. There is another supplier AOB named. He can provide you. He can provide, that is, you can purchase maximum 6,000. Obviously, there is no need as of now. I will purchase only 3,000 if it is profitable, and I can sell in the market. Obviously, if I purchase more than that, it is not profitable because I can make 5,000, right? Okay, moving ahead to the next question. The next point. ZN100 per year at a price of 650 per unit delivered at Zoyan's plant. That means what he is telling, he is giving you at 650. So can I say it is profitable for me? Yes, because you can purchase at 650 and you can sell at 900. Obviously, it is profitable, right? It is profitable. Moving ahead. Zoyan Limited can use its facility to produce an alternative product ZN200. That means what they are telling, if you don't want to make ZN100, if you don't want to make ZN100, you can go with the another product which is ZN200. Obviously, now we have to check which is better for us. ZN100 is better or ZN200 is better. It can sell up to 12,000 units of ZN200 annually. ZN100 was 5,000, ZN200 is 12,000. Maximum you can sell 12,000. Okay. Estimated selling price and total cost is given as below. So the selling price is 600. The selling price is 600. Cost per unit, direct material is 200. Again, the variable is 100 per hour. But over here, it is only given 50. The highlighted point is 50. Can I say it is only 0.5 hours then? It is only 0.5 hours then. Now you tell. Maximum, how many units can you make? It is 12,000. 12,000 into how many hours will be there? 0.5. That means, can I say 12,000 into 0.5? 6,000 hours will be utilized for it. But how many hours do you have? 7,500, which you have already calculated. That means I am having a balance capacity of 1,500 hours. I'm having a balance capacity of 1,500 hours. The main game was here. Moving ahead. Other information pertaining to the operation of Zoyan Limited is as follows. Zoyan Limited use machine hours on the basis of assigning fixed manufacturing overheads. The fixed manufacturing overheads for the current year is rupees 3 lakh, and these costs will not be affected by the products. That means even if you go with ZN100 or ZN200, this won't change because it is fixed, right? This is the marginal approach. So can I say 3 lakh divided by how many hours? 7,500 hours, because it is clearly mentioned it is based on fixed manufacturing hours. So it is 3 lakh divided by 7,500. Can I say it will give me 40 per hour? Yes, again, it is per hour, right? Per hour. How many hours are required? 1.5. So 1.5 into 40 will give me 60. Finally, I got out of this 180, 60 is fixed. That means clearly mentioned variable will be 120. The very important point in this question was to bifurcate. So using this information, rupees 100 per machine hour, I calculated the number of hours first. Then using that number of hours only, I calculated the fixed and the variable cost. This was the important thing. Okay, moving on. Variable marketing and admin cost per unit is given. Variable, now we are clearly given marketing and admin. Of the 200, variable is clearly mentioned. Variable is clearly given. What is the variable? Manufactured ZN100. That means if you manufacture, you incur 80 rupees. Okay. But if you purchase, the selling expenses will be 40 only. That means variable cost will be incurred 40 also, right? That means you can purchase at 650 plus 40 will be incurred. That means 690 will be incurred, and you can sell at 900. Can I say it is still profitable? The answer is yes. You will go with it. Okay. Moving ahead. Fixed marketing and admin cost is 6 lakh. These costs will be affected by the products. Truly speaking, if you check the question, The profit is not asked. So this is actually not relevant for us. Okay. They have just given to confuse you. Moving ahead. First point. Analyze the contribution per unit of manufactured ZN100 and manufactured ZN200. Now, what you have to do is you just have to calculate the contribution. It's very easy. How do you calculate contribution? This selling price minus the variable cost will give me contribution. Now, I have already provided you the hint. I have already provided a hint, right? Can you tell me what is the contribution for ZN100 now? ZN100. See, 900 is the selling price, material and variable 100 and 150. Of this 180, 120 is variable. And of this 200, variable is clearly mentioned over here, 80 rupees. If you manufacture 80, right? So I'll just clean this side and will explain you. So can I say of this 180, 60 is fixed because it was 40 per hour, 120 is variable. 120 is variable. And of this 120, variable is clearly mentioned as 80 and remaining will be fixed. Okay. The data is in front of you. I need the contribution from ZN100. Please be quick. I want everyone to be active. I want the contribution per unit, which is very simple. A basic group one intercuff HGPA, right? Yes, give me the answer. I want the contribution per unit quick for ZN100. Yes, everyone, be quick. 900, 200, 150, 80, 120, and 80. 900 is the selling price. 200, 150 is the variable cost. 120 again is the variable cost, and 80 again is the variable cost. So 900 minus 200 minus 150 minus 200. Yes. Tushar, can you please confirm? Okay, you have already calculated per hour also. Okay. So it is 350, right? Material, variable, manufacturing, and marketing. So I'm getting the answer as 350. Can I calculate the same thing? Can I calculate the same thing for ZN200 also? Yes. So I'll go down there with the ZN200 part. ZN200 part. See, this is variable cost, this is variable cost. Of this 60, how much is fixed and how much is variable? It is clearly mentioned. Manufacturing overhead is 40 rupees per hour, but it's not per hour. You want only for half an hour, right? So for half an hour, it will be 20. That means fixed will be 20. Variable will be 40. And over here, 60, it is clearly given. 60 is clearly given. Of this, 60 is variable. So the balance is fixed, which is 50. So 200, this one, and this one. Please calculate. Yes, and correct answers. Yes. So I'm getting the contribution, right? And now if I ask you how will you give ranking, obviously you need to divide by the machine hour because the constraint is machine hour, right? So just divide by 1.5 and 0.5. Very easy. So over here, if you can clearly see, I've given the answer 900, 600. Variable is 200, 150, 120, and 8. Over here, I have given all the calculations. So 350 and 250, I'm getting the contribution, right? Just divide by the machine hours and you get the answers. Machine hours is 233.33 and 500. Ranking is 1 and 2. Now, since you got the ranking as 1 for ZN200, can I say I'll first utilize everything which can be made for ZN200? Yes. How many hours were there with you? 7,500 hours were there. And for ZN200, only 6,000 hours were required. So can I say 59 hours are pending with you? 59 hours you are saved, right? And what will you do with 1500? Can I say you can utilize this for making ZN100. That means you can utilize this for making ZN100. How many units will you be able to make? ZN100 requires 1.5 hours. So 1500 divided by 1.5. This will give you 1000 units. This will give you 1000 units. Now tell me, what was the demand of ZN100? The demand was 8000, of which you can make only 1000. So can you purchase from outside? Yes. How much you have to purchase? 7000. But is he providing 7000 to you? The answer is no. How much you will purchase then? Obviously 6000. Although you have a demand of 8000, but since the maximum contribution, the ranking is for ZN200, I will not utilize that for ZN100, but I will go with 200. So first of all, I made 6000. I took 6000 hours and I utilized to make 12,000 units, which takes 0.5 hours for ZN200. That is the second product. I was left with 1500 hours. 1500 hours I utilized to make ZN100. Of this 1500, I was able to make only 1000 units. But the demand for ZN100 is 8000. So how many units can be purchased? Should be purchased 7000. But you have only 6000, which is the supplier is willing to supply. So I'll take 600. So 6000 actually profitable to you? The answer is yes, because the selling price was 900, the purchase cost was 650, and only the 40 rupees were variable expenses. That's it. So can I say you are still left with 210 rupees profit? So will it be profitable? The answer is yes. So let's see what they've asked in the question. First, analyze the contribution. We have already taken. Second, just 1 minute. Yeah. Second, analyze the contribution per unit between ZN100 manufactured. I've already calculated. There's 350 and purchased ZN100. So if I purchased from outside, what was the selling price? Obviously 900. 650 was the purchase cost and 40 rupees was the variable. 210 is the answer. So can I say I should obviously go with manufacture that rather than purchase? Yes, but you are able to manufacture only 1000. Next point, what they have asked: calculate the quantity of each product that Zoyan Limited should manufacture and or purchase to maximum operating income. So can I say of the 7500 hours, you should make ZN200, that is the second product, 12,000 units, right? And then you should make ZN100, but how many units will be able to make? Only 1000. You can sell more 7000, but you are able to purchase only 6000. So purchase ZN100, 6000, and that's it. This was only asked, not the profit statement, nothing. You just have to give this answer, right? So I hope you got this point. It was one easy question asked for 14 marks. I've just given the calculations over here to make it easy for you. How many hours were required? 1.5. So total hours was 7500. 40 rupees per hour. The fixed cost was 60 and 20. And from that 180, I removed 60 and the variable part. So I've given the step-by-step bifurcation of the fixed and the variable cost, right? And then the statement. So I have given over here, total hours available was 7500. Utilize this for ZN200 because it was given the first ranking. 1500 were left, 1000 units you can manufacture. So of the 8000, 1000 can be produced, 7000 could be purchased, but subject to maximum of 6000 because the supplier is only giving me 6000. Then the summary: 12,000, 1000, and 6000. These two should be produced and this should be purchased. So this is the answer. This was 14 marks. So I've given a lot of working notes for this question, but it is not actually required. You can skip that part. I've just given because if you go through the notes, you should be able to know from where did you get the answer, right? So from my point of view, this 14 marks was not at all tough, which was asked in the previous examination. So this was the last question on marginal. I hope everyone got this point, and I've covered every variety. If you can check now, see, I've given a drawing in the beginning. I've covered the basic parts. I've covered indifference, shutdown, sales mix, opportunity limiting. Make or buy also covered. Making is better or buying is better. If you remember Super X machine, Janata machine, and so on, right? Should you accept the order? The special medal question, right? Fixation of selling price was very important question, wherein the working capital came into picture, the cost of sales, the cost sheet, every concept was mixed in this question, right? the profit making with minimum requirement. That means you have to keep the minimum. That is the if you remember that ABCD question, right? Next, which product to buy from the market, the lowest cost you should buy, right? And even if you should produce the maximum demand, right? And with the multiple limiting factor. The multiple limiting factor is nothing but the golden, yellow, and juicy question, right? There was having a multiple constraint, minimum also and the maximum also. So there were two limiting factors over there. So I hope everyone got this point, and I have covered every variety of marginal, including the recent paper questions, right? Okay, moving ahead to the next. Okay, before proceeding ahead, see, I'm taking a marathon today. I have covered a variety of questions, right? Also, I would suggest that you can refer the previous marathon also, because it has also got a lot of variety of questions. So if you watch that also and this also, maximum variety of questions will be covered, and I don't think there will be many other questions which will be asked in the examination. The base should be from these questions only, right? Okay, moving ahead. Transfer price. Now, what exactly is transfer price? See, it is very simple. Transfer price is nothing but from at the price at which the intern one department, that is one division, transfers to the other division. One division transfers to the other division. It is that price. Point to be noted is transfer price does not impact the company profit. Does not impact the company profit. Okay, why will division A transfer to division B? If this is division A, this is division B. Why will they transfer? Because division A's output, the finished product for this, is becomes the input for division B. The best example is the pen and the refill. See, division A is making refills. Division A is making refills, right? And has an idle capacity. Division A is making pen. So to make a pen, obviously there will be a refill cost also. So what can division B do? He can buy the refills from the outside supply. He can buy the refills from the outside supply. Instead of buying the refill from the outside supply, division A can also transfer it. So why to purchase from outside when you have the internal transfers available, right? Obviously, division A will charge division B. Okay, let's say he is the brother, he is from the same department, same from the same company. I should not earn profit. But obviously, if division A supplies to division B, there will be certain minimum cost associated with it. So should I charge that minimum? The answer is yes. So over here, what should be that minimum cost? It should be obviously the variable cost. Simple. See, if I want to make a pen, and if I'm purchasing a refill from outside, why should I purchase the refill from outside when one of the department is making that refill making that refill also? So I'll tell him, just make the refill and give it to me. So obviously he will incur a variable cost. So I'll give him the variable cost and I'll take that. But since all the division managers are separately responsible for their profits, they are the profit centers, right? So obviously division A must say that I also want profit. So will division B give him profit? The answer is yes. They can give profit. They can give profit, but obviously he will not give a price which he is getting from the outside supply. If he is getting from the outside supply, he will not pay more than that, right? I'll explain you with a short example. See, if there is division A, it has a capacity, total capacity to make 10,000 units. Division A can make 10,000 units. Let's say 10,000 refills, okay, on the pen and the refill example. 10,000 refills. To make it to be presently he is making only 7,000 units. Now, why is he making only 7,000? Because the market demand will be lower than that, right? So he is just making 7,000. That means he is not utilizing full. He is not utilizing full. So he is utilizing only 7,000 units. He is utilizing only 7,000 units. Moving ahead. Can I say to make this 7,000, there will be variable cost? The answer is yes. Let's say the variable cost is rupees 7 per unit. The variable cost to make that refill is 7. Okay. Now, there is another division B. There is another division B which is from the same company, from the same factory, or so from the same organization. Okay. These are the manufacturers of pen. These are the manufacturers of pen. And division B is asking division A. Division B is asking division A. Division B is asking for the balance 3000 units. Balance 3000. I'll say refills. Why is he asking? Because he's making a pen, he needs refill, right? And as of now, he can get the refill from the supplier, outside supplier. The supplier is giving at rupees 10. Can I say he should not buy it from at 10, but he should take that at 7? The answer is yes. It is very simple. But this presently A is selling the refills in the market because it has a ready market. It is selling the refill at a cost of rupees, let's say 9 per unit. He's charging 9 rupees per unit, and the supplier is giving it 10. Okay, now tell me, what should be the minimum transfer price? First of all, I'll ask you, is division A, you being the manager of division A, do you have that ideal capacity? The answer is yes. You have the ideal capacity of 3000. Can you give 3000 to him? The answer is yes. So he is just a brother to you. Just give him at the variable cost. That is the minimum transfer. It is very simple. That is, you should charge only 7 rupees, not more than that. It is very easy. Okay, just charge 7 rupees. But now comes the problem. What he's asking for, he's asking for, don't give me 3000, but give me 3500. Okay, now do you have the idle capacity? The answer is yes. How much idle capacity do you have? You have only 3000. What is division B telling you? Division B is telling, don't sell in the market 7000, sell only 6500 and give 3500 to me. Now, can I say there will be a problem now? What problem? Because over here you were earning something, right? How much were you earning? You were earning 2 rupees. Will you be able to earn that 2 rupees now by transferring to him? The answer is, can I say you will forego something? The answer is yes. That becomes the opportunity cost, and that should also be charged in the transfer price. Now, how to set the transfer price? See, obviously, I'll charge the variable cost from you. I have to charge the bare minimum. That is the variable cost, the making cost, right? So, how much will I charge? Obviously, I'll charge 3500 units into 7 rupees. This is the minimum answer. Plus, did I forego some profit? The answer is yes. I did forego contribution. On how many units? See, I have the capacity to sell you 3000. I can give you 3000 and I'm not earning anything out of it because anyways it was idle capacity. But if you ask me 3500, was I able to sell these 500 units in the market? Yes. Was I able to earn on that? The answer is yes. So give me that. If you want it, if you are telling not to sell in the market, then whatever I'm earning from the outside market, you have to give me that. So that is the opportunity lost. That is the opportunity, right? So how much opportunity was lost? 500 into 2. That is 1000. That is 1000. So if at all you are not allowing me to sell in the market, whatever I'm losing now, you have to pay. Simple as that. Okay. Divided by how many units I'm supplying? 3500 units. So give me the variable cost and give me my opportunity cost. If I'm losing out because of you, I want you to bear that. Simple. So how much is this? 3500 into 7, 500 into 2 divided by 3500. So the answer will be 7.2857 this time and not 7 this time because I was losing out on something. So what is this 500 into 2? This is the opportunity cost, right? Okay, there are two more things in this. There are two more things. See, one example. Mic check. I don't think there is an issue. Others, please check. Yes, other students, please check. Am I audible to you? Hmm. Satya, I think there is a problem at your end. Okay, I'll just continue. Okay, so 7.28. Okay, this is the minimum price I should be charging. So If I ask you what is the minimum transfer price, it is the variable cost to make, obviously the variable plus the contribution lost. I can also say there is the opportunity cost. If I lose out on something because of you, I want it. I want it from you, right? Okay. One more cost can be added. One more cost can be added, and that is any modification cost, if any. Modification cost, if any. If at all there is any modification, you have to pay, right? Let's say I was providing with the refill, right? The refill cost was 7 rupees, the making cost, but the pen size was a bit lower, a bit smaller in size. So what division B asked you? Division B, he asked you to cut a bit of that refill and then supply. So for cutting that, obviously you need to pay to the labor. You have to make that labor available, and or the machine, you utilize machine and then cut it. Let's say a labor, and labor is charging 0.5 per pen per refill to cut that. Obviously, this expense won't have incurred if I would have not supplied. Can I say this expense I'm doing only for you? So this was not my expense. I'm doing it for you, right? So you also have to bear this expense. So if there's any modification cost, also you have to bear. Also you have to bear. And one new point, there can also be savings sometimes. You just have to subtract that. What is the saving part? Let's say out of the seven, 1 rupee, 1 rupee was for selling commission. That means if they sell in the market, 1 rupee was selling commission, that I was paying to the agent. But if division A is selling in the outside market, only at that time the selling commission will be incurred. But if division A is transferring to the internal division, division B, the selling commission won't be incurred. Can I say there will be a saving of 1 rupee? Yes, it should be subtracted. That is not a cost, there is a saving in cost, right? So basically, there are four things: the variable cost, add the contribution foregone, add any modification cost minus any savings, and this will give you the minimum transfer price. This will give you the minimum transfer price. Point to be noted, setting a transfer price is completely dependent upon the individual divisions, right? Because it does not impact the overall profitability of the company. The income for the other will become the cost for the second department, and therefore there will be no change in the profit overall for the overall company, right? Okay. Now, to understand this better, I'll give you 3 to 4 examples, okay, and then we'll move to the questions. Say, if there is division A, and I'll give you those examples only with the refill example. Okay, division A is making a refill. Okay, it has 10,000 units total capacity. Total capacity is 10,000. The selling price is 10 rupees per unit. He can sell. Okay, I'll just make it 20 rupees this time. That means if you are division A, you are making a refill, you can sell at 20. Okay, you can sell at 20. The variable cost to make is 14 per unit. That means, can I say you are earning a contribution of 6 per unit? Okay, fine. Moving ahead. First point. Division B. Division B wants 4,000 refills. That is 4,000 units from division A. That means the department is asking for 4,000, right? Should you supply, and at what price should you supply? There will be different conditions. Okay, I'll give you one condition. First condition: your present sales is 4,000. Your present sales is 4,000. Please tell me, if your present sales is 4,000, do you have idle capacity? Do you have idle capacity? Yes. How much idle capacity? Can I say 6,000? 6,000, right? And how much is he asking for? Only 4,000. Can I say you will give entirely from this idle capacity? Were you earning anything out of that? The answer is, can I say there is no opportunity cost? Just take the variable cost, that itself will be the transfer price, right? So what should be the minimum transfer price? Minimum transfer price should be the variable cost, which is 48. Easy. Second point. Second point, if your present sales is 6,000, that means out of this 10,000, you are selling in the market 6,000. How much idle capacity do you have? 4,000. Is he asking only for 4,000? The answer is yes. So can I say I'm not losing out on something? I'm not losing out on something. I'm giving from my idle capacity only. So the minimum transfer price again should be the variable cost. 14 only, the variable cost, right? I'm not losing out on something. If I lose it, then I'll charge from. If I'm not losing, then obviously the variable cost. So I'm just giving from my idle capacity only. I'm not earning anything out of it, right? But now comes the important point. If your present sales was 7,000, how much idle capacity do you have? You will say idle capacity is 3,000, but he is asking for 4,000. Can I say out of this 7,000, you have to give 1,000? That means out of the idle capacity, you will give 3,000. And out of this 7,000, you have to give 1,000. Can I say you will lose out on something now? You will be losing now. So what should be the minimum transfer price? How many units are there? 4,000. So obviously 4,000 units into 14 I'll be taking from you. That is the variable cost. That is the minimum cost I'll be charged. Plus I will lose out something. On how many units will you lose? 1,000. You will lose out on 1,000 units. How many rupees? The contribution. That means by transferring 1,000 units to you, I will not be able to sell in the outside market on which I was earning 6 units. That means you have to pay. So this 1,000 into 6. 1,000 units into 6. You pay me this divided by 4,000 units. Simple as that. So if you are losing out on something, you have to. So it is 4,000 into 14, 1,000 into 6, 62 divided by 4,000. This will give me the answer as 15.5 as my transfer price. This should be answer, right? And if I tell you there is a slight modification cost, just add to it. If there is any saving, just subtract from it, and that's all, right? Okay. Now, give me the answer for this. What will be your answer if your present sales, goes to 7,500? That means you have an idle capacity of 2,500. Yes. Give me the transfer price. The making cost is 14. Give me the transfer price. Yes. Others also you have to answer. Tushar, 14 is the minimum variable price. So obviously I'll not give below 14. See, I'll explain the concept again. Minimum transfer price is nothing but the variable, which is 4,000 units into 14. This I will charge from you anyhow. I'm giving you 4,000, right? If I'm giving you 4,000 refills, give me 14 rupees for that. There's a variable cost I'm making, right? Plus, if I lose out on something because of you, can I say I'm having only capacity of 2,500, but you are demanding 4,000? From where will I give? Obviously, I will not sell in the market and he will give you. If I will sell in the open market, will I earn on that? The answer is yes. Just because supplying to you, I will not be able to sell. That means I'm losing on something, right? Give me that profit. That's it. So how many units I have to supply from this? 1,500. That means I will not be able to earn from that. So 1,500 units. How many rupees was there? 6. That's it. Divided by how many units? 4,000 units. Divided by 4,000 units. So this will give me the answer. 4,000 into 14. 1,500 into 6 divided by 4,000. Yes, it is 16.25. Correct answer. Yes, everyone. Needed. You have written what, so I don't know what is your name exactly. Yes, Anna. Correct answers. Okay, 16.25. Very good. Very everyone. just stay on solving with me so that the concept will be clear here on. Okay. And if you have any query, you can ask. Okay. One important point, new point, fifth point. My present sales, my present sales is 8,000 and the ideal capacity becomes 2,000, right? Obviously, 2,000 from the ideal and 2,000 from the present. But there are two things given in this. There is slight modification cost. That means I have to adjust the machinery and I have to pay a cost of rupees, let's say, 1,800 in totality. 1,800 in totality. That means the modification cost. And there is also saving in selling commission of 0.5 per unit. That means 0.5 per unit will be saved, right? So what should be my minimum transfer price? Solve it slowly, but I want the correct answer. Okay, needed 17.2. Others? On 17.95. Okay. Yes. Okay. So please pay attention. The minimum transfer price. I told you four things, right? I told you four things. Obviously, the variable cost I will charge. If I'm losing out on something because of you, give me that price. If there is any modification cost I'm paying for you, add in the transfer price. And if there is any saving, I'll subtract. These are the 4 points, right? So first of all, the variable cost. What will be the total variable cost? The total variable cost. It will be 4,000 units into 14. You have to pay anyhow. You have to pay means you have to pay 14, right? This is the bare minimum. Plus, plus. Is there any contribution lost? Is there any contribution lost? The answer is yes. How much? See, 2,000 I was having idle, so I can give you at the variable cost. But for this 8,000, I was earning something, but I have to give 2,000 from this only. So I was earning contribution, right? So how much contribution was I earning on that 2,000 units? I was earning 6 rupees. So give me that also. Plus, plus. I paid a total modification cost of 1,800. It was not 1,800 into units, right? It was total 1,800. So 1,800 added and subtract the savings. Was there any saving? Yes, it was 0.5 per unit. How many units? 4,000. So it will be 4,000 units into 0.5. This will be a total and just divide by 4,000. Just divide by 4,000 units. This will be your final answer. So it will be 4,000 into 14, 2,000 into 6, 1,800 m plus and 4,000 into 0.5 m minus. Total of 67,800 divided by 4,000 will give me 16.95. Others, please check. 4,000 into 14 m plus 2,000 into 6 m plus 1,800 m plus and 4,000 into 0.5 m minus MRC divided by 4,000. 16.95. I've got one answer as 16.95. Others, a lot of practice is required. Yes, first of all, everyone tell me, did you get this concept? The concept of transfer pricing. There are only four things in transfer pricing: variable cost, contribution, modification, and sale. There are only four things, right? Yes, please tell me, is the point clear to everyone? I'll give some more examples because you're not very clear, and before proceeding ahead I want everyone to be clear with the basic part. सेविंग्स ओनली उन यूनिट्स पे होगी जो बाहर मार्केट में सेल नहीं किए. Yeah, actually, that is the correct point. I missed out on that. Please make the necessary correction. It was 2000, 2000 into 0.5. Yeah, please make the necessary correction. So it comes to 17 point. Yes, the correct one. I made a mistake. So please make the necessary correction. Mistakes can be made by everyone actually. Okay, so कभी कभार हो जाता है. So it is 2000. Please make the necessary correction. I was able to sell only 2000. So savings will be only on 2000, not on 2000. So this was the point. So it comes to 17.2. Okay. Uh, Others. One more question. Please pay attention. The selling price is 50. The variable cost is 35. So the contribution is 50. The total capacity, the total capacity is 15,000 units. Okay. And and division B is asking for is asking for let's change the units, 3000 units, is asking for 3000 units. And now tell me the first one. If your present sales is 15,000 itself, what should be the minimum transfer price? Yes, what should be the minimum transfer price? Yes, please tell me what should be the minimum transfer price? This is one very easy question. No, Tushar, incorrect. Yes, exactly correct. 50. Sorry, no. The answer is 50 itself. Now, tell me one thing. Tell me one thing. If obviously the minimum transfer price is variable cost, right? 35 I have to give plus. Do I have any idle capacity? The answer is no. So can I say even if I supply 1 unit to you, this 15 will entirely be my contribution lost? So if at all I do not have any idle capacity, that means whatever I'm producing, I'm able to sell in the market and I'm earning on that. If you're asking me, see, if this is a refill, I'm selling it at 50 in the market and 15,000 I'm making, 15,000 I'm selling. But from that selling, you're holding my hand and you're telling, give me 4,000. So I'll tell you, take it as the selling price itself. Because if I will give you at 35, that is the variable cost, I will lose it on 15. I want the entire 50 rupees. The entire selling price will be the transfer price. Clear? This is the point. So variable cost is 35, true, but can I say 15 is the entirely contribution cost? I was not having any idle cost. So this is the selling price. Fine. Point number two. The present sales, the present sales is only 14,000 units. Now give me the selling price. So this comes to 50. Yes. The present sales is 14,000 units. Yes, sir. Give me the answer. Okay, others check. So this, mm, 25 it cannot be, 40 or 45. I'll just calculate 3000 into 35 and 1000. That is correct. 45. 45 is the correct answer. See, they are asking for 3000 units, right? How much is the idle capacity you're having? Idle capacity. Can I say only 1000 because the total capacity is 15,000? That means this on this there is only variable cost. But on this from here I have to transfer 2000. That means here will be variable cost plus contribution, right? So what will be the minimum transfer price? 3000 units I'm giving, obviously I'll be charging 30. This is the bare minimum. 35 I have to charge because that is the bare, right? And how much am I losing? Can I say on 1000 units I'm not losing anything because that is the idle capacity, I'm not losing. But on that 2000 I was earning. On that 2000, how much was I earning? On that 2000 units I was earning 15 rupees. On that 2000 I was earning 15. Just divide by 3000 and you get the answer. So 3000 into 35 and 2000 into 15, 135 divided by 3000. So this will give you the answer as 45 and not 40. See, 1000, I have my idle capacity. On this 1000, there is no opportunity lost. But on that 2000, which I'm transferring, I was able to sell in the market. I have to give you at the contribution. So I hope everyone got this point. The answers, the students who are giving the answer as 40, please make the correction now. It is 45. What you have done is, I'll tell you. You have taken contribution on this 1000 only. See, on 1000 I was not earning anything. That was idle only. That I'm on that I'm not earning anything. But on that 2000 which I'm transferring, on that only I was earning, and that becomes my opportunity. So you might have taken 1000 over here, and that's why you are getting the answer as 40, which is incorrect. Okay. Now moving to step 2 of this transfer price. So let's see. Let's see. Division A. Division A has three products: A, B, and C. Okay. The selling price is given as 50, the selling price is given as 40 and 30. The variable cost is uh, 30, the variable cost is 20, and the variable cost is 20 again. Okay. So the contribution per unit which I'm getting, this is per unit, this is per unit, and the contribution per unit. The contribution I am earning is 20, 20 and 10. Okay, 20, 20 and 10. Divided by, let's say the labor hour is shortage. So labor hours required per unit is 5 hours for here, 4 hours, and only 1 hour, and only 1 hour. What is the contribution per labor hour? So this will give me 4, this will give me 5, and this will give me 10. If I ask you with the ranking, obviously you will say product C has the first rank, product B has the second rank, and product A has the third rank, right? This is what is given to you. Obviously you will be able to calculate. Even if the information is given to you, you'll be able to calculate, right? Labors 5, 4 and 1. Okay. Also I'm giving you the maximum demand. The maximum demand of A, B and C. The maximum demand for A is 5000, for B is 3000, and for C is 4000, right? Okay. Now please calculate how many hours will be required to complete my maximum demand. How many hours will be required to complete my maximum demand in total? How many hours will be required? Please tell me that first. Yes, how many hours are required? Tell me. 41,000. Okay. So it's very simple. 5,000 into 5, 3,000 into 4, and 4,000 into 1. These many hours are required for you. Okay. So the maximum hours required, yeah, hours required to complete the maximum demand, is for A, I require 5,000 into 5. For B, I require 3,000 into 4. And for C, I require 4,000 into 1. This is what is given, right? 25,000, 12,000, and 4,000. That means total I want 41,000 hours, right? Total I want 41,000 hours. Now please pay attention. This is step one of this question. I hope if they give you certain kind of this type of questions, you'll be able to rank it and you will be able to find the maximum hours. This is given to you, right? Okay. If not also, then also you can find it easily. Now, what I'm telling you, please pay attention. Division B wants division B wants how many units? 1,000 units. 1,000 units of product B. Apart from the external sales, what is division B asking for? Division B is asking for this product. The product which I'm able to sell, the maximum number is 3,000, right? I can sell 3,000 in the market. Also, B wants 1,000 units of that. Also, B wants 1,000 units of that, right? Okay. So obviously, I'll make it. So how many hours will be required to supply to B? How many hours will be required to supply to B? Can I say this 1,000 into 4 hours? That means B is asking for 4,000 hours. That means if I want to supply to B, if A wants to supply, if division A wants to supply 1,000 units of product B, then it will require how many hours? Can I say 4,000 hours? Yes. That means I want 4,000 hours. That means if now I take the total, 41,000 hours is what I require to complete the market demand, right? And also 4,000 he is asking, 4,000 hours, right? So can I say I'm in need of 45,000 hours in total? The answer is yes. Now please pay attention. I will be giving you one by one questions. Okay. First one. I'm talking about division A only, right? Division A only. I want to set the minimum market transfer price, right? Division A, division A has first 50,000 hours. Please tell me, are they sufficient to complete the market also and to transfer also? The answer is yes. C. Maximum demand, to fulfill the maximum demand, I want 41,000 hours. That means I'm completing my demand. Here, can I say this 9,000 is completely idle to me? I'm completing my demand with 41,000. 9,000 is completely idle. And out of this 9,000, B is asking for 4,000 hours. He is asking for 1,000 units. But obviously, if in hours, I'll say he's asking for 4,000 hours. If he is asking for 4,000 hours, can I say I'm not losing out on anything? Not even a single penny I'm earning on the 9,000. That 9,000 are free for me, right? That 9,000 are free for me. So I will give you at the variable cost itself. Now please pay attention. What is the variable cost for B? The variable cost for B is 20. So can I say I'll just give him, okay, take it at 20. That's it, because I'm not losing out on anything. So what is the minimum transfer price? Minimum transfer price. The minimum transfer price will be the variable cost itself plus any opportunity lost. Can I say opportunity loss is zero in this scenario? So the variable cost will be 20 plus 0, which is 20. I'll give you at cost at the variable cost itself. That is the minimum transfer price, right? Because I'm not earning, I'm not losing out on anything. Okay. Point number two. Point number two. If you have only 44,000 hours, how will you utilize that 44? Can I say I will give first priority to the product which has the highest rank? So can I say I'll give to the product C? So product C is 4,000. Consider this that as if there is no transfer, right? So how will you utilize that? How will you utilize that? Obviously, I'll say product C, give how many hours to product C? How many hours to product C? 4,000, because it is the first time. 4,000 hours to product C. Okay. Out of that, after that, second rank is product B. How many hours? 12,000. Product B, 12,000 hours will be utilized, right? Okay. Third point, I'll give it to product A. Product A. Product A, how many hours are required? 25,000. Product A, 25,000 hours are required. So how many hours is total? 41. Can I say I'm left out? I'm left out with an idle capacity. I'm left out with an idle capacity of 3,000 hours. This is the balancing figure. I'm left out with 3,000 hours. I have 3,000 hours with me. That means I'm not earning anything, right? But B requires how many hours? 4,000. So can I say I will give 1,000 hours from the product which is least profitable? I will tell you. That means if I give you 3,000, see, on this there is no opportunity cost. Obviously, I'll be charging the variable cost. On this, there is no opportunity cost. But can I say from this, A is the least profit making. We have to give 1,000 hours to B. That means, can I say I'll be losing on something? Yes. How much will you use? Please pay attention. How much will you use? You will lose 1,000 hours. And what is the contribution per hour, not per unit? You're taking per hour, right? So on product A, what is the contribution per hour you are losing? Can I say I was earning 4 rupees per hour on A, and now just because I have to supply, I am giving you 1,000 hours. That means I will not be able to earn on this 1,000. Yes, that means there is opportunity cost over there. So how much will I be losing? How much will I be losing? I'll be losing, I'll be losing opportunity cost of 1,000 hours, and on that I was earning rupees 4 per hour. That means, can I say 4,000 will be lost? 4,000 will be lost. So what should be the minimum transfer price? What should be the minimum transfer price? See, I'm charging how much? 1,000 units, and at what price? 20 rupees is the variable cost, right? So I'll charge this bare minimum. 1,000 units into 20. I have to take this from plus whatever is the opportunity, and 4,000 divided by 1,000 units, divided by 1,000 units. This is the answer. So 1,000 into 20 plus 4,000 divided by 1,000. That means 24 becomes the minimum transfer price. Yes. Is everyone getting this point? Is everyone getting this point? See, if at all you want something, I have idle, take it cost to cost. But if I'm losing on something, you have to pay. I'm losing hours, right? So I've taken the contribution per hour. Obviously, you can convert it to unit also, but it will be easier if you keep it in hours. I hope everyone is getting this. Now, if you are getting this point, give me the answer for this. For the third part, you are having only, let's say, 42,000 hours. If you are having 42,000 hours, at what will be the transfer price? If you are having only 42, what will be the transfer price? Yes, Evan, I want the transfer price. Quick. Tushar, no, the answer is incorrect for sure. 20 is the variable cost, and I'm losing on something. I need to add it. Yes, everyone, please calculate quickly for your reference. I'm just scrolling it over here. Yes. Mm, adventures, whatever your name is, the answer is correct. 32. Okay, please pay attention. See, if you are having 42,000 hours, I'm asking you, don't supply it. Don't supply. How will you utilize this? Obviously, you'll say as per your ranking. So, to product C was the first rank. So, product C, how many hours will be utilized? 4,000. For product B, how many hours will be utilized? 12,000. And for product A, how many hours will be utilized? You will say 25,000. Do you still have idle capacity? The answer total was 41,000, but you are having 42, right? So can I say 1,000 is idle capacity? 1,000 is idle capacity. Can I say on this 1,000 I was not earning anything? So just give this to B. Give this to B. Is there any opportunity cost? The answer is no. There is no opportunity cost because I was not earning anything on this, right? But B is asking for 4,000 hours. From where will you give it? Obviously, from the next best possible, right? The lowest profit was given by A. I will give 3,000 hours, 3,000 hours from A to division B. Can I say I lose out on A's contribution? I will lose out on A's contribution. I will not be able to make 3,000 A for 3,000 hours, right? So, how much is the opportunity cost? Can I say 3,000 hours? And on that, I'm not earning. A is not earning, right? So, what is the contribution per hour for A? It is 4 into 4. I will lose out on 12,000. That means I will not be able to earn this 12,000 and I want this from you. So, what should be the minimum transfer price? What product are you transferring? What product are you transferring? 1,000. 1,000 of B. What is the variable cost of B? 20. That means bare minimum is 20 rupees, right? 1,000 units into 20 is the bare minimum. And was I losing out on something? Yes, I was losing out on this 12,000 because of you. Give me that also, 12,000. That is the opportunity cost divided by 1,000 units. This will give me 32. Yes, correct answers. In the comment section, not many are active. Please try to calculate the answers. I hope you are getting this point because if you do not comment, I will not be able to proceed further at a great speed. I'll have to slow it down because जब तक समझेगा नहीं मैं आगे कैसे बढ़ूंगा. I want the complete analyzation of you understanding or not. Okay, so this is 32. Moving ahead. What if I was having only 40,000 hours per week? Only 40,000 hours. How will you utilize this? Only 40,000 hours are available to you. How will you utilize this 40,000 hours? How will you utilize this 40,000 hours? Yes, everyone, give me an answer. Yes, perfect answer, Neeraj. So this is product C, this is product B, and this is product A. If you are having only 40,000, if you are having only 40,000, the utilization of the same, 412, you will give 4,000 to C as per your ranking. You will give 12,000 to B as per your ranking. And you wanted, that means you don't have any idle capacity. If you do not have any idle capacity, all the 4,000 hours will be taken from this. Give 4,000 hours to division B. You don't have any idle capacity and you are giving 24,000 hours, right? Out of which 24, and you are giving 24,000 to division B. Obviously, you'll say there is opportunity cost associated. 4,000 into 4. That means you are losing out on 16,000 rupees. Just add it to the transfer price and you get the minimum transfer price. Minimum transfer price will be 4,000, sorry, 1,000 into 20, that was the bare minimum, plus 16,000, plus 16,000 divided by 1,000 units. This will give you the answer as 36. Yes. Okay. So I think everyone is getting this point now. And I'm getting the correct answer now. Okay, fine. So I hope this point is clear, and this was the crux of transfer pricing, right? Four things involved: the variable cost, any opportunity cost associated. Third point, if there is any modification cost added to it, and if there is any saving, just subtract it from it. Okay. Moving ahead. So let's come down to the questions list now. Yeah. So the first question of transfer price which I have given is of this question only. And I'm giving you 4 to 5 minutes to analyze the question. First of all, don't think you are giving any transfers. Just try to analyze the question. Give the ranking, given the ranking statement, PQR, this product is S not R, it is PQRS. PQRS. Okay. Just go step by step. First of all, calculate the ranking. So the first thing you have to comment is the rank. And then the maximum hours required by maximum hours required for to maximum demand. Try calculating it. Yes, give me the ranking, please. First of all, I'll calculate the contribution. Okay, 4312. Others, please check. So I get the answers are correct, 4312. So first of all, what you have to do is the contribution. The market price is given, there is the selling price is given, the variable cost is the difference is contribution. Contribution divided by the labor hours will give you the contribution per hour, and then you can give the rank, which is 431. Okay. After that, maximum hours required by you. P is 3000 into 3, 9000. P requires 9000 hours. Q 3500 into 4. That means Q requires 14,000 hours. R is 2800 into 2. R requires 5600 hours. And S 1800 into 3. S requires 5400. That means the total hours which you need is 9000 plus 14,000 plus 5600 plus 5400. You yourself need 34,000 hours. You want 34,000 hours, right? Now, reading the question ahead. Okay, what is the solution first? 4312. That means R is 1, this is 2, P is, sorry, Q is 3, and P is 4. This is the order you will be making, right? 4312 is the order. That means if you are having the R's, give 5600 to R, then S, then Q, then P. This is the order which you have given. Okay, moving ahead. After that, you are given the product S can be transferred to division B. S, that means the last product. Last product. But the maximum quantity that might be required to transfer is 2000. That means they are asking for 2000 units. How many hours will be required? 2000 into 3. That means they also want 6000 hours. 6000 hours to transfer. 6000 hours to transfer, right? So now you have to calculate at what rate should you transfer. He is getting at 225. He is getting at 225, and the variable cost is 180. So you have to calculate the cost first. At what price you should transfer in different scenarios. First is 24,000, second is 32,000, and third is 30,000. See, if you are having 24,000, how will you utilize it? How will you utilize that? Obviously, you will give it the first one, R. How many hours? 5,600. After that, you will give to S. How many hours? 5,400. That means 11,000 hours left. Then you will give to Q. Then you will give to Q. But you are left only with 13,000 hours, right? You are left only with 13,000 hours. That means 5,600, 5,400, 13,000. Can I say out of this 3,000, you have to give 6,000 hours to division B? That means you will not be able to make Q for 6,000 hours. That is the opportunity. So opportunity of what product will be taken of Q, because you will not be able to make for how many hours? 6,000 hours. How did you calculate 6,000? Because you have to supply 2,000 units at 2 and which requires 3 per unit, right? So 2,000 into 3 will give me 6,000 hours, right? So I've given the calculation over here. See, it's 4312, correct answer. Then the hours required is 34,000. I want 34,000, but already I'm in short supply. I'm having only 24,000. Okay, Neeraj, the transfer price is ready. Okay, fine. Good. See, I've given the in diagram format. Of the 24,000, you will give R 5,600 because the first time, 5,400 to the second product, and the balance to product 3. But from this balance, they want a 6,000. That means you'll lose out on 6,000, and it will be contribution lost per R. On Q, how much were you earning per hour? 8.7. So I'll just give 8.75. That means 50 to 500. What product are you transferring? What product are you transferring? You are transferring S. What is the variable cost? 185. That means 185 is the bare minimum which I should charge. Bare minimum 185. 185 is the bare minimum from that 2000 units plus opportunity cost divided by 2000. So at 211, will the party take at this price? The answer is yes, because if division B, is purchasing from the supplier at 225, it will be better for him to take it from us at 11.25. That will be beneficial for him only because he is purchasing from outside market at 225. I hope the point is clear and everyone is able to solve this. Next scenario. If it is 32,000, if it is 32,000, please give me the answer. If it is 32,000, please give me the answer. How will you utilize this 32,000? How will you utilize this 32,000? First, second, third, and fourth. R, S, Q, P. It was 5,600, 5,400. 5,600, 5,400. Q wants 14,000. Balance is 7,000. Yes, others, they active, give me an answer. And if you're not getting the concept, you can really ask Alex again. Okay, 205. Neeraj, exactly the answer is 2051. If you take all the digits, you will get 205. See, uh, this is how you will utilize this 32,000. Right? This is again the marginal concept. You will give first to product R because it was the first time, then to S, then to Q, and the balance whatever left is P. Right? See, you don't have the hours to complete your maximum demand also. And now division B is telling give me 6,000 hours. Obviously, the lowest profit making will give them 6,000 hours. So can I say you will not be able to make product P now? And product B is giving how much contribution per hour? It is 6.6. That means 6.66666. So if you multiply by 6.66666, you will get the answer as 40,000, 39.39999.995. You will get the answer as 40,000. This is the contribution lost. This is the contribution lost. And what product are you giving? You are giving product S. How many units? 2,000. So what is the variable cost? 185. This is the minimum. Plus add 40,000 divided by 2,000. You will get the answer as 205. Simple. Yes. I hope everyone is getting now. So this was question number 16. A very basic question, yet important one because a lot of times these questions have been asked in the examination, right? In the past examination, not in the new syllabus, but yes, full syllabus had these questions in their examinations. Okay, moving ahead. Now, transfer price. Similar question was asked in June 24, 7 marks. Only ABC were asked. Actually, there are 4 points in this, but they have asked only 3 points. But since it was there in our book also, in my book also. So I have taken 4 points. So the complete statistic. Okay, I'm reading on the question. Please pay attention. XY company has profit center divisions X and Y, making products X and Y respectively. Each unit of Y requires 1 unit of X, and Y can sell a maximum of 50,000 in the external market. That means what they're telling. There are two departments, X, Y, and X, Y requires one product from this department, one product. Okay, X can sell in the outside market, 50,000 units at 150. Sorry, Y can sell. I'm so sorry. Y can sell in the outside market at 150. Selling price is 150. Okay. X has the capacity to produce 1 lakh units. The capacity, maximum capacity is 1 lakh units. And Y does not want 1 lakh. He is asking only for 50,000. Supply only 50,000. But let's see what can X do. The variable cost per unit is 12. That means over here, the variable cost is 12. Just try analyzing cost. That means if I make this, again, take the example of refill only. Okay. So the variable cost to make the refill is 12. And I have the capacity to make 1 lakh refills, of which Y is demanding for 20,000. Okay. Fixed costs are 7 lakh 20. X can sell the following quantities in the external market. In the external market, see, the selling price is 18. Can I say the variable cost is 12 already given to you? So how much will you on contribution will be 6 rupees. Contribution will be 6 rupees. 6 into 84,000 units, right? 84,000 you will be able to sell. But if you increase the price, the demand will be lower. If you increase the price, the demand will be lower. If you increase the price, the demand will be lower. So the very first step is, first of all, try to calculate what is your maximum contribution, what price you should set. So it is very easy. See, price is given, less variable cost will give me a contribution per unit. Can I say minus 12 will give me 6, minus 12 will give me 8, minus 12 will give me 10, minus 12 will give me 12, and minus 12 will give me 14. That means this is the contribution. Just multiply with the number of units, you get the total contribution. Whichever gives me the highest contribution, I will go with that. Simple, right? Whichever gives me the highest contribution. So I'll just scroll to the solution. I'm just avoiding these calculations because this is very easy. You just need to multiply. Okay. So the first one I've calculated. See, I've given you the selling price, I've given the variable cost, I've given the contribution for you. multiply with number of units, and this will give me the total contribution. So which contribution, at what level the contribution is highest, please check. It's 5 lakh 4,000, 6 lakh 8,000, 7 lakh 768, and 786. Can I say the maximum answer I'm getting over here? And this is at what price? This is at 12. And how many units I will be able to sell? 64,000. I will be able to sell 64. That means what should I do? What should I do? I have given the different prices, and I decided to keep the selling price at 24, on which I will be able to only sell 64,000, and I'm happy selling that because I will be able to earn 7,68,000. This is X point of view. This is point of view of X. Now please tell me, you have decided what to do this of this 1 lakh. Can I say you will sell 64,000 in the outside market? In the outside market, and will you earn, how much will you earn? You will earn 7,68,000. Obviously this is the contribution you will earn, right? This is what is given. But why is asking supply 50,000 to me? Obviously I'll lose out on some, right? I will lose out on some. So moving ahead, why can purchase its requirement from the external market at rupees 22 per unit? That means if I will not supply, why has to purchase from the outside market at rupees 22? Right, this is given. The variable cost is 12 and he is supplying at 22. Moving ahead, but has to incur a bulk transportation cost of 150 for any quantity which will not be incurred upon transfer from X. See, if he is purchasing from outside market, let's say example, you give him the balance 36,000 only. The balance 36,000 only you would give it to him because you were having idle capacity. You decided to sell only 64 and you were happy in that, right? If you give 36, how will Y make his demand complete? Obviously, he purchased from the outside market 14,000. But to purchase this 14,000, he has to pay 22 plus he also have to incur 1,50,000 as the transportation. Right? So what will be beneficial for you? What will be beneficial? Supply 36 and ask Y to take it from the outside market, or else supply entirely 50,000, and you lose out on something which will be charged to the transport. Obviously, there are two options. Either tell Y to purchase it from the outside market. I will give you 36. See, I'll give you the summary now. This is division X. This is division X. What is the total capacity? The total capacity is 1 lakh units, right? Out of which he can sell in the market. How many units? 64,000 units, on which he will earn contribution of 7,68,000. How did we take this? Because I have taken the respective prices and I got this quantity as the best quantity for me, right? I have the idle capacity of 36,000 units, right? The variable cost per unit is 12 rupees. That means the variable cost of refill, if I say, is 12 rupees. Now, if I give only 36,000, obviously I will give at 12 because this is the minimum transfer price, right? But division Y requires, how much does it require? It requires 50,000 units. So there are two options with you. Either you provide only 36 and ask him to take 14,000 from the outside market, or else what you do is you provide him 50,000 and whatever you are losing around, you charge it to that product. That means if you are charging variable cost is 12 plus, obviously if you supply only 50,000 in the market, 14,000 on the 14,000 you will not be able to earn. That is the opportunity cost. Add it to it and just check whether it is beneficial to you or not, right? So let's check with the solution. See, now first of all, please make this thing clear. If you give him 50,000 entire, first option was give him only 36,000 at 12 rupees. Give him only 36,000 at 12. This was one of the scenarios. But if you give him 50,000, you will be able to sell 50,000, but you will be able to sell 50,000 at what price? If you're selling 54,000 or less, you will be selling at 26 and not 24 this time. Obviously, if I'm giving 50,000 to another division, I will supply only, I'll sell only 50,000, and 54,000 I won't sell at 24. Then I will sell at 26. Simple. So if I sell at 26, what is the contribution I'm earning? 14 rupees. So on that 14, I'll be earning on 50,000 units. That means 7 lakh I can earn. That means I'll tell to him, see, if this is the scenario, this thing 36,000 is idle, right? Can I say I have to take 14,000 from this to supply to be, I have to give 14,000 units and not to sell in the market, but to give to the division B. I will not sell 14,000 in the market, but give 14,000 to division B. Will I lose out on something? The answer is yes. But by giving 14,000 to him, obviously I will not keep the selling price to 24 this time. 24 I was using because I was able to sell more than 54. If I'm selling only 54, why will I say 24? I'll say 26. That means a contribution of 14 is earned on 50,000 units. I will be able to earn 7 lakh rupees. So can I say, just because I am supplying to division B, I will not be able to earn the 68,000 rupees. This is the contribution loss. This is the contribution loss. I will not be able to earn the 68,000, right? So I've given the solution. Please, I'm reading out the question solution. Please pay attention. In the absence of demand from Y, the optimal strategy of Y should be to sell 64,000 units since it gives the maximum contribution. This is the first point I've already given. If X has to supply 50,000 units to Y, then it can only supply 50,000 units for external sales at rupees 26 and not 24. Right? That means he will be earning 7 lakh. He will be earning 7 lakh. Clearly indicates 68,000 will be lost. So what will be the minimum transfer price? Can I say I'll add 68,000 to the transfer price? So 50,000 into 12 was the bare minimum variable cost. Obviously, minimum variable cost I will charge, and the opportunity cost is 68,000 I will be charging. So the transfer price minimum is 13.6. Right? I'll read the question now. I'll read the question. Point number B. What will be the minimum transfer price that X will agree if X has to supply 50,000? What price will be offered as the max? What is the maximum price the Y will give? Obviously, 22 is purchasing from outside plus 1,50,000 he will incur transportation. Can I say if he purchases at 22 also, he will save on this variable cost. He will save on this transportation. So can I say the maximum price he will give is 22, not more than that, right? He will give it 22 because if you supply 40,000, he will still have to incur that 1,50,000 for the balance. That means he will give you maximum 22. So over here, minimum and maximum both are right. Minimum is 13.36 and the maximum he will offer is 22. See, if you are division B, let's say I'm division A, I'm making the refill. You are division B, you are making a pen. Okay? I'm giving you this refill at a minimum price of 13.36. But I know, in my mind, I know you are purchasing refill from outside at rupees 22. Plus, you will also incur transportation. So I will not give you at 13.36. I will tell you, I will give you at 22. You want to buy it or not? So you will think, if you buy from me only at 22, still you will save that transportation cost. Still you will save the transportation cost, right? So obviously the maximum price which you will be ready to pay me is 22. And now it will depend upon us how will we bargain with this, right? How will we bargain with each other? Obviously, the company will not incur any profit or loss because it is internal transfer, right? So transfer price does not is not relevant for the company's decision making. Okay. Now, however, if X is strong enough, it can demand a price of 22, which Y is paying to the outside supply. If I'm strong, I will say, give me 22. I will not give you below 20. Obviously, you will still pay because you will still save 1,50,000, right? Y will not be paying anything above its landed cost, that is 25. 25 से ऊपर आप नहीं दोगे because how come 25? 22 was the price and plus 1,50,000 was supposed to be incurred, right? On 1,50,000, that means 3 rupees per unit you were paying transportation also. So you will not pay anything beyond 25 because transport will be your landed cost. So landed cost becomes 25 over here. See, if Y is acceptable to partial supplies, what will be X best strategy under no compulsion to transfer, but with the option to transfer as many units that it wants to? What will be the quantity that X will agree to transfer and the corresponding price, assuming both divisions share the benefits to be transferred equally? Now, what they're telling, we will share the benefit adha, if 50-50, right? We'll share the benefits equally. Whatever the profits are, we'll share equally. So, whatever was the minimum price, tell me, what was the minimum price? It was 13.36. What was the maximum? 25, right? Minimum was 13.36. What is the maximum? 25. Now, if I say I will not sell beyond 36, I'm selling this 1 lakh units. I'm selling in the market 64. I have only 36. Can I say I will give you this 36 at rupees 12 only? There is no opportunity cost. There is no opportunity cost, right? There is no opportunity cost. I will give you at 12. Take it at 12. I don't want anything because I'm I'm earning on this 64,000 and this 36,000 is idle for me. This 36,000 is idle for me. There is no compulsory that you should transfer only 50,000. There is partial supply also. Take 36,000 from me at rupees 12. At rupees 12. I don't want anything. Okay, fine. So if X can choose, X will obviously sell 64,000 for external demand and earn the maximum contribution of 768. Obviously, if I am division X, I can sell in the market. I will go with the maximum and tell you take whatever the balance of 36,000 will be transferred at 12 rupees. Okay. Why will have to incur bulk transportation of 150 still? Because even if I supply 36 to him, from where will he get that 14,000? He will take it from the outside market at 22 and plus 150 also he will pay. Even for the balance 14,000 if purchased from external, hence it will not pay anything beyond 22. Obviously, if I'm giving any parcel supplies, he will not give anything beyond 22. So what is the minimum? 12. What is the maximum? 22. What is the difference? 10. We'll distribute 50. Give 50% to me, give 50% to you. That means the transfer price becomes 70. 12 is the variable cost. I'll charge profit and 5 and 5 will subtract, will distribute. Okay. With this, Y will get a benefit of 5 and X will also get additional contribution of 5. The quantity transfer will be 36. Now from this, what will happen? See, if it is division Y, if this is division Y, what will division Y save on? He was purchasing at 22, now he will get the same product at 17. He'll get the same product at 17. Can I say he will save 5? Yes. And the variable cost was only 12 and I'm giving it 17. I will also earn 5. Simple. So we both will share 5. That's easy. Moving ahead. What is the fourth point asked? What is the best strategy for the company? Will the company's overall profit differ? Now, this was not asked in the examination. I'm just explaining. Differ from the individual decisions, compute the best benefits decided at indifference point from the divisional best and company best strategies. Now, what they have asked is, will it be beneficial for the company also if this take it from outside supply? See, I've given for the company as a whole. Please pay attention. Best strategy for the company as a whole will be that X supplies 50,000 units to take it from me only. Why? Because you will get only 68,000. You were losing out only 68,000, right? But if you will see, if X gives at 2Y, I will lose only 68,000. But think of it. If I'm not giving, can I say you are purchasing at 22 first of all, plus 1 lakh 50 also you are paying, plus 1 lakh 50. So I've just given you the calculation. What if you do not take anything from me? Take it from the outside market. Take it from the outside market, completely from the outside. At what price will you take? If purchase from outside, he will incur 50,000 into 22 plus 1 lakh 50 also the transportation. That means Y has to pay 12 lakh 50,000. And if I make it from myself, it will be only 6 lakh. That is 50,000 into 12 the making cost. Can I say 6 lakh 50 will be gained? Yes. That means Y will gain 6 lakh 50,000. But can I say X will lose around 68? Yes. So Y is gaining 650, X is losing 68. So can I say the maximum profit will stay in the company of 580? See, if I am division A, I will say obviously I'll go with maximum profit. Division B, if I supply 50,000, will division A lose? Yes, I will lose how much? 68. First of all, obviously I will be able to earn only 7 lakh. But think from the point of view of division B now. If you take it at 12 at the variable cost, if you take it at the variable cost itself, can I say 10 rupees will be entirely saved because you were saving at 22? You were purchasing at 22 and you are getting at 12. That means 10 rupees will be saved first of all, plus 1 lakh 50,000 extra will be saved for the transportation. So the total saving will be 6 lakh 50. And even if there is a saving of 650, the loss was only 68,000 if X was supplying. So we'll tell X, just don't think of that 68,000. Just let it go. Give it to Y. That will be the best strategy for the company. Yes, Rutik, good evening. So I hope you got this point. And this was again the examination question, June 24. Okay, moving ahead. Next one. The December 23 question. Again, not a very tough question. Please pay attention. Division A of Doxon Limited has been given a budgeted target of selling 2 lakh components of TOM 22. TOM 22 is just one product. Okay? So division A is given a target of to sell 2 lakh units. It manufactures at a price which would fetch a return of 25% on an average assets employed by it on the following. And the following figures are relevant. See, how much profit do I want? I have a target. I'm division A and I have a target of selling 2 lakh units. The fixed overhead are 4 lakh. Let's say if it is per unit, it is 2 rupees per unit. The fixed overhead. Fixed overhead is 2 rupees per unit. Variable cost is 1 per unit. That means, can I say variable cost is 1, fixed cost is 2, the total cost comes to 3 rupees. The total cost comes to 3 rupees. How much is the profit do I need? 3 lakh rupees. On how many units? On 2 lakh units. So what will be the profit per unit? 3 lakh divided by 2 lakh, 1.5. So the profit I need is 1.5. So what will be the selling price is 4.5. The very important point was this one. I'll explain once again. Please pay attention. Fixed overhead was 4 lakh. If you are not able to understand like this, I'll make the table. What will be the total variable cost? It will be 2 lakh into 1 rupees. 2 lakh because the variable cost was 1. Fixed cost was 4 lakh rupees given to you, not depend upon number of units, right? So the total cost comes to 6 lakh rupees. What is the profit you are searching for? 3 lakh rupees. How come 3 lakh? Because they have clearly given total assets into 25%. 3 lakh is the profit which you are looking for. That means the sales will be 9 lakh rupees. The sales will be 9 lakh. And how many units are there? 2 lakh units are there. So 2 lakh units into what price will give you 9 lakh? It comes to 4.5. Very easy. It comes to 4.5. So this is what you get the selling price. Right? Now, moving ahead to the question. What they have given. However, the marketing department of the company find out by the survey that the maximum number of TOM 22 the market can take at the proposed price is only 1,40,000 units. That means division A can sell in the market only 1,40,000 units. Can I say the balance is 60,000? The answer is yes. The balance is 60,000. Okay. Fortunately, division B is willing to purchase the balance 60,000. That means there is also division B which is willing to purchase the 60,000. So that means my capacity will be utilized. The manager of division A is willing to sell to division B at a concessional rate of 4. The selling price is 4.5, but I am telling okay, take it at 4. But the manager of division B is ready to pay only 2. That means this is division A. The variable cost is 1. The selling price is 4.5. He's telling I will give you at 4. I'll give you at 4. But division B is telling I wanted 2.25. If you want to give 2.25, okay, I'm ready. If you're not, then keep it with you. I don't want. Right? So I am offering a price of 4, but he is telling give me at 2.25. Okay, fine. Let's see what is given. As he feels he can make himself make TOM 22. That means he is telling I can make by myself at 2.25. I will purchase at more price than you. Next, rather than sell to division B at 2.25. Now what A is thinking, I don't want to give you at 2.25. I won't give you, right? That means I'm ready to sell only 1 lakh for. Okay. The manager of division A feels he will restrict the activity of his division to the manufacturer, sell only 1,40,000. But by this, he would reduce 80,000 in stocks, 120 of plant. That means what they are telling over here, I'll be able to save 2 lakh rupees in the average assets and 40,000 in selling expenses which are fixed in nature. I will also be able to save 40,000. I will also be able to save. If I do not supply to you, I will be able to save 2 lakh on assets. That means the capital employed will be lowered and 40,000 in selling expenses if I do not supply you. Okay. As a cost accountant, you are required to ask to make comparative study of proposals of division manager. Justify that selling 60,000 TOM 22 division B at 2.25 unit would be in the interest of the organization. That means you have to check from the point of view of company, will it be beneficial for the company? So obviously, it is quite clear they have given it is justification. That means they are asking you justify it is better. Obviously, it is better, right? So you just have to give the profit statement. Give the profit statement and that will be done. So how will I make the profit statement? See, the main game was to find the selling price. I have already found. I've already found out the selling price. How did I found the selling price? Is clear. Total cost plus profit divided by number of units, you will give the selling price. So I got the answer is 4.4, 4.5. Now you have two options with you. Two options. What are the two options? Sell only, sell only 1,40,000 at 4.5 in the open market, and you don't need to make 60,000 units. And the second option which you have, sell 140 in the open market, at 4.5, plus sell 60,000, that is transfer 60,000 to B at 2.25, because B is not taking at 4 only. He is telling give me at 2.25. These are the 2 points given, right? So what we have to do is we just need to compare the statements. Just make the statement sales less variable cost will give me quantity, less fixed cost will give me profit. And if the profit is higher over here, I'll say I'll stick to this. If the profit is higher with second point, you tell that we'll go with the second point. Simple as that. So this is just a basic question. This is not at all a transfer price question. It felt like it is transfer price, but it is a regular basic question of margin. That means what will be your decision making to sell it or not to transfer it, right? So I have given a statement. Just please pay attention. What are the two options available with you? First is external sales plus transfer. That means you sell 1,40,000 at 4.5 and transfer 60,000 at 2. So the sales comes to 7,65,000. Variable cost will be at rupees 1, so it comes to 2 lakh. The fixed cost was clearly given as 4 lakh and the profit comes to 1,65,000. Easy. Okay. Second scenario. Sell only 140, not to transfer. Tell him I don't want to transfer at 2.25. I'm ready to sell at 4.5, only 1,40,000. So obviously the expense will be on 1,40,000 only. There will be a saving of 40,000 in the admin expenses. That means the fixed cost will be saved by 360. The profit comes to 130. Now you tell me, in which area is the profit better? Is it 130 better or is 165 better? Obviously 165 is better. So it clearly indicates, it clearly justifies that since the profit is increased by 35,000, 35,000 is the difference, right? Since the profit is increased by 35,000, it clearly justifies that transferring at 2.25 is also beneficial. Transferring at 2.25 is also beneficial. This is the answer. So what other information given? I've just calculated the rate. It was not at all required, but I've just given the rate since it was given on capital employed. So I've just taken 12 lakh was the capital employed, and over here only 10 lakh will be the capital employed. Why 10 lakh? Because 2 lakh will be saved on stock and other assets, right? So by taking the percentages, you are able to calculate 13.75 and that's so I've given the comment, since the profit is more when the units are transferred to division B as compared to sales only to external parties, the transfer at 2.25 is in the overall parties. That's it. So this will be easy. Again, this was not the transfer price question. Actually, this was a regular decision making question whether to transfer or not. He is asking at 2.25. Whether you should transfer, the answer is that you should transfer because 35,000 is the increased profit of the company. Okay, so I hope you got this point, and this was question number 8. And now is the relevant cost concept. So this concept ideally will take take 10 to 15 minutes to make you understand the complete concept, and then we'll solve the questions. Okay, please pay attention on the relevant cost. Relevant cost, it is very easy and yet very important. An institute has given a variety of questions. It is actually a bit tough. Okay, they're not very easy. So I'll make you explain what is relevant first of all. See, I have a shop. Which I can run by myself. Obviously, I'll earn profit, or else I can let it out on rent. I'll be earning rent. Okay. Over here, I have to pay taxes or the property tax of 2,000. Example. Here also I have to pay property tax of 2,000. So can I say in both the scenarios you are paying? The answer is yes. If in both the scenarios you are paying, that means it is not at all relevant for your decision making. Okay. Will your decision change if you run yourself with the property taxes? The answer is no. You are paying over here also. And if you let it out, still are you paying? The answer is yes. So can I say this is not a relevant cost? for decision making. For decision making, not relevant, right? Okay. Even if I ask you two questions, separate question, this is pen 1 and this is pen 2. This cost me 50, this cost me 60. Which is better? Which is better? Or else, on what grounds will you say? Obviously, you will say, so it is greater than 10 rupees. So this 10 rupees is irrelevant, not 50 and 60. Any which ways, I was paying 50 rupees, right? So even if I pay 60, what is the extra amount I'm paying? 10. So decision making should be based on 10, not on 50 or 60, right? Okay. So that is relevant. So basically, what is relevant, that is, which will change your decision, is relevant. Which will change your decision is relevant. If it does not change your decision, it is not relevant. Fixed costs are the sunk cost. The past costs, which have already been done, are not your relevant cost. They have already been done. They are not at all relevant. So ab hoga, which will be in near future, that is okay. So there are different points. Please pay attention. On material. On material. See, there are a lot of points, okay, on material. If at all say, if at all I say, I have to make a product which is named as X. Okay. Product X requires 500 units of raw material A. Okay, now tell me, from where will you take this? Obviously, you will purchase it from the outside market. When I say purchase it from the outside market, when I say purchase it from the outside market, see, if you have to make product X and you are in requirement of raw material A, so obviously I will ask you to purchase it from the outside market. And what price will you purchase? Obviously, you will purchase at the purchase price, whatever the answer is, and that price is known as the replacement cost. That price is known as the replacement cost. That means if you are purchasing from the outside market, you have to purchase it at replacement cost. This is the point. Okay, you have to purchase it at replacement cost. So that is the purchase price basically. So can I say, let's say the replacement cost is rupees 10 per unit. Example. That means the purchase price is 10 per unit. So can I say, to make product X, you have to purchase this 500 units at 10 rupees? The answer is yes. So this is the relevant, because you have to purchase. Okay. Then now I'm telling that this A is already in stock. Example, I purchased plastic from outside market. Plastic is the raw material. And initially I was making only pen. So can I say plastic was used in pen? Yes. So I keep on purchasing plastic and I'm making pens only. That is nothing new. Now what I have decided to make these calculators. Will the plastic be required in this? The answer is yes. The answer is yes. So can I say I'm having it in stock, previously purchased? So I'm having in stock, and the book value in which I purchased previously was rupees 8 per unit. Now please tell me, will you take at 500 into 8 or will you take at 500 into 10? Comes the question, what is relevant for you? What is relevant for you? Okay, so I'll make you understand the concept. Please focus. 500, obviously, if this was not the scenario, you should have purchased from the outside market at 10. That was the relevant cost for you, because you are paying from your pocket. You're not having that in stock. If you are purchasing anything right now, obviously it is relevant for you. Obviously, you have to pay it right now, right? And if you won't make this product, you will not purchase. That means the decision making is based on you will purchase or not, right? Okay. If it is already in stock, ask him, what will you do of this stock? What will you do of this stock? Are you using it? Are you using it? Or is it idle due to previous purchase? Just ask him that question. Just ask him that question, right? The book value is 8 and the NRV is 7. That means if you sell that right now in the market, you will get me 7, right? You purchased at 8. See, there are three prices now. first is the book value, the second is NRV, and the third is replacement. Replacement means if I purchase from the outside market, I will get it 10. Now please pay attention. I'm replaying the scenario again. I want to make this calculator right now. I want to make this calculator, right? And right now I'm making these pens and I'm purchasing plastic from outside market. I have the plastic in stock with me. I have the plastic in stock. I can use this in A. That means I can use this to make calculators right now. Till the time the plastic comes for the pen, I can use this plastic to make calculators only. That means I can use this stock right now. Now, the previously purchased was 8, the NRV was 7. And I asked a question. The plastic which is available to you, are you using it somewhere? The answer is yes. If you told me yes, obviously you will keep on using it, right? So can I say, if I use it over here, you will have to purchase from outside. That means obviously, any which ways, if I use here, over here I have to purchase. If I use there, over here I have to purchase. That means any which ways you have to purchase from the outside. That means can I say the relevant cost becomes 10? Any which ways I have to purchase from the outside market, 10, right? So if the answer is yes, the replacement cost becomes the relevant cost, because I have to purchase any which ways from the outside market. And now if I tell you, is it idle? Are you using it right now? You told me no, we are not using it anywhere because it is already idle. We have purchased previously. Okay. If I ask you now, what will you do if I'm not making this product? If I'm not making this product, okay, what will you do of this raw material then? What will you do of this raw material? Obviously, you will sell in the market. You're not using it, right? If you're not using it, what will you do? You will sell in the market. At what value will you sell in the market? In SS7, yes. So that is relevant for me now. That is relevant for me now. I will say that means if it's something like this, sell in the market at 7 and then give it to me at 7. Simple as that. That means the relevant cost becomes 7. That is the NR. That is the NRV, book value or NRV, whichever is lower. So NRV was lower, I took it. See, if the raw material is in stock, ask a question. See, if it is not in stock, obviously you have to purchase from outside. If it is in stock, ask the question. Are you using it? Are you using it? If yes, that means any which ways you have to purchase it from the outside market. That means replacement cost. That means you have to purchase from the outside market. If you're not using, what will you do? You will sell. At what value will you sell? At NRV. Give it to me at that price. That means relevant becomes the NRV. This is the important point, right? Okay. Third point. This raw material which is there with you, this can be utilized somewhere else for another product, for third product on which you are earning contribution. If I'm losing on something, that is opportunity. Should that be added? The answer is it should be still added. I will give you an example in the question itself, right? So over here, I give you a summary of material. What will be the relevant cost for you? See, if you do not have it in stock, purchase it. Obviously, you have to purchase it. Purchase price means the replacement. Purchase price means the replacement cost, right? You have to purchase from the market. That means this. If it is already available, ask the question: are you using it somewhere? If yes, that means again you have to purchase it from the market. That is replacement. If no, then you can utilize this at what value? At NRV. At NRV, you can utilize. Simple as that, right? Okay. Now coming to the labor part. Obviously, I'll be taking the questions also and I'll be explaining you in the questions also. The labor part. What is basically labor part? See, I have a skilled labor. On which I'm paying them 40,000. I'm paying 40,000, right? And these are completely occupied. Right? And if I want to make a new contract, if I'm accepting a new contract, if I want to accept the contract, I need this skilled labor. If I need this skilled labor, they are already completely occupied. That is, they are not idle. Right? if I use them here, obviously you need to hire somewhere else also, right? That means, can I say this 40,000, this 40,000, this obviously I have to pay plus. If I use it over here, this project will not be completed. This project will not be completed. And if at all it does not get completed, will there be a contribution loss? The answer is yes. So if there is opportunity, that again becomes the relevant cost. Means what? See, I paid him 40,000 and I did not use him on that project. I told him work over on this one. So 40,000, and over here he was able to earn 5,000. Obviously, now he will not be able to earn because I'm paying him over here. I told him not to work over there. Just leave that work, complete this work first because this is the price. And if he's working right now over here, that work won't be complete. So will I lose out on something? The answer is yes. So that 5,000 also becomes relevant for opportunity cost, relevant cost, right? So if at all labor is completely occupied means they're already working at full capacity and there is no excess, there is no idle capacity. And still I'm telling them, don't complete that work, come over here. Obviously they will lose out on something. And if I'm losing out on something, that becomes the opportunity, right? This is the point. Second, if labor is in excess, let's say there are some unskilled labors. If the labors are unskilled, and I'm thinking of uh, paying 40,000 per month to them, right? Obviously, I need to pay for 12 months. They worked for 6 months. So I paid them 40,000. Now for the rest 6 months, they are sitting idle. They are sitting idle. Okay, they are sitting idle. So I have an option to remove them, but the management is not deciding to remove them. Why? Because at the time of demand, you will not be able to get these back. You will not get laborers. So just pay it off. So can I say I have taken a project? To engage them. Just engage them. Just work it with me. Just work with me, right? Okay. Now tell me, if I do not take a project, will I pay them? The answer is yes. If I take the project, will I still pay? The answer is yes. That means, is your decision changing by accepting the project or not? The answer is why? Because any which ways you are paying them. If you are paying in both the situations, if you take the project, you are paying. If you are not taking the project, you are still paying. That means this is not at all relevant for your decision making. This is not at all relevant. If the labor is in excess supply, is an excess supply, that means if you are utilizing that labor, that is not a relevant cost for you for decision making. Example. There is a labor to which I pay 2,000 per month. 2,000 per month, right? He worked for me. He worked with me for 8 months. That means I paid him 16,000. 4 months still are left. 4 months still are left. That means if he even sits idle, I will pay him 8,000. It's 2,000 per month. 2,000 per month. 4,000. For 4 months, I will pay him 8,000. That means 8,000 will still be paid anyhow. 8,000 will be paid anyhow, right? Moving ahead. If 8,000 is paid, if to engage them, I accepted a new project. Okay. And I asked him to work for 4 months over here. Now, think of it. Are you hiring them because of this new project? The answer is okay. If the answer is no, that means if you take the new project, how much will you pay? You will pay him 8,000. And if you do not take a project, how much will you pay? The answer is still 8,000. That means, will your answer change based on this answer? If your answer is not changing, if in both the situation you are paying, that is not at all a relevant cost. It is that simple, right? Okay. Now, if you pay them 10,000 over here, that means he was sitting idle, you were paying 8,000. But if you accept a new project, he's asking for 2,000 extra. He's telling that I'm working for a bit overtime and give me extra something. So I told him, okay, fine. If I add the project, I will give you 10,000. So can I say the extra part, the extra 2,000 I'm paying, this becomes relevant for you. This becomes relevant for your decision. So the rules are very clear. If you have it in excess, that is not relevant because any which ways you are paying. If you do not have it, if you're not having it, obviously you're hiring it, you're paying. See, if for a new project I'm hiring new employee, is it relevant? The answer is yes. Because if you do not accept this project, you will not pay. That means the decision is, if you accept, you will pay. If you do not accept this project, you will not pay. That means it is relevant, right? The decision will change, pay or not pay. But over here, both scenarios you were paying. Both scenarios you were paying, and therefore it is not relevant, right? So the past cost, the sunk cost, the committed cost, whatever has happened in the past is not relevant for your decision. See, what is done completely. Will it change your decision? Now it will not change your decision because it is already done. Yeah, it is already completed, right? It will not change your decision. This is what is important, right? So I'll try to explain more points in the question itself. Question number 19. Please pay attention. A machine which originally cost rupees 12,000 has an estimated life of 10 years and it depreciated at the rate of 1200 per year. That means 10 years life, 1200 is the depreciation, 12,000 divided by 10. It has been unused for some time that you are not using at all. However, as expected, production orders did not materialize. A special order has now been received, which would require the use of machine for 2 months. That means you will be using the machine for 2 months. Okay. The current net realizable value for the machine is 8,000. That means if you do not use, if you sell it right now, you will get 8,000. Sell right now, you're not using, right? So sell right now, 8,000. Okay. But if you use for 2 months, obviously after using 2 months, will you be able to sell at 8,000 answer? If it is used for the job, its value will fall to 7,500. That means if you use and after 2 months you sell, you will get only 7,500. Can I say I used it for 500 then? I use it for 500. That means if at all there is a machine, it was kept idle only. It was kept idle. It was there with you, right? What will you do of that machine? Obviously, if it is not in use, sell it. Sell that machine. How much value you will get? You will get 8. Then I got one order. I told you not to sell. Keep it for 2 months and then sell. After 2 months, you will be able to sell at 7,000. So can I say this 500 will get reduced because of this contract? So this is relevant form, right? This 500 is relevant form because the design will change. Next, the net book value of the machine is 8,400. Book value hardly matters what I will get in the market because you are not using the machine, right? Routine machine, this is not no use. Routine maintenance of the machine currently costs 40 per month. That means 40 rupees you are paying every month. Even if you do not accept the project, that also you will pay for. With the use of this machine, the cost will increase to 60 per month. That means, can I say 20 rupees will be increased? The extra cost, any which ways you are paying 40, right? It is not because I'm taking the project you are paying 40. You are paying extra 20. That 20 is relevant. 20 per month for 2 months, how much? 40 rupees. So can I say the relevant cost? The relevant cost is 5. The relevant cost of using the machine for the order it can charge as the minimum price is 540. That means if you are giving me minimum 540, I will say okay, the order is accepted because any which ways I will incur only 540 extra cost that is relevant. Understood the point? 540. See, I have written away 540. Next one. Yes, this is the important question for material. This is the important question for material. Okay, I'm reading the question. X Limited has been approached by a customer who would like a special job to be done for him and is willing to pay 22,000. He is willing to pay 22,000 for it. Okay. The job would require the following materials. Just pay attention on what information is there with you. Materials A, B, C, D. That means there are 4 materials. Okay. Quantity required. How much do I require for this project? If someone is giving me 22,000, obviously I need to make something for it, right? So what are the materials required? 1,000, 1,000, 1,000 and 200, right? These are the materials required. Units in stock 0. That means, can I say complete 1000 you will have to purchase from the market? Yes. And if you are purchasing from the market, at what price will you purchase? At the replacement cost. So this is the relevant cost, 1000 into 6. A is very simple, 6000 is the relevant cost. Simple. Moving ahead. B, 1000 you are having in stock. Sorry, 1000 you require, 600 is there in the stock. 600 अभी पड़ा है, 600 is there in the stock. That means 400 anyhow you have to purchase from the market at 5. 400 anyhow you have to purchase from the market. What about that 600? I will ask the question, are you using it somewhere? If the answer is yes, then I'll say use it there only, I will purchase from the market. If it is completely idle, I will take it at another. So for material B, the information is given. Please pay attention. Material B is used regularly by expert. For regular use, using it regularly, that means it's not idle. Can I say, I will tell them use it there only, I will purchase from the market. That means this is not available for me. Any which ways you have 600, I know this 600 is there with you, but are you using it somewhere else? The answer is yes, you're using. That means it is not for me, right? I have to purchase from the market. So just purchase it from the market at 5. That means the relevant cost becomes 5000. Next point, C, 1000 and 700 you already have. That means can I say 300 you have to purchase from the market anyhow. You have 1000, you want 1000, right? You have in stock 7, but can I say you have to purchase 300 anyhow from the market at 4. Let's see what this tells about 7. So over here, material C and D are in stock as a result of previous excess purchase and they have a restricted use. You actually purchased it previously and they were already excess. You're not utilizing it. If you're not utilizing it, no other use could be found for material C, but material A could be used for in as a substitute. Okay, there's some misprint over substitute के आगे कुछ missing है. So I just need to check with the question. Okay, for material C I'll explain. For material C I'll explain first. So can I say you have to anyhow this 700 is available with you. 700. Can you use that? The answer is yes. Okay. If I ask you, are you using it somewhere else? He's telling no, we cannot use that because it was previously excess purchase. So what will you do of that material? You will sell. You will sell at what value? Will you sell at book value or will you sell at realizable value? The answer is NR. So that is relevant form, right? So for product C, can I say I'll use 700 which is there in the there with you in the stock at 2.5, because any which ways you are going to sell it at 2.5, so give it to me. And 300 I have to purchase it from the outside market at 4 rupees. And for D, there is some misprint, but I'll give you the crisp idea. Okay, I'll give you the crisp idea. Over D, it was 200 and 200, 200, right? So can I say it is already in stock and it was previously excess purchase. But D could be used in another substitute as 300 units. 300 units, the replacement cost is 5 rupees. That means if you use D over here, that means you will not be able to use D in the other product. And if you will not be able to use that D in the another product, you will have to purchase D for the another product at that price. So the relevant price becomes 1500. See, I'll give you an example. I have raw material D with me. Please pay attention, this is very important. I have raw material D with me, 200 units. Okay? This is the new project. I require 200 units only. And the replacement cost is 9 rupees. That means I can purchase it at 9 rupees. How much will be the purchase price? 1800. The replacement. That means 1800. But I'll say, why should I purchase it? You already have in stock, na? So then why are you purchasing it right now? Don't purchase. Use it, whatever you have, whatever you are having, use it. So if I use it over here, that means this can be used as a substitute for 300 units, which could be purchased at 5 rupees, which was purchased at 5. Can I say, if you use it over here, you will have to purchase over there. You'll have to purchase anyhow, right? So if you purchase over there, how many units will you purchase? Will you purchase 200 or 300? 300. At what? At 5 rupees. That means you have to pay 1500 over here. So you tell me, what will you do? If you are smart enough, what will you do? If you use this 200, you will not purchase this, but you have to purchase over here at 1800, right? If you are smart enough, think of the situation. You have 200 in with you. Either you can use over here or you can use over here. If you use over here, that means if you use over here on the substitute side, you will have to purchase, and for purchasing, how much will you pay? You will pay 1800, right? Then I thought of one thing. Why should I purchase 1800? Use this 200 over here. That means I will not purchase over here. But if you not purchase over here, you will have to purchase over there. Over there, how many units will you purchase? 300. At what price? 5. That means over there you will pay 1500. So which is better for you, 1800 or 15? Obviously you will say 1500, and this becomes your. This is important. This is important. Is everyone getting this point? Yes. Is everyone getting this point? Please tell me. Yes, please tell me. If you are having any query, let me know that also. I'll explain you one second with another example. But this is very important because Institute is giving continuously 14 marks question on relevant cost. Rather than focusing on transfer price, they are focusing on relevant cost. Yes, everyone. सब थक गए हैं क्या? Is everyone tired? Okay. So if you got this point, I'm taking an example. Okay, replacement once again. Fine. See, I want to make product X. I want to make product X. And if I'm making product X, obviously I need raw material. I need raw material, right? It is very obvious. I need raw material. I need raw material. So the question is, what raw material? What are the material you need? You tell me. If you're making a product X, if it is a new project or a new product, if you want that, tell me what is required. So I told you I require 4 things. I require 4 things. I want material A, I want material B, I want material C, and I want material D also. Right? I want 4 raw material. Okay, I will tell you, okay, purchase it from outside. Simple. Purchase it from outside and make the products. But there is one important point. So first of all, I asked you what is the material required for you. So you told, sir, I want 500 units. Over here, you told 800 units. Over here, you told 300 units, sorry, 600 units. Over here, you told 400 units. Okay, this is what is required. So I will simply ask you, okay, purchase it from outside, that's it. So I want the purchase price. The purchase price itself is known as the replacement cost. Okay, the purchase price itself is known as the replacement cost. This is nothing but the purchase price. This is nothing but the purchase price. So the purchase price over here is 15, 10, 20, and 8. Okay. If I ask you, okay, if you want to make that product, just purchase it from outside. That is it. Very simple. So at what price will you purchase? Obviously the purchase price. The purchase price over here is known as the replacement cost, right? The raw material is always replaced by using the purchase price. Okay. So I will purchase 500 into 15, 800 into 10, 600 into 20, 4 into 8. This is very simple. This is done. So this is the relevant. Yes, obviously you will have to purchase it from outside. But then I stopped you. Then I stopped you and I told you we already have something in stock. Then I will say, okay, I will not purchase. I will not purchase. If you have already in stock, I will not purchase at this price, at the current price, right? If you have it in stock, that means it was previously purchased, right? And previous purchases are obviously cheaper. Obviously, the current price during the inflation, it is higher. Obviously, I'll make it from the previous purchase, right? So I check whether there is in stock or not. These raw material were in stock. Material required was 500, but in stock it was zero. It was zero. Now tell me, if it was zero, will you purchase from the outside market? Yes. How much will you purchase from the outside market? You will say 500. At what price will you purchase? Obviously, that is relevant. Easy, because it was not in your stock, right? It was not. If it is not in your stock, you will have to purchase, right? You will have to purchase. So simply purchase it from the outside at 10 rupees. That is relevant cost for you. Simple. That it was not there. You purchase it just pay for product X. Okay. Next, I'm telling you there is 500 with you. There is 500 with you. That means, can I say you require 800? You require 800, but 500 is there with you. 500 you are having. So can I say you will have still have to purchase 300? 300 at what price? At the market price, at the replacement cost, at the purchase price. Right? So 300 any which ways you have to pay 300 any which ways you have to purchase at 10. What about this 500? So before using the current stock, ask the question, what will you do of this material? Give me the answer. What will you do of this material? So they will say either we'll use it regularly, or else this was previously excess purchase. If it is excess, use it. If you're using it regularly, then let it go now. You purchase it from outside, because any which ways you are using it for some other product. That means although it is there in stock, but it is not excess which you should use. They are already in stock for some other purpose, not for you. If you're using it here, any which ways you have to purchase for them, right? If you're using it here, you will purchase for them. That means any which ways you are paying from your pocket, right? So whenever you are using in stock material, ask a question: is it excess or is it regular? If you're using regularly, then tell him, okay, you only, I'll purchase from outside. I don't want your product which is there in stock. Don't use that. Just take it from the outside market. This is simple, right? So this is the book value and this is NRV. The book value was obviously it was not given, and the book value was 6 and the NRV was 7. So can I say this 500, I'm telling you B was in regular use. So if I'll say it is regularly used, then I'll say use it there only. Don't give me use it there only. This is not of no use to me. Can I say total 800 I will purchase at the current price and the current price is 10? I will say purchase all the units from the market. Don't use, because they are only already using, right? Why to use their material then? Let it go. 10,800 into 10. You purchase it from the outside market. Okay, fine. Next one. Next point is C. You want 600. You want 600, but they already have 500 with them. They already have 500 with them. Then I asked him, what will you do of this 500? Are you using it regularly? So they told me C is in excess due to previous purchase. Due to previous purchase. Okay. Then I asked you, is it freely available? Is it freely available? Will you use it for somewhere else? The answer is no. So what will you do? So they will say, obviously, we'll sell it in the market. I don't want that material, right? C is an already excess purchase. I don't want that material. Just let it go. Let it go. I don't want that material. So obviously, if it is 12 rupees and at, let's say, 15 and 13, what will you do of this 5 and tell me? Obviously, if I will not use, you will sell in the market. Simple. If it is excess purchase, what will you do of that raw material? It is kept as it is in the stock. Obviously, it will get expired. So better sell it right now. And if you sell it, at what value will you sell right now? Can I say you will sell it NRV? So if NRV you are selling, that is the relevant cost. So 500 into 13 becomes the. But you wanted 600, right? You are having 500. That means let's say this is the raw material and this is 500 kgs, 500 units kept over there. I told them, what are you doing for this? So they told me they are doing nothing. I told them, give it to me. If you sell it right now, how much will you get? 13. Okay, take it from me. Simple. Take it from me. That is relevant form, right? But I want 600. I want 600. So can I say 100 units still needs purchase from the market? Yes. So how much do you purchase from the market? 100. And what price? At 20. At the replacement cost. At 20. Simple. These 3 points are done. And the very important one, 400 you want and 400 is there with you. 400 you want and 400 is there with you. Okay. At 6, at 7, at 6, at 7. See, D, D can be used as a substitute for another product. Let's say the product name is Z. It can be used for Z as as 500 units. 400 can be used as 500. Now you will say, sir, how come this may it be they are using a light quality product? They are using light quality, and if these use this is a heavy quality and wastage will be lower than that. So obviously, if I purchase 500, or else I can say there is a evaporating product. Let's say if you even purchase 500, you will get 400 only. But if you are having it in hand 400, utilize that, right? So there can be a number of reasons. So if I use it over here, I will have to purchase it 500 from other product, right? And I have to purchase it at rupees 7. Now tell me, if there are two products, right? You can use it over here or you can use it over there. Now, let's say you have raw material D. You have raw material D. How much do you have? 400. You have two things. Either for us, use it in product X, which we are making right now, right? If I will use over here, if we use here, you need to purchase for product Z. That means if I'm using here, I need to purchase for product Z. And at what, how many units and what price will you pay? You will pay 500 units into 7. That means if you use it over here, around 615. Yeah. If you use it over here, the product X, you will have to purchase for product Z. That means you will pay 3,500. That means 3,500 will be removed from your pocket. Okay. But there is one more option. One more option. Raw material D. Use it for product Z. Use it for product Z. Now, if I ask you, if you're using on that product, you will have to purchase for you. And how much will you purchase? How much will you purchase? 400. At what price? At 8 rupees. At 8 rupees. Let's say this 6. Okay. Let's make it 6. So you will pay 3,000. And if you use it over there, you need to purchase for our product. Purchase for X. How much products? 400 units. And at what price? At 8 rupees. That means you pay 3,200. Now you tell me which is better for you. Paying 3,000 or paying 3,200? Obviously paying 3,000. That is simple. If it is used as a substitute, just check what is better situation. Paying 3,000 or paying 3,200? Paying 3,000 is better, and therefore I will go with 3,000. 3,000 is the relevant cost. Simple. So what is the total relevant material cost? It will be between 7,500, 8,000, 6,500, 2,000 and 3,000. This total will give me the total relevant material cost. Now I've explained material in very depth. Please tell me, are you getting this point? If at all you need any further clarification, let me know. I'll explain. Yes, please tell me. Uh, Yes, I have that in my list, June 24. Yes, Manaz are clear. Okay, fine. I hope the other students are also clear with this. Okay, so let's start with the portion. So see, over here is the question, right? Over here is the question, and over here is the solution. I have given the detailed explanation, right? I have given the very detailed explanation why I am taking this as the okay. So these two questions are very simple. These two questions, even 21 is simple. So I'll just start with this question first. Yes. Relevant costing for December 23. I guess June 23 just one. June 24 you told me. June 24 is not there in the list. Okay. So I must have not added that question, but no issues. I will consider that question also. But I guess June 24 was a 7 marks. June 24 was 7 marks. Okay. But relevant costing in December 23 was asked for 14 marks, and this is one of the challenging because the institute has not given any explanation. Institute has given one word sentence. Itna relevant cost. That's it. They have given itna irrelevant. That's it. But they have not given you any single explanation. So I have given a detailed explanation. If you look at the answer, if you look at the solution, I have given a complete explanation of, let's say, I guess 2-3 pages. Okay. So I've given the complete explanation. This is 14 marks, and this one is very challenging. Okay. Uh, the student who asked me for June 24, I'll be covering in the next session if possible. I'll try my best because um, marginal, relevant, and transfer takes a lot of time. The other topics won't take much time. So if at all time permits, yes, I will be taking that also. But I have taken a lot of variety now, and this question is also with a lot of variety, right? So even if I solve this, I hope you will be able to solve that question. Okay, but I'll try to include that question. Okay, so December 23, please pay attention. Rontex Limited builders have been offered a contract by Axion Limited to build for it of 5 special guest houses for use by top management. That means Axion Limited has given us a contract to build 5 individual special guest houses. Each guest house will be an independent one of one. The contract will be for the period of 1 year and the offer price is rupees 1 crore. That means they are offering a total of 1 crore rupees, right? Okay. In addition, Axion Limited will also provide 2 grounds of land free of cost for the purpose of construction. For the purpose of construction, they will give you 2 grounds free of cost. Okay. The chief accountant of Rontex has prepared an estimate on the basis of which he has advised that the contract should not be accepted at the price offered first term. His estimate are as follows. Okay. What he is telling, we should not accept this because the contract price is of only 1 crore and he's telling not to accept that. Not to accept that. See, we are Rontex Limited over here. Okay. We are the builders. We are the builders. And there is one client named as Axion Limited. Named as Axion Limited. They want 5 special guest houses. And they told us what will they give? They give 1 crore plus 2 grounds. 2 grounds. They will give you 2 ground, and there will be more grounds required because you have to build 5. That means they are providing with land. Okay, they are providing with land. They are giving free of cost 2 ground. That means two places of land they are giving for free, right? And they want us to build, and they are giving 1 crore rupees. And the manager of Rontex, the management who is sitting with me is telling sir not to accept that project because he's just giving us 1 crore and we will spend more on that. So reject that offer. I don't want that offer. Okay. But the thing is, whether every cost is relevant or not, we have to get that one. Okay. So I'm reading one by one. Please pay attention. What they have considered. The manager who was sitting beside me, he was telling, sir, see, this is the total cost, and the total cost he gave is 1 crore 50 lakhs rupees in lakhs is given. That means he's telling, sir, we will get only 1 crore and we have to pay 1.5 crores. So it is not, it is better to reject the order. So he is trying to reject. But the CEO came to us and he is telling, that you being a cost accountant, just check whether he's correct or not before accepting. Obviously, a 1 crore order is not a lower order, right? We have to check this, right? So land 3 grounds at rupees 20 lakh each. First of all, I told him, why are you taking 3 grounds? 2 grounds are free, right? 2 grounds they are giving for free. You have to pay only for 1 ground. So why are you taking 60 then? Take only 20, no? Simple. You require 3 grounds to build 5 buildings, right? If you require 3 grounds, 2 grounds they are giving for free, na? That means you have to purchase only 1 ground, right? If you are purchasing only 1 ground, that means can I say you have to pay only 20. So the relevant cost for ground is only 20 and not 60. The first mistake in the first line itself, right? I will tell him not to take 60 lakh in your cost. Take only 20 lakhs. 2 grounds for free, right? So land. Okay. Drawing and design they have given. I just read out the point. Drawing and design, registration, material may they have given cement, bricks, steel, others. Okay, including interior decoration. Labor they have skilled, unskilled, supervisor salary, overhead, depreciation. Now they have given a lot of expenses. They have given a lot of expenses, of which first point, first point they have made a mistake, and I just need to check whether all these costs are relevant or not. So he has totaled it and he has totaled as 1 crore 50 lakhs. We just need to check whether all of these are relevant or not. They have just added. See, if obviously I need to build, if I need to build a building, what I have to spend, I have to spend on the design, I have to spend on the registration, I have to use the material, I have to pay to the laborers, the supervisors. Obviously, I need to take some machinery to the concrete mixer or something. So everything, right? So there are a lot of things which I'll be using on the buildings, and this will total expenditure of 150. So whether there is relevant or not. So they have given a huge question. I'll read one by one. Okay. The accountant also provides you with the following information. First, the land. The total requirement of land is 3 grounds costing 20 lakhs per ground. Excel Limited will provide 2 grounds for free. So clearly it indicates that using 60 lakh is not relevant, using only 20 lakhs, because your pocket will pay only 20. But 40 you are getting for free, right? You are not paying. So why are you considering 60? So first point I've given over here, you can see land. Since 2 grounds are free of cost of only 1 ground is relevant for us. So I took 20 lakhs. Simple. Okay, land is very easy. Next point. Next point. So this is the first point. Next, drawing and design. These have already been prepared and 50% of the cost has already been incurred. Now, please pay attention. Students make a huge mistake in this. They consider 50%. Pay attention. See what they have done. These have already been prepared. That is, before even accepting the project, I gave them an offer and I made a design for them. We are on text. We are on text, and we provided a design. See, I will make it like this. I will make it like this for you, and so on. Right. So I made a design for them. Even if I reject the proposal, I don't want to make. I don't want 1 crore from you. Keep it with you only. I will not make any building for you. Okay. We are the builders. We don't want to make any building. And I say I have made the design for them. Any which ways, if I'm not accepting the project, if I'm not accepting their contract to build the 5 buildings, I still have to pay this cost. Even if I've paid 50%, if I reject also, still I have to pay 50%. That means this is already incurred. The payment is pending. Right? It is not at all a relevant cost. Not at all a relevant cost for decision making. See, I'll explain you once again. This is Exian and this is Rontex. We are Rontex. Okay. So what we did is, to Exian came to us and they told us we want 5 building. Give me the design. So I told, okay, sir, we'll make a design for you. And to make a design, obviously we have to spend, right? We have to spend. So I spent rupees 7 lakh on it, of which 3.5 I paid already. 3.5 lakh paid. Can I say 3.5 is spending? Is spending. Now please pay attention. Will you pay? Will you pay if you reject the order? The answer is yes. You still have to pay because the design is already set. You will pay, right? Okay. And will you pay if you accept the order? The answer is yes. So in both the cases you have to pay, right? In both the cases you have to pay. So is it relevant? The answer is no. If you're paying in both the scenarios, how can this be relevant then? You should have a decision. In this scenario, you're not paying. In this scenario, you're paying. That means this is relevant, right? In both the situation, you have to pay. That is the past cost. If it is the past cost already been done, that is not the relevant cost. And therefore, it should be completely ignored. There is not a relevant cost. So I've given the explanation. I hope you got this point. See, drawing and design. Since the drawing is already prepared, so even if we reject the contract, we still have to pay the balance. अगर हम reject भी कर देते हैं, बॉस 50% तो देना ही पड़ेगा, right? We still have to pay, so it is completely irrelevant. Any which ways we have to pay. If you accept, pay. Reject, still pay. If you are paying in both the scenarios, it is not relevant cost, right? The decision will not change on this cost, right? So this is zero. Okay, moving ahead. Third point. Third point. Cement and sands are already in stock and are in regular use. Are in regular use. That means you are using it regularly. If you have it in stock and if you're using it regularly, I'll tell them use it there only. I'll purchase it for myself. Okay, I've explained this. They have to be replaced at a cost of 8 lakhs. Can I say 8 lakh is the replacement cost I have to purchase? So the relevant cost is 8 lakhs. So I'll write over there. See, I'll write in the question itself. 20 was relevant, 0. Okay, registration. Now, please tell me, will you pay the registration if you reject the order? The answer is no. Will you pay the registration if you accept the answer? You have to pay registration if you're accepting the building, right? So this becomes relevant because the decision is if you accept, you pay. If you reject, you don't pay. That means one side you are paying, one side you are not paying. That means there is a relevant cost, right? Oh, material. Can I say cement? You are telling it is in stock, but it is a regularly used. So I'll say it is of no use to me. I'll purchase it for myself. You don't give me because you are using it regularly, right? Just purchase it from the outside at 8. That is 8 lakhs. Okay, moving ahead. Bricks. Bricks and tiles represent purchase made several months before for a different contract. That means I have purchased it long before. They could be sold readily for a net 5 lakhs after meeting all further expenses. Can I if I reject the order, these bricks and tiles will be of no use to me, right? If I accept it, I'll use these tiles in the project. If I reject it, these tiles and these bricks are of no use to me. What will I do? I'll sell in the market. What price you will get? 5 lakhs. Can I say that is relevant? That is relevant because if I accept it, I'll utilize over there. If I do not accept, I'll sell. Sell at what value? 5. Use that material, right? As I told you, it is excess. If it is in excess, use NR. So this is 5. Next, steel. Steel 10 lakh, and I guess no information is given about steel. That means it is clearly mentioned. If you don't have any information, you have to purchase it for this project. You do not have any excess, right? If you purchase, you have to purchase at full value itself. Next, others, including decoration material. So this 10 includes some interior decoration also. Let's see what is that. Others, material worth rupees 2 lakh relating to interior decoration are in stock for which no alternative use is expected in near future. That means 10 lakh mein, of the 2 lakh, of the 10 lakhs, 2 lakh is interior decoration and that is of no use to you. What will you do of that? You will sell in the market. At whatever value you are selling, that is. So they could be sold for 1 lakh. So can I say, out of this 10, there are two costs, 2 and 8. Of this 2, you will sell at 1. This is relevant. And of this 8, no information is given. Complete 8 is relevant. So relevant is 9 for me. 1 and I'll repeat again. Interior decoration. I'm just asking you, is there in stock? The answer is yes. You have it in stock. Let's say interior decoration like lamps and all, you have it in stock, right? Okay. I told you. If you accept the project, will you use that in the project? The answer is yes. If you reject the building, I don't want to make any building. What will you do of that lamps, of the paintings and all, whatever the decoration material you have? What will you do? You will sell in the market. And what price you will get? Only 1 lakh. You purchase at 2 lakh, but you are getting only 1 lakh. So 1 lakh is the cost. So I'm taking that 1 lakh. Of the remaining 8, no information is given. That means I have to take it for the new project 8 lakhs. That is relevant. Okay. For the labor. Skilled one. A point. Skilled workers will be transferred to this project from another. That means from one project I'll be shifting to another project. Okay. The project manager claimed that if men were returned to him, he could have earned the company an additional 2 lakh in terms of profit. Now I'm asking you, how much are you paying to skilled labor? 12. So just tell me one thing. If you accept to build 5 new buildings, 5 new buildings. Will you pay them 12 lakhs? The answer is yes. Okay. If you reject them, will you pay them still 12 lakhs to for another contract? The answer is yes. So is there anything extra you are paying them? The answer is no. 12 lakh anyhow you will pay, right? 12 lakh anyhow you will pay. Either you will be working on another project. Let's say this is building A and this is building B, right? Building A, building B. I have taken the new project for building B. So I've shifted them to building B, right? I'll be paying them 12 lakh. Okay. Even if I do not accept, I will still be paying them 12 lakh. So in both the situation, you are paying 12 lakh, not relevant. But if you work over here, 2 lakh extra profit you will earn. Can I say this is the opportunity cost? This is relevant. So over here, skilled labor of the 12, only 2 is relevant because 12 lakh anyhow you were paying. If you accept it, you will pay. If you reject it, you will pay it at another site, but you will still pay 12 lakh. So if you are paying in both the scenarios, this is not relevant cost. So you will pay only 2 lakh, which is the opportunity. Unskilled. They have given no information of unskilled. That means I'll say I'll hire for this project only, and this 8 becomes the relevant cost. I'll hire for this project only. Okay. Next, supervisor salary 5. Let's see what they have taken over supervisor. Over here is the supervisor. I'm laying out the point. Please pay attention. The supervisor undertakes various tasks in the sites, and his pay and continuity of employment will not be affected by the new contract. They are clearly telling, even if I do not accept the order, his continuity will not impact. Even if you reject the order, if you accept the order, he will still be the same. You will still pay him, even if you accept or reject. Can I say, if you accept, you're still paying. If you reject, you're still paying. That is not relevant cost. Again, the students get confused. He is devoting half time, take half. The answer is no. The rule is very clear. Will you pay him if you reject the order? Yes. Will you pay him if you accept the order? Yes. So are you paying anything extra? No. So this sentence is just to confuse you. Sir, he is devoting half time, take half time. The answer is no. Are you paying him extra? The answer is no. You are paying that much only. No. Are you paying anything extra? No. So that is again irrelevant cost. Zero. Zero again. Next. Overheads. General. Overheads, what they have told. The equipment that would be used on the contract was bought 1 year before for 30 lakhs. Okay. You have bought an equipment for 30 lakhs. And is expected to last for 5 years. 5 साल चलेगा 30 lakhs per year. It can be used for on another products, and the current replacement will be 32 lakhs, and in 1 year's time it will be 25 lakhs. Again, that point, the first question which it came. That means whatever you purchase, book value is not enough. What I'm trying to tell you is, what will you do right now? Can you sell? Yes, I can purchase at 32. I will purchase at 32. And एक साल बाद, after 1 year, what will be the value? The value will be 20. Can I say, if I purchase at 32, using it for one year, I will have to sell at 25 because the price will be 25. So what is relevant for me? How much did it reduce? 7. 7 becomes relevant for me because if I purchase it right now at 32, if I purchase right now at 32, after 1 year, the value will drop to 25. That means the value decreased by 7. That is relevant for me. So I'll take 7 lakh for the equipment, which is not given in scenario 7. Overheads. Again, the next point. The general overheads include both specific and absorbed overheads. If the contract is not undertaken, 4 lakhs of the same can be avoided. Now again, students make mistake over here. Please pay attention. The overheads was 12. The overheads was 12. If you reject, 4 lakh will be saved. 4 lakh will be saved. Can I say? 8 lakhs will still be incurred. So even if you accept, 8 lakh will be paid. Even if you reject, 8 lakh will be paid. Can I say this 8 lakh is completely irrelevant? It is not relevant. This 4 lakh, which can be avoided, is relevant, right? If I accept, I will pay 4. If I reject, I will not pay 4. Once you are paying, once you are not. That means in the situation, in one situation you are paying, in one situation you are not. That is relevant. But for this 8 lakh, in one scenario you are paying. If you reject, you will still pay. If you accept, you will still. In both the situations you are paying, that is not relevant. So for overheads, we'll say only 4 is relevant. And depreciation. Depreciation will never be you can say relevant. Why? See, let's say I have a concrete mixer. And if I accept the project to build 5 buildings, I use this mixer over there. And if I do not accept, it will be kept aside. Will it get depreciated in any situation? The answer is yes. If you use it over there, it will get depreciated. If you do not use anywhere, still it will be depreciated because of time, because it is on the years, right? On the years. If you're not using, still it will be depreciated. That means if you're using, it will depreciate. If you're not using, it will still depreciate. In both the situations, it is depreciated, right? And therefore, if in both the situations it is same, it is not. And apart from this, there is one more point here. There is one more point here over here. Rontex Limited has also, on another hand, one project which could not be executed if Extend Limited were to accept. The estimated profit on that project is 10 lakh. That means if I accept the project from this, I will not be able to accept another project on which I will lose out on 10. Is that opportunity cost? Answer is yes. 10 lakh becomes the opportunity, and opportunity costs are always relevant cost. This 10 should be added. Now, to brief out, I've given the entire summary. Land, only one land, 20. Drawing and design, it was already incurred in past. So even if you reject the order, you still have to pay the balance amount. So it is not at all relevant. Okay. Next one, registration. If you accept, you will pay registration. If you not, you will not. So in one scenario you are paying, it is relevant. Material, cement and sand. It was regularly used. So I will say keep it with you. I will purchase from the market at replacement. So this is replacement. Okay. Next, bricks. This was already in excess. So I ask you, what will you do? You will say, you will tell, you will sell in the market. At what value? At that. Okay. Next, steel. No information is given. So I assume it is purchased only for this one. Steel is still. Okay. Moving ahead. Others, two information is given. Interior and others. Interior, I asked you, what will you do of this material? You will say, sir, I don't have any use. I will sell in the market at 1 lakh. I'll say, okay, 1 lakh is the relevant. And for others, no information is given. I will say, I have purchased this for only for your project. So this is it. Okay. Next, labor, skilled. Even if you are paying 12 lakh over here, if not, you will pay 12 lakh on this project. That means you will pay 12 lakh in either ways. So that 12 is not relevant. But if you utilize there, 2 lakh will not be on that project. So that is opportunity. So I added 2 lakh to the skill. Next, unskilled. No information given, add complete. Supervisor, I have taken 0. I have not taken half of the time, right? Please make this thing short. Because in any ways, whatever payment is to be made, it will not be impacted. Even if I accept, I will continue to pay. Even if I reject, I will continue to pay. In both the situation, you are paying, and therefore it is irrelevant cost. Next, overheads. Equipment, as I told you, 32 was the current value, 25 was 1 year after value, 7 lakhs I will be using, 7 lakhs is the relevant cost. General overheads, 8 lakhs will still be paid. 4 lakh can be avoided, right? Out of the 12, 8 lakh will be paid in any situation. If you are paying in both the situation, it is not relevant. But it will be avoided, it becomes relevant cost. Next, depreciation, you will never take depreciation unless and until specified it is for this project, right? And there is one opportunity cost, because if I accept your order, I will not be able to accept that order. 10 lakhs will be lost, and therefore 10 lakhs is relevant. And if I make the total, it comes to 93 lakhs. Now please tell me, is each and every point clear? If you want any clarification on any point, please tell me. I have given the detailed explanation on each and every point. If at all you want any explanation, please tell me. Yes, everyone. Yes, your students, I'm waiting for your reply so that I can proceed further. So I think everyone got this point, and this question marked as done, right? So this was one very new question. It is not from your study material. It was not asked even in the previous examination, and this was very challenging. Okay, the second part of this question. We are not done yet, right? In the second part, Nazir, see, they have clearly mentioned in the first sentence. The total requirement of the land is 3 grounds only. So see, if there are 3 grounds, ground number one, ground number two, and ground number three. They have never told on one ground there will be one building. The buildings can be something like this: over here, over here, over here, over here, and over here. I can utilize this like this only, right? So they have clearly given we require only 3 grounds to build five. That means three grounds to make five buildings, right? So we do not require 5 grounds, we require three. It is clearly mentioned in the question. Never they have given that you require 1 ground for one. They clearly have given the total requirement of land only 3 grounds, right? Okay. Now the second point of this question, where I feel there is one mistake made by the institute, but I've given the answer, I've given the solution as per what institute requires. Okay. So what they have given, they've asked you what is relevant, and also they've asked you what is irrelevant. What is irrelevant? So obviously one question becomes, sir, whatever is the total, whatever is the total, say the total is 150. Of the 150, 93 is relevant, so 40, 57 becomes irrelevant. Is the complete answer? Yes, it is true. But the point is what institute is expected from you. Institute expected. So institute expected that what is completely ignored, it is completely irrelevant. In short, on which you have taken zero, only we want that. We want only that cost. If it is completely zero, I want only that cost. So just coming to the list in which I have taken zero. Can I say drawing and design? I have considered zero cost. Drawing. Next, zero. Supervisor, I have considered zero. Two, supervisor and drawing. Third, depreciation, I have considered zero. 3 zeros, right? So over here, drawing, supervisor, and depreciation. So if you can check the yellow marking is 7 drawings, supervisor 5, 7 plus 5 is 12, and depreciation is 6, 12 plus 6 is 18. 18 lakhs becomes the completely irrelevant cost. I use the word completely irrelevant. The institute has not given any suggested answer. The institute has just given one word: 18 lakhs is irrelevant. So the only solution which can be made from this is the completely irrelevant cost. So I've given the answer over here. Obviously, from my point of view, obviously this won't be clicked in the examination if the institute is not specifying, right? It won't be clicked in the examination, but they should give the marks even if there is alternative solution provided by you. If I'll be very clear, if opted by you, then you should give the marks. The institute should consider this because they have not given the clarification, right? Okay. As per the suggested answer given by the institute, they have taken the costs which are completely irrelevant. Completely is the word, right? So they have given 756 is 80 marks. Now tell me, the B point they have told, should you accept the order? The B point is, should you accept the order? Yes or no? The contract price was 1 crore and the relevant cost is only 93 lakhs. So will you be earning? Yes. How much will you be earning? 7 lakhs. Should you accept the order? The answer is a big yes. I will be earning 7 lakhs. I should accept the order. You should always write the B point, right? Don't forget to write the B point. You have to mention it here. I hope the point is clear and everyone is getting this. Yes, please let me know in the comment section. Is the point clear to everyone? Just be active so that I can proceed further in a great speed. Is that clear? Okay, fine. Now, there is only one question left of relevant costing, right? That is also easy. I'll just read it out so that we can wind up this session using the relevant costing, right? 21. Chapter limited. This is from your study map. Manufactures mixer grinders. The manufacture involves an assembly of various parts which are processed in the machine shop and purchase components. The on-off switch is presently being purchased from a vendor at 4.5. That means you are purchasing it from the outside market at 4.5. Annual requirement is 20,000 pieces. So basically, you are making a mixer grinder and you just want the switch. The switch at present you are purchasing from the outside market at 4.5 and the requirement is 20,000 units. The production manager has put up the proposal 2 months back. That means if I am the production manager, I asked the purchase manager or the manager 2 months back to make the switch in the machine shop. I told him why to purchase from outside. Just we'll make it now. So he had suggested that the company would make profit and save taxes on both on bought out switch. If we make the switch will be safe. So it is make or buy. Obviously, if I can make below 4.5, I'll make it, or else I'll buy it. Next, the costing department was asked to make an estimate of making an item, which showed that the cost of making is 4.7. They told us that we can make it, but the cost will be 4.73. Now you tell me, will you make it 4.73 or will you buy? Obviously, the answer will come to buy because we are getting at 4.5. Why should I make it 4.7? Right? So I rejected the proposal. Okay, fine, continue to buy. Moving ahead. The purchase department continues buying the item on the basis estimate given by them. The cost department gave an estimate and therefore we thought, okay, let it be, we'll purchase from the outside market. Next, recently the vendor has sent a letter requesting the purchase department to grant increase in the price of 10% minimum. That means recently what they are telling, instead of 4.5, he has sent us a notice that we are increasing the price of 10%. It will come to 4.9. Now again we click the purchase, the making cost was 4.73. So we again approach the costing department. Now can we make it? So again the costing department, what was the result? The costing department once again requested to estimate the cost of making the switch. The costing department re-estimated the cost using current prices and observed that the cost of making has gone up to 5.33. That means in the previous scenario, what was the making cost? 4.73. What was the buying cost? 4.5. So you suggested, okay, buy it. So once the buying cost increased by 10%, it raised to 4.9. So we told them now we can make it, but they told no, we cannot make it because now the prices are increased and the manufacturing cost will come to 5.3. Now I told him, okay, give me the bifurcation. How did you calculate that cost? So they gave me an answer. Direct material is 40,000, direct labor is 20,000, overheads is 30,000. Total cost at current price, previous scenario, okay, 90,000. Expected increase 4,500. Expected manufacturing cost and cost per piece, they have given 4.73 and 5.3. What are the two mistakes in this? First mistake, expected increase cannot be there. अंदाजा थोड़ी आगे लेंगे हम. You are expecting an increase. When it will increase, at that time you think of it. Now, why is taking right now? First point. And the second point is you are taking 30,000 overheads in which there is fixed and variable. Fixed is not relevant. Variable cost is relevant. So there are two mistakes made by him. First of all, the fixed cost should be removed and expected increase should not be taken. See, material and labor are variable. It is accepted. You should take it. But overhead you should not take full. You should take only the variable portion, right? The fixed cost is irrelevant, and you should not take the expected increase. अंदाजा मार्केट में इन्फ्लेट होगा, inflation will be in future, not present, right? I have to make it in present, not in future. So you cannot take the expected increase, right? Okay, moving ahead. 25% of the overheads are fixed. I can clearly mention of this 30,000, 25% is fixed. That means you should not take 7,500 in just right? Rather than taking 7,500 this and this 4,500, you should not take. So I've given the revised picture of the previous overhead 30,000. Fixed is 75 and variable is 7,500. This is relevant for me. 2,500 is not at all, 7,500 is not at all relevant for me, right? Moving ahead. Material 40,000, labor 20,000, variable overhead only 22,500. The fixed variable cost comes to 8,500 and the making cost is 4.5, 1.25 and 4.5 is the buying cost. Can I say we made a huge mistake by trusting the costing department? He was not at all using his brains because he was including the fixed cost, he was including the expected increase also. The making cost is only 4.115. The buying cost is 4.5. You should make this product. Why? Because the fixed cost is irrelevant and the expected cost is also irrelevant. You cannot use these costs for decision making concept. They are irrelevant costs, right? Okay. Using again the same scenario, current also 4.6 and 4.95. Again, in both the situations, making is better, not buying. In both the situation, you're buying, right? So once they came to us, we told them that we have made two mistakes. First of all, fixed cost should not be taken. Second, expected increase should not be taken. These are not relevant cost for you. So in both the situation, we should make the cost because the making cost is less. So I hope you got this point and every point is clear. Okay. Now, before winding up, please pay attention. Entire solutions I'll be sharing. Entire solutions, right? What you have to do during the exam point, you just have to go through this question and answer once. Also refer refer the previous marathon also, because in this marathon I have taken the current examination questions. In the previous marathon I have taken a lot of previous examination questions. The examination questions can be repeated as it is. So in the previous session, in the previous marathon also, I focused majorly on marginal, transfer price and value. So use those questions also. These will be very helpful for you. Use that PDF, also this PDF, together will cover up everything. Okay, एग्जाम सिनारियो, एग्जाम में आप एकदम अच्छे से प्रिपेयर होके जाओगे, you will not be half prepared. Next, coming to tomorrow's session. What I'll be covering: standard, very important. Standard using my methods. Now the students who have attended my sessions for the regular batch or for the fast track batch, or any students who have in the previous batches attended my marathons or my revisions, they know how I teach standard. Standard is not which is given in the study material. I have my own methods for standard which will give you 100% success in standard. I will be covering those again. Important questions I'll be taking standard, right? Another point, I will not only be taking standard, I will be taking the exam question also, plus I will be taking revising ABC in a very quick session, not complete detail, but yes, I will be revising ABC. I will be revising throughput also. I will be taking a bit of ABC plus JIT. I'll be taking target costing also. I will be taking one of the important point, which is quality. Actually, I wanted to cover quality control in today's session, but since the time is not permitting me, so I'll cover tomorrow's session. So tomorrow I'll start with quality management. Quality, you have two important questions asked in the examination. Very simple, but many of them ignore that question, stating that it is not important. So institute gave 14 marks question, 7 plus 7 in quality. So please pay attention on that also. I'll be covering all these in tomorrow's session, right? So that's it from my side for today. See you tomorrow at 11 a.m. only. Okay, tomorrow we'll start at 11 a.m. and this is all from my side. Thank you.